Okay, so good morning everyone. Right, so let us resume our discussion. So in the previous session, what we have completed yesterday, what and all chapters we have done. So one is we have completed mainly, the discussion was mainly yesterday morning session completely we have dedicated to tax invoice, debit and credit notes. So as a part of that chapter, we have understood what and all are the various documents which will be generated as a part of the entire GST system. So that we have understood. Then we understood about the time of supply. So what basically time of supply chapter talks about? When you become liable to pay the amount of the GST. So not just because we have done the transaction immediately we need not go and pay the amount of GST to the government. We need to determine that transaction forms part of which month or which tax period. So whenever we file the return for that respective tax period, you have to pay the amount of GST. So all that discussion we had in our previous session. So now we will try to understand the next most important chapter from the examination perspective, which is what? Input tax credit, ITC. We are going to understand. Very important discussion this chapter is going to be. So first of all, we have all seen in the introduction to the GST chapter, when the government brought the GST into India, it has a three essential characteristics. It thought of three essential characteristics for the GST, or indirectly four essential characteristics are there. Number one, the GST should be borne by final consumer. It should be a value addition tax, and it should be a destination based tax. It should be a destination based tax, and also it will be a dual levy. So in order to achieve all these four objectives, whatever these four characteristics are there, which is a final tax has to be borne by final consumer, it should be a value added tax, and it should be a destination based taxation, and there should be a dual levy. In order to achieve, if we have to achieve all these four objectives, if we have to achieve all these four characteristics, without the concept of the ITC, none of the characteristics would have been valid. So one of the most important concept to fulfill the entire objective of the GST system is input tax credit. If there is no concept of input tax credit, then GST's objective will be lost altogether. So let us try to understand what exactly is this input tax credit. So I have already told you in the beginning itself. So what exactly is the concept of input tax credit? If you are not a final consumer, right? So if you are a person, if you are not a final consumer, so that means you are procuring the goods with the intention of reselling or with the intention of making a further supply. Then whatever GST that you have paid at an earlier stage on your inwards, on your goods, on the services, whatever you have procured, on the capital goods, whatever you have procured, so you can take that as an input tax credit. So that is what I have told initially. So if you are not a final consumer, whatever GST you have paid at an earlier stage, that you can avail it as input tax credit. Now, what I'm trying to say here is I'm trying to make a slight modification to the statement whatever I have made. What is the statement initially I have made? If you are not a final consumer, I can avail the input tax credit of GST whatever I have paid on paid at the earlier stages. And now I'm going to do one slight modification to my statement. So what is the modification I will do here is, I told final consumer no, but instead of that I will say if I am not a registered person, sorry, or on the other hand if I say if I am a registered person, if I am a recipient and I am a registered recipient, so whatever goods I am procuring, whatever services I am procuring, or whatever capital goods I am procuring, that I can avail it as a input tax credit. So previously I told final consumer, now just I'm changing I'm replacing that final consumer with registered person. So if I'm a registered person, if I'm procuring the goods, if I'm procuring the services, if I'm procuring capital goods for the purpose of using them in the course of my business, I can take that as a input tax credit. So which brings us to straight away one more point. If the buyer is an unregistered person, if the recipient, whoever is buying the goods, whoever is receiving the services, or whoever is buying the capital goods, if they are not registered persons, they will not be able to avail input tax credit. So one of the essential condition, one of the important rule for availing input tax credit is the recipient should have been a registered person. If the recipient is not a registered person, there is no question of availing input tax credit. Okay, right. And it is not just that simple that I can't summarize in one single line saying that if you are a recipient, if you are buying goods, if you are buying services, if you are buying capital goods, you can take input tax credit on that. I can't summarize in one simple thing. There are so many provisions associated with that input tax credit. In order to avail the input tax credit, first there are some conditions. First you should become eligible. First you should become what? Eligible. You should become eligible to avail the input tax credit. Once you become eligible to avail the input tax credit, then you are required to follow some conditions. Only when the conditions are fulfilled, then only you will be able to avail the input tax credit. And once you have followed the conditions, in some cases you will not be able to avail the full input tax credit. You will be required to apportion it. What you will be required to do? Apportionment you are required to do. What do you mean by apportionment? Say for example, if I have 100 rupees of GST, I can't avail total 100 rupees of GST. I have to divide that GST. Say for example, I have to apportion 50-50. That ratio we will see later. So might be the act says you will be, even though you have 100 rupees of GST, we will allow you to claim only 70% of the GST. 30% of the GST we will not be able to allow you to claim it. So in some cases, we might be required to apportion, divide the amount of GST which we have and claim only proportionate amount. The other component I will not be able to use it. So that apportionment also will be there in some circumstances. And in some circumstances, there will be something called blocked credit. What do you mean by blocked credit? Sometimes government will come and say, even though you have purchased the goods, even though you are a registered person, even though you are using that goods in the course or furtherance of your business, but still we will not let you use your input tax credit only. Whatever ITC you have, we will not allow you to use that only. We will block the input tax credit altogether. So what are that circumstances where ITC will be blocked? Basically, they have given restriction with regard to certain goods or certain services, or sometimes a combination of both. Some goods, some services, the government told on that even though you procure them with the intention of using them in the course of your business, but still we will not allow you input tax credit. So that goods and services, we call them as a blocked credit. So what are that goods and services on which a credit is blocked? That also we need to understand. And also we are required to look into some special circumstances. We are required to look into some special circumstances where the government will either say it is a special circumstance, we will allow you to take the credit, or sometimes government will come and say this is some special circumstance, we require you to reverse your credit. So like that, there are a few special circumstances are there where the government might either come forward and ask you to take the input tax credit in that special circumstance, or the government might come and say in those special circumstances to either reverse your input tax credit. Anything government can say. So even that special circumstances also we are required to cover. So what and all we are required to cover? These many things we are required to cover regarding the input tax credit. Number one, who is eligible for availing the input tax credit? Number two, what are the conditions which are required to be fulfilled for availing input tax credit? Number three, apportionment. In some cases you are required to apportion, you can't take the full input tax credit. Number four, in some circumstances the credit will be blocked even though you fulfill all the conditions, even though you are eligible, you are not required to apportion, but still the government will come and say we will block the credit, we will not allow you to take the credit in some circumstances. That we call it as blocked credit. And then finally we are required to discuss a few special circumstances where the government will come and ask you to take the input tax credit, or they will ask you to give back the input tax credit. Clear? So all these things we are required to cover now. So now if you see the section references here, eligibility and condition, these two will be covered under section number 16. Section number 16 talks about who is eligible for availing input tax credit and what are the conditions which are required to be fulfilled for availing input tax credit. Whereas apportionment and blocked credit, it is discussed under section number 17. So section number 17 talks about in what circumstances you are required to apportion and how to apportion that input tax credit, and in what circumstances ITC will be blocked. So that is covered under section number 17. And special circumstances where the government will either come forward, will ask you to take the input tax credit or reverse the input tax credit, that will be covered under section number 18. So if we are able to do this, if we are able to cover this in 3 sections, that's all, our chapter discussion will be over. So section number 16 we have to cover, section number 17 we have to cover, section number 18 we have to cover. These 3 sections make up the entire chapter input tax credit. So without any delay further, let us try to hit the first section, section number 16 we will try to understand. So what does section number 16 talk about? 2 things. One is eligibility and other one is conditions which are required to be fulfilled to avail the input tax credit. So if we go to the content here, so if you see section number 16, first we will start with section number 16. It is talking about 2 things. One is eligibility and the other one is conditions for taking the input tax credit. Let us try to understand first eligibility part. Sir, who is eligible to take the input tax credit? who is eligible to take the input tax credit. That I have already clarified in the introduction itself, and now itself, before we come into this introduction. Who is eligible to avail input tax credit? Registered person. If you are a registered person, then you can avail input tax credit. Just because I am a registered person, whatever goods I am procuring, whatever services I am procuring, on all goods and services, I will not be able to avail the input tax credit. They say a condition here: every registered person is entitled to ITC on GST charged on inward supply. What is basically an inward supply? See here, three things you need to understand before we go into the discussion. Three things we need to understand. First, we need to understand what is the meaning of the term inputs. What is the meaning of the term inputs? We need to understand. What do you mean by inputs? Inputs means basically the goods which you are procuring for the purpose of for your business. Whatever goods you are procuring, that we call them as inputs. So inputs in the sense, say for example, if we are running this business, for the purpose of doing that business, we need some goods. What goods we need here? So say for example, this water bottle is a good. This what else we have here? Yeah, I'm not able to find any goods here. Everything I'm looking like capital. Everything is looking like capital good only. So whatever it is, for example, if you are a normal business person, you are into business of selling electronic devices. So goods will be your electronic devices. Stationery will be your electronic devices. Stationery will be your goods. So like that, whatever goods which you are procuring for the purpose of using them, with the intention of using them in the course or furtherance of business, you should have an intention. Say for example, if I'm buying some stationery, I'm having a CA office, I'm buying some stationery. Why I'm buying that stationery is because I have to give it to my daughter, which she will take and use it for her school. Now, will that be falling under a definition of inputs? Can I call them as inputs? No. So inputs means what? Those inputs which I have an intention for using it in my business. If I buy the stationery with the intention of using it in my office, then it will fall under inputs. So inputs means those goods which are used, or which are either used or which are having an intention to be used in the course or furtherance of the business. Next, then we need to understand one more term called input services. We need to understand one more term called what? Input services. Sir, what do you mean by input services? Input services basically refers to those services which are used, which are procured in the which with the intention of either for using in the course or furtherance of the business, or with the intention of using it in the course or furtherance of the business. So that we call them as input services, we call it. Say for example, if I talk about this particular class itself. So if I am for the purpose of running this class, I have taken a Wi-Fi connection. In order to run the class smoothly, I have taken an internet connection here. So that Wi-Fi connection I have taken. So that is an input service. I have availed that input service. I have availed that service with the intention of using it in the course, either for using in the course or furtherance of the business, or with the intention of using it in the course or furtherance of the business. So that will fall under input services. Or say for example, I am availing some housekeeping services. For this place of business, I'm availing some housekeeping services. So those are the services which I have procured for the intention of using it in the course or furtherance of the business. Or I'm availing some security services, I'm availing electricity services. So like that, whatever services you are availing with the intention of using it in the course or furtherance of the business, that we call it as input services. Next, we have something called, and one more thing we need to understand, which is capital goods. We need to understand something called what? Capital goods. What do you mean by capital goods? Basically assets, those assets which I am capitalizing in the books of accounts, which I'm not treating in the which I'm not treating it as revenue expenditure. Those assets which I'm capitalizing in the books of accounts, and these assets I want to use it for the purpose of my business. Okay, you say for example this laptop. So laptop is capital asset. I'm capitalizing it in the books of accounts, and I'm using this laptop for the purpose of using it in the course of my business. So you take this electrical fittings, you take this air conditioners. So these are all the examples of the our capital goods which are used or which are having an intention of getting used in the course or furtherance of the business. So three terms we have to be very familiar. One is inputs, other one is input services, and the third one is capital goods. Now we have one more term called input tax. We have one more thing called input tax. What is input tax? Input tax means a tax whatever you are paying on all these three, not just inputs. When I say input tax, I am referring to tax paid on all the three: tax paid on inputs, tax paid on input services, and tax paid on capital goods. All that tax collectively I call it as input tax. And input tax credit, and the other term is what? Input tax credit. So what do you mean by input tax credit? whatever input tax I have paid, that I'm availing it as a credit, that I call it as input tax credit. Input tax means a tax which I'm paying on my inputs, input services and capital goods put together. If I'm taking a credit of that input tax, that I call it as input tax credit. And one more thing also I will say, see this inputs, input services and capital goods, all the three collectively we call them as inwards. All the three collectively we call them as what? Inwards or inward supplies, we generally call it. So if I say inward supplies, I am referring to all the three: inputs, input services and capital goods. When I say inputs, I am referring only to goods. If I say input services, I am referring only to services. If I say capital goods, I am referring only to capital goods. But if I am referring inward supplies, I am referring to all the three put together. So why it is very important is the terminology. At some places they will say inwards, at some places they will say inputs, at some places they will say input services, at some places they will say capital goods. So we have to be very careful. So this differentiation is particularly important when we discuss the provisions of section number 80. We'll see some special circumstances. When we are seeing the special circumstances, there the differentiation between these terms is very, very important. What will fall under inputs, what will fall under input services, what will fall under capital goods, what will fall under inward supplies. Clear? Shall we proceed further now? Right. So we got familiar with all the basic terminology. Now we are good to go. So first I will talk about eligibility. So who is eligible for availing the input tax credit? So section number 16 says that every registered person. If you are a registered person, every registered person will be eligible to claim the input tax credit, is entitled to ITC on GST charged on their inward supplies. What do you mean by inward supplies here? What and all get covered here? Whatever GST that has been charged on inputs, input services and capital goods. So that you can take it as input tax credit. But I will not be able to claim input tax credit on all my goods, all my services and all my capital goods, subject to the provisions of section number 49. You need to fulfill the provisions of section number 49 and conditions and restrictions in the GST rules. What is 49? Let us keep it aside. So what basically they try to say here is, if you are a registered person, if you have procured some inputs, if you have procured some services, capital goods with the intention of using them in the course or furtherance of the business, you can take the input tax credit, but you can take the input tax credit only subject to fulfillment of some conditions. You are required to fulfill some conditions, or there will be sometimes some restrictions. Subject to that conditions or restrictions, you will be able to avail input tax credit. Sir, now the question comes, and one more thing. So that is one thing. First, you should be a registered person. Number two, you should be required to fulfill conditions. What are that conditions? We'll see it in a short while. And one more essential condition in order to be fulfilled to become eligible to claim the input tax credit: goods or services must be used for business purposes. Whatever goods you are procuring, whatever services you are procuring, that must be used for what? Business purposes. So ITC is available on goods or services which are used or intended to be used in the course or furtherance of the business. So if I am procuring the goods, I need not immediately use it, but intention must be clear. If I am buying stationery, say for example 1 year's stationery I have purchased, it doesn't mean I have to bring all the stationery and use it today only. No, but when I procured, I have an intention. I have an intention of using that stationery amounting to 1 year for my business. I can claim the input tax credit. So actual usage is not necessary. At the time when you are procuring, if you have an intention to use, that will be enough. At the time of procurement only, I don't have any intention. So I'm buying a stationery for my daughter's education. So you tell me, at the time of procurement, do I have any intention to use it in the course or furtherance of my business? No. Can I claim the input tax credit? No. So you should either use it, or if you you should have intention to use it in the course or furtherance of the business. So as I've told, intention to use is enough, right? Sir, initially I use for the purpose of initially when I am procuring, I had an intention to use it in the course or furtherance of my business. Say for example, I purchased a stationery. I want to use it for the purpose of my office only. But later I did not use it. I used it for personal purposes. Then what will happen? Say for example, I purchased some 50,000 worth of stationery. On that 5,000 worth of GST I have paid. I know at the time when I'm procuring, I thought I'm going to use it for the purpose of my business only. So I claimed full input tax rate, 5,000 rupees of ITC I have claimed. But later I used it for personal purposes. I had intention when I procured, but later I used it for other than business purposes. Then what will happen? Then I have to give back the input tax credit. Whatever ITC I have taken, that I need to give it back. So that anyhow we will see it in the section 17 subsection 5, there we will see. But at the time of availment, intention is enough. Later if you use it for other purposes, you have to give it back. Next. So if you use it for any non-business purposes, I have told, ITC will not be available. And whatever input tax credit that is eligible for you, that will be credited to electronic credit ledger. Here they say one more phrase here, electronic credit ledger they will say. So we'll try to understand little bit about electronic credit, three ledgers which will be there in the name of a registered person. We'll try to have a brief detailed discussion. We'll have it in the payment of taxes chapter. But now it is very important for us to know the three ledgers. See, once you are a business person, once you submitted an application for registration, once the government has granted you the registration certificate, immediately the government in your name, it will open three ledgers or three registers also you can say. So what are that three ledgers which will be opened in the name of the registered person? Number one is electronic liability register. Number two is electronic credit ledger. And then we have electronic cash ledger. The moment you are registered with the GST department, the GST department will open how many ledgers or registers in your name? Three ledgers or register in your name they will open. What are they? Electronic liability register, electronic credit ledger, and electronic cash ledger. You can say ledger or register, whatever you want, you can say. Now, what is this electronic liability register? Basically, whatever amounts you are required, whatever amounts you are liable to pay to the GST department. So all that amounts will be debited. Why it will be debited? Who is maintaining this ledger? Department is maintaining the ledger. If you are required to pay means that will be a receivable for department. So what they will do? They will debit it. So basically whatever liabilities you are required to pay, either on self-assessment basis or on the basis of some scrutiny, whatever it is. Either that liability is determined by you on the basis of your returns, or that liability is determined by some GST officer. So whatever amounts you are required to pay, whatever amount that you are liable to pay to the GST department, all that amounts will go and get debited to what? Electronic liability register. Say for example, for one particular month you filed your GSTR 1. You filed your GSTR 3B. So you yourself declared that in this month I have made some 10 lakhs worth of supply. My tax liability is 1 lakh rupees. On self-assessment basis, you are declaring that your output tax liability is 1 lakh rupees. The moment you file the return, that 1 lakh rupees will go and get debited to electronic liability register, because this amount you are required to pay to the government. Now we have two more ledgers called electronic credit ledger, electronic cash ledger. So now what is this electronic credit ledger is? Whatever ITC that you are eligible and you are claiming it, so that availed ITC will go and get credited to the input tax credit, will get credited to the electronic credit ledger. Say for example, you have an output tax liability. Total output tax liability, how much you have? 1 lakh. But as I have told, you will not discharge your entire output tax liability in cash. What you will do? Whatever input tax credit is there, that you will avail it or not. So generally that input tax credit also you will avail it by filing GSTR 3B. So in one particular month you have purchased various goods, you have purchased various services, you have purchased capital goods. On all that you have paid some 50,000 amount of GST. So that is the input tax credit which you are eligible for. You declared in your return, sir, I am eligible for 50,000 rupees of input tax credit. The moment you declare that, that input tax credit will go and get credited to electronic credit ledger. What will be done? Credited. Why credited? Government has to give it back to you, no? So that's why they will credit it. So you have an output tax liability that will get debited to electronic liability register. Whatever input tax credit is there, what will happen? That will go and get credited to electronic credit ledger. So say for example, my output tax liability is 1 lakh, my input tax credit is 50,000. So what I will do as a prudent businessman? Will I like to pay entire 1 lakh rupees in cash? Think as a businessman. So you should not have an impact on your working capital. To the extent possible, you should try to reduce your cash outflow. So what I will do, whatever output tax liability I have, first I will try to adjust it against my input tax credit. So if I adjust it, how much is left out? 50,000 is left out. So whenever I am doing the adjustment, so what I am doing, the balance in the electronic credit ledger, I am using it for discharging my liabilities. So whenever I use the balance, it will be debited. So we have credit balance, no? It will be debited. So here it will become 0. Now my liability also will be credited, right? Initially it was debited with 1 lakh. When I am adjusting it, so 50,000 will be credited. So I have still how much liability? 50,000 liability I have. So now how I have to make the payment? I have exhausted my ITC balance. I have exhausted my electronic credit ledger balance. What I should do? I should pay the cash. How I will pay the cash? Will I give the account of the government and I will send it to them? Will I make a UPI payment and all? No. So there is a mechanism. So what is that mechanism is? There will be something called electronic cash ledger. whatever cash you wanted to pay, first what you should do is you should come and deposit in your electronic cash ledger. It is once again like your wallet. So sometimes in the Paytm wallet and all, we fill our money, right? So in the same manner, in this electronic cash ledger also, you have to top up with the cash balance. So using your online payment facilities, or using, there are various modes of payments and all that we'll discuss in the payment of taxes chapter. So generally, whatever amount you are required to pay it in the cash, first what you should do, you should top it up. You should top up your electronic cash ledger. So what I will do is, so I need extra 50,000. So first what I should do, that 50,000 I will deposit in my electronic cash ledger. So whatever cash you are depositing, that will go and get credited to electronic cash ledger. It will go and get credited to what? Electronic cash ledger. Why? Because it is also your money only, no? So that means government department is having an obligation to give it back to you, no? So whatever money that you are depositing with the department, that will go and first credited to electronic cash ledger. Now why we have deposited that cash? Because we want to discharge our liability. How much liability we still have? 50,000 rupees we have. So once I have deposited that money in the electronic cash ledger, now once again adjustment will happen. So I am using now my balance in the electronic cash ledger to adjust my liability. So now I will debit it here once again. So 50,000 rupees I will debit it. From here the money I will transfer it to, I will credit my electronic liability ledger. So with this my entire liabilities will be discharged. Now I don't have any liability. So this process will happen every month or every tax period, depending on whether you are a quarterly return filer, depending on whether you are a monthly return filer. This is what the process is going to take place for a regular registered person. For a what? Regular registered person. For a composition dealer, this all will not work. Why this all will not work? He will not be able to take input tax credit. For a composition dealer, how the transaction will look like is, so first he will have electronic liability ledger. He will determine his turnover in a quarter. He will multiply that 1%, 5%, 6%, whatever it is, the discounted rate of GST, that will become his output tax liability. So electronic credit ledger will be there, but that balance will be zero. He will not be able to claim it. He will not be able to do anything. So but whatever amount is required to pay, that he will deposit in the electronic cash ledger. That amount will be adjusted for payment of the output tax liability. So for a composition dealer, the mechanism is very simple. There is no involvement of the electronic credit ledger. But for a regular person, this is what the process will happen in every tax period. If you are a monthly return filer, the same process will happen. If you are a quarterly return filer, every quarter this activities are going to take place. Understood? So these are the three ledgers. So tell me, once you are a registered person, how many ledgers or how many registers will be opened in your name? 3 ledgers or 3 registers will be opened in your name. What are they? Electronic cash ledger, electronic liability ledger, electronic credit ledger, electronic cash ledger. Whatever ITC that you are eligible to take, you have procured some inputs, you have procured some input services, you have procured some capital goods, and you have an intention to use it in the course or furtherance of the business. On that you can avail input tax credit. Where that input tax credit will go and sit? It will go and get credited to electronic credit ledger. From there I can use it for discharging my output tax liabilities. So that is what even they try to say here. Eligible ITC will be credited to electronic credit ledger. So we have seen eligibility. Till now we have seen eligibility. They told only 2 important conditions. Number 1, you must be a registered person. Whatever goods or services you are procuring, that should be used for business purposes. 2 conditions only they have told. 2 eligibility criteria they have told. Now, so even though you are a registered person, even though you have procured some goods or services or capital goods with the intention of using in the business, but still if you want to avail input tax credit, you are required to fulfill various conditions. Let us try to understand what and all are that conditions which are required to be fulfilled. Even though I am a registered person, even though I am procuring the inputs, even though I am using it in the course or furtherance of the business, or I have an intention to use them in the course or furtherance of the business, even though all the eligibility criteria I am meeting, still if you want to avail input tax credit, you are required to fulfill some conditions. So what are that conditions? That is addressed under 16 subsection 2. And under 16 subsection 2 we have various clauses. Each clause will be talking about each condition. So let us try to understand each condition with a example, and in a detailed manner we'll try to do it. So first, 16 subsection 2 clause A. 16 subsection 2 clause A. So what does 16 subsection 2 clause A say? First condition. The first condition which is required to be fulfilled for availing input tax credit is possession of a tax paying document. You are a recipient, you are a registered person, you have some inward supplies on which you have paid GST, and that you are having an intention to use it in the course or furtherance of the business. But still if you want to avail the input tax credit, you must have some possession of a tax paying document. In your possession, some proof should be there, some documentary proof should be there on which you can claim the input tax credit. Sir, what could be that documentary proof? What could be the documentary proof? Tax invoice. Yes, very good. So I am a registered person. I procured some goods or services or capital goods for my business purposes. I paid some 1 lakh amount of GST on my inwards. I want to avail input tax credit. So what I should do? First, I should have a 16 subsection 2 clause says I should possess some tax paying document. What could be the tax paying document? Number one, it could be a tax invoice. If you are buying the goods from another registered person, if he's a normal registered person, he will give you tax invoice. On the basis of the tax invoice, you can claim the input tax credit. Sir, what else? What else could be the document on the basis of which I can take input tax credit? Debit note. On the basis of debit note also, you can claim input tax credit. When debit note will be given? When the supplier wants to collect something extra from you, like for example, he's collecting interest from you. When he collects the interest from you, he will give a debit note. So that means you are paying extra. So on the basis of debit note also, you can claim the input tax credit. Even debit note could also be a valid tax paying document. Can I claim the input tax credit on the basis of credit note? Credit on the basis of credit note, you can't claim input tax credit. You have to reverse the input tax credit. So you have to be careful here. So on the basis of tax invoice, I can claim on the basis of debit note. They will ask you in the MCQs. They will say on which of the following basis the ITC can be availed. In the option, if you find credit note, no, on the basis of credit note, you can't claim the input tax credit. Credit note is a mechanism for reversal, not for availing. What else? What else? What are other documents? Just go back to the previous chapter, tax invoice. Various documents we have created. So tell me, out of all that documents, what and all I can use for the purpose of availing input tax credit? Bill of supply you can't claim. No. Why? Because bill of supply is given whenever tax is not collected. Composition dealer will give bill of supply, or when he is making exempt supplies, he will give bill of supply. In the bill of supply, tax amount itself will not be there. How can you avail input tax credit? No. On the basis of revised tax invoice, can you claim input tax credit? Revised tax invoice. You initially purchased a goods from unregistered person. Later he got a registration with a retrospective effect and he gave a revised tax invoice. On the basis of revised tax invoice, can I avail input tax credit? Yes, you can avail input tax credit. Next, if it is imports and all, in case of import, some other documents will be there. Bill of lading, on all the documents will be there. So on the basis of that also, you can claim the input tax credit in case of imports. Now, one more thing. One more example I have told. One more thing I have already linked. Reverse charge mechanism. Payment voucher, not payment voucher. One more document will give self invoice. So if you are a recipient liable to pay the GST under reverse charge mechanism and the supplier is unregistered person, he will not give any invoice. In that circumstance, what you should do? You yourself should generate a self invoicing as per which section? As per 31 subsection 3 clause G. Clause G. As per clause G, you are required to issue self invoicing. So on the basis of that self invoicing, even that self invoice is also a valid document for availing the input tax credit. Able to understand? So like this, depending on the circumstances, you need to have some tax paying document on the basis of which you can avail the input tax credit. The list of that documents have been given here. Any of this document you should have. There is no requirement to have all the documents. Even if one of the documents you have in possession, on that basis you can avail the input tax credit. So what should be that documents? That could be a tax invoice or it could be a revised tax invoice. That could be a invoice issued by the recipient for reverse charge mechanism, nothing but self invoicing, and debit note issued by the supplier, bill of entry or other similar documents prescribed under Customs Act, and even document issued by input service distributor. What is this ISD? You ignore it. So even the document given by ISD also can be a valid document for availing input tax credit. And just having these documents alone will not be enough. In that document, some compulsory information should be there. Some important details should be there. Some mandatory details should be there. You have a tax invoice, but on that some mandatory details are missing. Can you avail input tax credit? No. You have some revised tax invoice, but on that some mandatory details are missing. Can you avail input tax credit? No. So having the documents is also important, but in that document there need to be some mandatory details. Sir, what mandatory details must be there on the documents if I have to avail the input tax credit? So they say that document should clearly contain the amount of tax charged. Along with that, description of goods or services. What is the total value of supply, GSTN of the supplier, GSTN of the recipient, place of supply for interstate supplies. This information must be there. See, as we have read in the previous chapter in the tax invoice, there are various important information which must be included in the tax invoice. So much of information we have seen. All that information, in that information, even if something is missing also fine. But this information must be there. See, if you remember in the tax invoice chapter, we have seen some 12, 13 items which must be included in the tax invoice. But in order to avail input tax credit, you need to see only whether these items are there or not. If these items are there, you can claim the input tax credit. So what items must be there in the tax paying document? Number one, amount of, this you have to remember, amount of tax charged, description of goods or services, what is total value of supply, GSTN of the supplier and also recipient, and what is the place of supply. So if this information is there, none of the details should have missed. So if this information is there on the tax paying document, you can happily avail the input tax credit. No one is going to stop you. So this is what 16 subsection 2 clause A says. Who is eligible for availing input? What is the first condition for availing input tax credit? Number one, tell me. The recipient must be in possession of a tax paying document, and on that tax paying document some mandatory details are required to be there. So indirectly two conditions are there, having a tax paying document and also having some mandatory details. So when these two conditions are satisfied, number one checklist. So it is like a checklist. All the boxes should be checked. Then only we can avail input tax credit. So okay, one box is checked. I have a tax paying document with mandatory details on it. Good. Now, what is the next condition? The next condition, they say that details of invoices or debit notes uploaded by the supplier in his GSTR1 or using IFF and details communicated in the form GSTR2B. There is another condition as per 16 subsection 2 clause AA. So now in order to understand this point, we need to have a little background about the returns. What returns are required to be filed, how the returns will be filed, that we'll try to understand. Okay. So say for example, there is a person, there is some registered person. There is a registered person. Now for every registered person, we need to understand about 4 returns or statements, whatever you call it. 4 important documents are there, which have to be understood. So registered person is required to file something called GSTR1. And there will be something called GSTR2A. Then we have something called GSTR2B. Then we have something called GSTR3B. Listen carefully, very important discussion. So for every registered person, other than composition dealer, I'm not at all talking about composition dealer. Why? Because composition dealer will not be able to avail the input tax credit only. So ignore the discussion of the composition dealer. For a normal registered person, there will be 3 returns which are required to be filed. There are 2 returns basically which are required to be filed, but indirectly 4 things are there. One is GSTR1. Other one is GSTR3, other one is GSTR3B, and in between we have 2 auto-populated statements. GSTR2A and 2B, we call them as auto-populated statements. You are not required to do anything. You will not be able to file. You will not be able to change the details. Just it is a view-only statement. You can view, that's all. GSTR2A and 2B are just a view-only statements. You can't edit it. You can't modify it. Just it is a auto-populated statement which will show you some important information. So what is GSTR1? Actually, our responsibility as a registered person is to file only 2 returns, GSTR1 and GSTR3B. But in order to fill that GSTR3B, most important information will be there in GSTR2A and 2B, which is an auto-populated statement. So what is the sequence? Say for example, there is a registered person. For the month of April, he has done the business. So he has made sales. So basically, whatever outward supplies he has made, whatever details of the outward supplies he has made. Sir, I have made so and so amount of supplies. My sales is this much. My outward supplies are this much in this particular month. So that details of outward supplies will be uploaded in which return? GSTR1. So that's why we call GSTR1 as a statement of outward supplies. It is a statement of outward supplies. So only sales related information we will give. So say for example, in this particular month, he made some 10 lakh worth of sale. So he will declare, I have made some outward supplies of 10 lakh rupees on which applicable rate of GST is 1,80,000 rupees. Just he will declare his outward supplies and he will submit it. In the GSTR1, no payment, nothing. You are not required to do any payment and all. Just you will file the information. So I have made so and so outward supplies. Now there is GSTR3B. So in the GSTR3B, what you should do is, GSTR3B is actually a kind of return for tax payment. So here what will happen is, in the GSTR3B you will say, okay, these much sales are there. What is your output tax liability? What is your input tax credit? How much amount balance you have to pay in cash? That net effect, that payment and adjustments will be taking place in the GSTR3B. This in a broader overview basis. GSTR1 outward supplies, GSTR3B payment of the taxes. What is your output tax liability? What is your input tax credit? How much you are required to pay it in the cash? The tax payment will happen through the GSTR3B. But in between, so many things will be there. Okay, so say for example, there is a person, Mr. A. There is a person, Mr. A. So now this person, he is required to file GSTR1. For the month of April, he is required to file GSTR1. See, in the month of April, he made sales to different vendors. He made sales to different vendors. Say for example, so for so many registered persons also he made the sale. So in the month of April, he made a sale to Mr. B, who is a registered person. So in his GSTRB, he will declare, sir, I made a sale to Mr. B, who is a registered person. The value of supply, the value which I have sold him is 1 lakh rupees. And the GST, amount of GST is 18,000 rupees. He will declare. B2B supplies, invoice wise, he will declare for which customer, for which invoice, how much amount of supply has been made. Invoice wise details will be given for B2B supplies, where in his GSTR1. Similarly, he made supply to Mr. C, who is also a registered person. He made 2 lakhs worth of sale, GST amounting to 36,000. He made another supply to Mr. D, who is also a registered person. To that person, once again, 1 lakh worth of sale has been made. Applicable amount of GST is 18,000 rupees. So B2B supplies, invoice wise details he will give. B2C supplies, he will not give customer wise, invoice wise details, he will give the consolidated figure. So but whatever it is, B2B supplies will be uploaded invoice wise, where in GSTR1. So he will declare all his outward supplies and submit the GSTR1. Now what will happen is, the moment Mr. A has filed the GSTR1, he declared in his GSTR1 that he made a supply to Mr. B on for a value of 1 lakh rupees, on which applicable rate of GST is 18,000. The moment this person, Mr. A, files the GSTR1, say for example, this return he is filing on 11th. 11th is a due date. 11th of the next month is a due date. 11th of May is a due date. So immediately what will happen is, even if you look from the Mr. B's perspective also, he will also have 4 statements. GSTR1 will be there, GSTR2A will be there, GSTR2B will be there, and also GSTR3B will be there. The moment the person, Mr. A, files his GSTR1, it will get populated here. It will get auto-populated here. In whose GSTR2A? In Mr. B's GSTR2A, it will get auto-populated. Hey, you made a supply. You purchased a supply from Mr. A, where you have made 1 lakh worth of transaction, on which applicable rate of GST is 18,000. Where it will get reflected? In Mr. B's 2A, it will get reflected. Similarly, Mr. A made a supply to Mr. C, no? So on 11th, it will get reflected. On 11th of May, it will get reflected. Similarly, Mr. C also will have an account. Mr. C also is a registered person. He will also have GSTR1. He will also have GSTR2A. He will also have GSTR2B. And he will also have a 3B. So it will also get reflected on 11th of May. Boss, so and so person has declared. So you have purchased a amount of Mr. A amounting to 2 lakh rupees. Applicable rate of GST is 36,000 rupees. And similarly, it will go and get reflected in the account of Mr. D also. So like this, whatever outward supplies which are getting declared in the GSTR1, that to B2B supplies, the moment that GSTR1 is filed, that will be auto-populated in the GSTR2A of recipients on a real-time basis. The moment GSTR1 is filed, automatically that will get reflected in the GSTR2A of registered persons, registered recipients. It will get reflected. Now let us come to this person, Mr. B. See, he will not make purchase only from one vendor. He will make purchases from different vendors. So different registered persons he will make purchases. So he made a purchase from Mr. A. He filed the GSTR1 on 11th of May, and 1 lakh worth of purchase he has made, that has been reflected in his GSTR2A. Now he made a purchase from another customer. Say for example, he made a purchase from Mr. Q, another supplier is there, from whom also he has purchased, who is also a registered person. He will also have filed GSTR1. So he also filed a GSTR1 on 11th of May. So what he will do is, he will declare, the moment he has filed the GSTR1, he will also declare. Say for example, from this person, he made 5 lakhs worth of purchase, rate of GST is 90,000. Similarly, he has purchased the goods from another vendor. Say for example, Mr. P. From Mr. P, he made some 10 lakhs worth of purchase. He also filed his return on 11th. The moment Mr. P has filed his GSTR1, it will be automatically reflected in his GSTR2A. So it is an auto-populated statement. The moment your supplier files a GSTR1, it will be reflected in your GSTR2A. Now, say for example, he purchased from another customer, Mr. S. In the month of April only he purchased. But what happened is, that fellow did not file the return on time. Mr. S, actually the due date for GSTR1 is 11th. But this person, Mr. B, has purchased it from Mr. S. He should also have filed his GSTR when 11th. But he did not file it on 11th. Say for example, he filed it after due date. On 14th of May he filed it. Okay. So But there also, the moment he filed, even after due date also, the moment the supplier files the GSTR1, it will be reflected. So Mr. Yes has purchased some another 5 lakh rupees from Mr. Yes. The rate of GST is 90,000 rupees. So whether the supplier files the GSTR1 within due date or the supplier files the GSTR1 after due date, the moment it is uploaded on real time basis, the information will be reflected in GSTR2A. Real time basis. If the supplier files it on 20th, it will get reflected on 20th. So GSTR2A is a real time auto populated statement. But what will happen is, we have one more thing, GSTR2B we have. What the GSTR2B will do is, on 13th of midnight, when on 13th of midnight, it will take a screenshot in the sense it will capture the information. So on 13th of midnight, it will capture the information till 13th midnight, how much of information is reflected in his GSTR2A. What is the total amount of GST which is reflected till 13th of midnight. There is slight change I will make to my explanation, but stay with me. First, I am simplifying the things. There is small change I will do in the written chapter, but for the time being now, understand the concept. For understanding the concept, stick to whatever I am saying. So on 13th of midnight, the system will capture till that point of time how much amount of GST has been reflected in GSTR2A. So you tell me, when the system has captured on 13th of midnight, how much amount of GST has been reflected? Inputs. So 18,000, 90,000 and 1,80,000. How much it will come to? 2,70,000, 2,88,000. So GSTR2B will capture. It is a static statement. GSTR2A is a real-time statement, dynamic statement. It will keep on updating. But GSTR2B is a static. It will capture information only on 13th of midnight. Till 13th of midnight, whatever information, whatever data which has been reflected in the GSTR2A, that they will capture. So it has captured the information, and in the GSTR2B on 13th of midnight, the information will be updated as, you have eligible input tax credit of how much? 2,88,000 only. Now how much ITC you have to claim? Sir, I have made purchase from Mr. Yes also. I have invoice also. This person, Mr. B, who is our supplier here in the given case, who is the recipient here. So he is having invoice also. He is having invoice for Mr. A, Mr. Q, Mr. P, Mr. S. All total invoices he have. For how much amount? If I add this thing also, it will come to 3,78,000. See, he is having a total GST invoices for 3,78,000 for the month of April. In the April month, he made a total purchases on which ITC he has paid is 3,78,000. But while filing the GSTR3B, so basically in GSTR3B, what will happen is, you should declare what is your output tax liability. Now say for example, Mr. B also will file his GSTR1 on 11th of May. He declared he made some 20 lakhs worth of sale. Output tax liability is 3,60,000. So now that will come to the GSTR3B. My output tax liability is 3,60,000 rupees. Now how much ITC he should avail? He is having total invoices on which he has paid a GST amounting to 3,78,000. But reflected in GSTR2B is how much? 2,88,000. How much I have to claim? The system says, the GST department says, you should claim only 2,88,000. Whatever amount that is reflected in GSTR2B, that amount only you can claim it as input tax credit. The balance amount you have to pay it in the cash. Now this person will cry, no? Why he will cry? Sir, I have one more purchase invoice also. If you want, you see, it is getting reflected in your GSTR2A also. I purchased it, sir. I am a genuine person. I purchased, I am a genuine person. I have an invoice. Even it is getting reflected in your GSTR2A also. But your GSTR2B has captured the information of 2,88,000 rupees only. So you are making me to take the input tax credit of 2,88,000. Sir, what about this 90,000, sir? What about this 90,000? So what the system will do is, this 90,000 will be captured in the next month. In the next month also, same process will happen. For the May month also, you will file outward returns, and whatever purchases you have made from your suppliers, that will get reflected in the GSTR2A. This 90,000 rupees will get reflected in, will get captured in next month's GSTR2B. You need not worry if you have purchased this month, but if you are, it is not getting reflected in your, it is reflected in your GSTR2A but not in 2B. Why it will get reflected in 2A but not in 2B? Because the suppliers might have filed a delayed return. They might have filed beyond due date. So in that case, it will get reflected in your GSTR2B, but it will not get reflected in 2A. It will not get reflected in 2B. So you need not worry. If the supplier has done late filing, you will get the credit. But when you will get the credit? In the next month, you will get the credit. So actually GSTR3B, as I have told, it is a statement. It is a static statement. It will capture the information from, see now, from 14th till next month 13th, this information will be captured in the next month. Able to understand? So it is set in such a way that GSTR 2B will capture the data only once in a month, from 14th of the previous month till 13th of the current month. Whatever transactions are reflected, all that will be captured in the GSTR 2B, and that amount only you can claim it as input tax credit. Able to understand? So here, as a part of this explanation of the returns, I have made one more important point here. If you want to avail the input tax credit, the second important condition, only that input tax credit which has been reflected in your GSTR 2B, only that GST you can avail it as input tax credit. Sir, I have an invoice, sir. I'm a genuine person. I have a tax invoice. I paid the amount of GST also, but that is not getting reflected in GSTR 2B. You can't claim input tax credit. So whatever amount that is reflected in the GSTR 2B, that only you can claim. You have to wait. Even if you have invoice, but you can't claim. You have to wait till that invoice information is also captured in your GSTR 2B. Sir, I purchased a return, sir. I purchased a goods, sir, but supplier is not filing GSTR 1 only. I'm a genuine person. If he files after due date, fine. At least next month I will get the credit. My supplier is not filing GSTR 1 only. What I should do? Nothing you can do. You can't avail the input tax credit. It is essential condition. Your supplier has to file GSTR 1. Within due date, if he files it, you will get the credit this month. After due date, if he files it, you will get the credit next month. If he's not filing it, you will not get any credit at all. So there is no option for you. So that's why, see, that's here indirectly what the GST department meant is you have to find those suppliers who are genuine. Don't do business with those people who are not genuine suppliers. Sir, how will I get to know whether he is a genuine or not a genuine? You have to face the heat and all. You have to at least go through that bad phase once, then you will get to know whether that person is a genuine person or not. But there is one mechanism which GST has introduced recently. With the help of GSTIN number, you can search what is his tax filing status, whether he is filing on date, within due dates, beyond due dates, is he complying returns in a proper manner or not. You can verify with the GSTIN numbers of the suppliers. So that you can do in case if you want to purchase a goods from registered person, just you will get their GSTIN number. You can just go and search in the GSTIN portal. You will get to know what is their filing status. Are they filing the returns still on time, or are they making any delay and all. You can check it, but many of the business persons don't know it. How to check and all also they don't know it, but you can check it. The filing status you can check. Okay, right. Fine. So this is what the second condition. Everybody able to understand the second condition? So this is reflected in 16 subsection 2 clause AA. When I say A, B, A, you find these things. These are all nothing but what? Amendments. These are recently added. These were not there from the beginning. These were recently added. So we have completed two conditions. What are the two conditions we have completed? 16 subsection 2 clause A, which says that you must be in a possession of some tax paying document and it should contain some mandatory details. Then we have seen 16 subsection 2 clause AA, which says that if you want to avail input tax credit, that must be reflected in your GSTR 2B. If something is not reflected in GSTR 2B, even though it is there in 2A, but it should be reflected in 2B, that amount only you can take it as input tax credit. Comfortable everyone till here? Right. So GSTR 1A and all also they say ignore all that, just whatever explanation I have given, stick it to that only. Next. And one more thing here, full ITC can be availed for IGST paid on imports. In case of import, see in some cases even though the amount is not reflected in the GSTR 2B also, some inputs you can take. Even though some amount is not getting reflected in the 2B, some inputs you can claim. What inputs you can claim is whatever GST so whatever full ITC can be availed for IGST on imports. So on imports, whatever IGST you have, that you can claim it. Generally, why? Because here mismatch will not be there. Here in case of imports, mismatch and all will not be there. Imports data will be automatically updated beyond due date, after due date, all that you need not check. Why? Because when you are importing the goods from another person from abroad. So there that person will not file GSTR 1 and all. So when it comes to imports and all, different mechanism through customs department it will get routed. So you need not check that for GSTR 2B. You can claim it directly. So import related IGST you can claim. And documents issued under reverse charge mechanism. See, if you are only required to pay the GST under reverse charge mechanism, that will not get reflected in your GSTR 2B, 2A and all. So in case if you are paying the GST on under reverse charge mechanism, you can directly claim it. How you can claim it? If I have to tell you how you can claim it, this might go a little bit out of the head, but still I will try to explain. So what actually happens in the GSTR 3B is, GSTR 3B, if you are required to pay any GST on reverse charge mechanism, that also you will declare in the GSTR 3B only. The GSTR 3, it will not be shown in GSTR 2A, it will not be shown in GSTR 2B. In the GSTR 3B only you should say, I have so and so much. For example, I have some 10,000 rupees of GTA on which I am required to pay 1800 rupees of GST, that you will declare in your where GSTR 3B. Through GSTR 3B you will make the payment. As we know, this 1800 I have to pay it purely in cash. Whatever GST you are required to pay under reverse charge mechanism. For that you can't use the ITC balance. That you have to pay completely in cash. So in the GSTR 3B you will declare that I am required to pay on this 10,000 rupees 1800 rupees of GST on reverse charge mechanism. You will pay through the GSTR 3B and automatically the moment you pay it, that will go and get credited to your electronic credit ledger also. Able to understand? So it will not follow the routine route of 2A, 2B, all that system will not follow. In case if you are required to pay any GST on reverse charge mechanism, that information you will declare in your GSTR 3B. You will make the payment through that GSTR 3B and that amount will be automatically credited to your electronic credit ledger. You have to pay it. After paying only it will get credited to your electronic credit ledger. So this reverse charge mechanism related GST also will not route through that 2A, 2B. For that also you need not check that condition. And even credit received from ISD, as I already told you, ISD is something which is at the CA final level. You please ignore this for the time being now. So for these three things you need not check the 2B condition. What are the three things for which you should not check the 2B condition? IGST paid on imports, GST which is paid on reverse charge mechanism, and credits which are received from input service distributor. For these three things you need not check 16 subsection 2 clause AA, that condition you need not check. That means reflected in the GST or 2B or not, that you need not check it. Understood? Right. So two conditions we have covered. Next one. So let us start discussing the next condition, 16 subsection 2 clause B. Third condition they are trying to say. So what is that? 16 subsection 2 clause B says that receipt of the goods and or services. See, you have a tax invoice, fine. That tax invoice is having all the important details also, fine. You have even that was even reflected in your GSTR 2B also, that is also okay. But still, if you have not yet received the goods or services, if you have not yet received the goods or services, you have to wait till the time you receive that goods and services, and then only you can avail the input, then only you can claim the input tax credit. So one of the most important consideration, a registered person can claim ITC only if they have received the goods or services. So say for example, what is happening is, there is a business person, okay, there is a registered person who is a recipient. He purchased some goods. So when the goods are purchased is, say for example, on 27th of April 2025 order was placed. So now what the customer has done is, what the supplier has done is, he dispatched the goods on 29th of April 2025. He gave the invoice also on 29th of April only. He gave the invoice also on 29th of April. But these goods are received on 5th of May. These goods are received by the recipient on 5th of May. So he gave an invoice. When he gave the invoice, 29th of April. So for the month of April, he is filing the return. For the month of April, when he is filing the return. So this person is having tax invoice, 29th of April 2025 dated tax invoice is there. And that is also reflected in his GSTR 2B. That is also reflected in GSTR 2B. So this person has filed this invoice in his GSTR 1. The supplier has filed this invoice in the GSTR 1 within due date, on or before 11th only he filed it, and that information was also reflected in his GSTR 2B. So when he is filing the return for the month of April, this invoice also he have, on the invoice all the mandatory details are also there, and this amount is also clearly reflected in his GSTR 2B. Can he avail the input tax credit for the month of April? When he is filing the return for the month of April, can he avail the ITC? Say for example, 1 lakh worth of goods he has purchased, on that 18,000 rupees of GST has been charged. Can he avail the input tax credit while filing the GSTR for the April month? He can't do it. He can't do it. Why he can't do it? Why? Because in the month of April he did not receive the goods. When he received the goods? When he received the goods? In the month of May he has received the goods. April month he is having an invoice. In April month it is getting reflected in your GSTR 2B also. But did you receive the goods in the month of April? In the month of April did you receive the goods? No. When did you receive the goods? In the month of May you have received the goods. So you become eligible to take the input tax rate only in the month of May. Clear everyone? But this will not get practically followed. Practically it will not be followed. So why? Because it is very difficult to exactly, that's what I am about to say. So they will not verify. This will not be practically followed. And even this they will not test you in the examination also. But if you literally go by the rule, this is what should happen. Able to understand? So you should have received the goods. There should be invoice and that invoice should contain details reflected in GSTR 2B, and it should have also been received. You should have received the goods or services. Then only you can avail the input tax credit. If you have not yet received the goods and services, you will not be able to avail the input tax credit. That is a rule there, but anyhow, not getting practically implemented or followed. Understood? Next. Now, see, there came one confusion. See, there will be some transactions called bill to ship to transaction. There will be some transactions called bill to ship to transaction. So what is this bill to ship to transaction? Say for example, there is one manufacturer. So say here there is a wholesaler, okay? So there is a wholesaler. So we have Mr. W, who is a wholesaler. He is located in Delhi. He is located in Delhi. So he is into dealing. He is into doing wholesale business of what we take. He is into wholesale business of selling garments. He sells the garments like shirts, pants. He will sell. So he generally buys the goods from one manufacturer. There is one manufacturer, Mr. M. So this manufacturer is located in Punjab. This manufacturer, where he is located? Punjab. So now he continuously gets the order from the customers and all. So what he has done is, one fine day he placed an order with Mr. M. So what he told is, sir, I want some 1,000 shirts. I want some 1,000 shirts. Who placed an order? Wholesaler has placed an order with the manufacturer. So he told, sir, you please, the manufacturer told, okay, sir, we will make this 1,000 shirts ready and we will dispatch it to you. We will dispatch it to you. Now, before the goods can be delivered, this wholesaler got an order from a retailer. So there is one retailer, Mr. R. There is one retailer is there who used to regularly purchase that goods from this wholesaler. So one day he placed an order with whom? Mr. W. He is also asking for 1,000 shirts. Sir, I need 1,000 shirts, so I will sell it in my retail shop. So this retailer is also located in Punjab only. Where the retailer is located? Punjab. See, I have already placed an order with my manufacturer. As a wholesaler, I have already placed my order with my manufacturer. But in the meantime, I received an order from my customer. So what I told is, these goods are not yet delivered to me. So I informed my manufacturer in the Punjab, sir, you do one thing. I placed an order. No, you please don't deliver it to my address. Why? Because I already got an order. If you send the goods to me, once again, they have to come to Delhi. From Delhi, I have to once again send it to Punjab. Anyhow, the customer is also there in Punjab only. So you do one thing, whatever goods I have ordered, that you don't send it to me, you directly ship it. You directly ship to my customer. You directly ship to my customer. So transaction has taken place. So this manufacturer manufactured the goods and he has directly shipped it to Mr. R, who is the customer of Mr. W. To that person, he has directly shipped the goods. Now what will happen? Mr. M will give tax invoice to whom? Mr. M, Mr. Manufacturer, he will give the tax invoice to whom? He will give tax invoices to wholesaler. He will give a tax invoice. Say for example, these 1,000 shirts, he has charged 1 lakh rupees. On that, 18,000 rupees of GST he has charged. Total 1,18,000 rupees of tax invoice he has given. And he will ship the goods to retailer. Now one more transaction has taken place here between wholesaler and retailer. He will also give a tax invoice, no? So say for example, he is adding his margin. Say for example, 1,10,000 rupees he is selling. So for that he has given some invoice. So which will come to somewhere around 18,800, not exact figure, just a random figure. So he has given tax invoice. To whom? To Mr. R. Okay. So now two transactions are taking place here. Say transaction is taking place between Mr. M and Mr. W. Wholesaler and manufacturer, there is one transaction taking place. Between wholesaler and retailer, there is one transaction taking place. Two transactions are taking place here. Now when you come to Mr. B, can Mr. B avail the input tax credit? Did he fulfill all the conditions? Till now, whatever conditions we have seen. Number one, no, received, no. First one, Mr. R. What is the first condition? He should be having a tax paying document. Does he have a tax paying document? Yes, tax invoice he have. Number two, assume that Mr. W has filed his GSTR1 within the due date. This invoice is also declared and that amount is also reflected in GSTR2B. Okay, third condition. What is the third condition? You should have received the goods. Did Mr. R receive the goods? Yes, Mr. R received the goods. Can he enjoy the input tax credit? Yes, Mr. R can happily enjoy the input tax credit because he fulfilled all the conditions. Now let us come to Mr. W. He has also done a transaction with manufacturer. So now once again, if we start looking at the conditions, did he have a tax invoice? Yes. Assume that manufacturer has also filed his GSTR1 within the due date. It was reflected in 2A and 2B as well. So it is reflected in the GSTR2B also. What is the third condition? You should have received the goods. Did he receive the goods? Did he receive the goods? No. He did not receive the goods. No. Why? Because he ordered the manufacturer to directly dispatch the goods to his customer. So if you literally go by the rule, Mr. W did not receive the goods here. So that means that condition is violated or not? That condition is violated or not. So you tell me, will he be able to avail the input tax credit? Will he be able to avail the input tax credit? Literally, if you go by the rules, because one of the condition has been violated, he will not be able to enjoy input tax credit. But the government has given a clarification. In this transaction, we typically call it as bill to ship to transaction. So Mr. M is billing to Mr. W, but he is shipping to another person, Mr. R. So this is a transaction, we call it as what? Bill to ship to transaction. So in the case of bill to ship to transaction, this person, Mr. W, even though he did not receive the goods, we will deem as if that person has received the goods, and he will be able to enjoy the input tax credit. He'll be able to enjoy input tax credit. So this clarification has been given. In the case of bill to ship to transaction, even though this original buyer, even though he did not receive the goods, it will be deemed as if that person has received the goods, and he will be eligible to take the input tax credit without any restriction. Clear? Next. So this is what regarding bill to ship to model. So this I have seen it. They have given some different example. The same thing will apply even for bill to ship to services also. Even for services also, the same logic will become applicable. So this is what the third condition. So how many conditions we have seen? 16 subsection 2 clause A, there should be a tax paying document with the mandatory details. 16 subsection 2 clause AA, the GST should have been reflected in your GSTR 2B. Third one, 16 subsection 2 clause B, the recipient should have received that goods or services, however subject to one exception. In the case of bill to ship to transaction, even though the original recipient did not receive it, it will be deemed as if he has received and eligible to claim the input tax credit. Now let us come to 16 subsection 2 clause BA. So what does that say? Details of ITC in respect of the said supply communicated to the registered person under section 38 not restricted. Sometimes what will happen is, you will have a tax paying document, and you will that will be reflected in the GSTR 2B also. You would have received the goods and services also, but still you will not be able to claim input tax credit. Why? Because sometimes there will be a restriction placed on you. Sometimes there will be a restriction placed on you. Sir, in what circumstances the department will make a restriction? So when they will do a restriction is in some extreme circumstances, when you do some kind of violations. Sir, what kind of violations? Like if you are a new registrant for certain period of time, they will not allow you to take the input tax credit. If you have defaulted for payment of tax, rule 88C, 88D, so many things they say. This all we will discuss at a later point of time. If you have violated the provisions of rule 86B and all, so all that things they will try to say. All this discussion we are going to have later. But just for the time being now, you remember that if you have violated some provisions, there will be restriction put on you. So if you want to become eligible to claim the input tax credit, you should not have fallen under that restriction. If there is no restriction on you, if you did not do any violations, if you did not violate that rule 86B, rule 88C, so whatever it is, different kind of intimations are there. So if you have not violated any of these rules, then there will be no restriction. You will be able to enjoy the input tax credit. If you have violated any of these provisions, then there will be restriction on you. If there is restriction on you, you will not be able to enjoy input tax credit. So there should not be any restriction on you. That is what 16 subsection 2 clause BA says. Once again, since I am telling BA, it is a amendment. Okay, so 4 conditions we have covered. Now let us come to the 5th condition. Tax leviable on supply should have been actually paid to government. Tax levied on supply should have been actually paid to the government. So now what is this provision? Listen carefully. Right. See, government will give input tax credit. Why they are giving input tax credit? Because they have got it. See, if the government gets the input tax credit, if the government has got that amount of the GST, then only they will give it as an input tax credit. Do you think government will give input tax credit even without receiving the GST component? Government is not a fool, no. So if they have received GST, if I have paid the GST through some means, if the GST has gone to the government, then they will allow it as a credit. If whatever GST that has been claimed, if it has not gone to the government, will they allow you? No. The same logic will apply here. But how this practically works out, what are the things which will happen, why the GST will not go to the government and all, let us try to understand with the help of one practical example. Okay, so there is one registered person, recipient. There is one supplier. So he supplied the goods, 1 lakh worth of goods he has supplied, charging GST at the rate of 18,000 rupees. Total 1,18,000. Even he has given the tax invoice also. Tax invoice has given, everything has been given. So now what this person has done is, he's a registered person. Now first he has started checking the checklist. Number 1, is there a tax invoice? Yes. Is the amount reflected? Yes. This supplier, what he has done is, he has filed his GSTR 1 also. He has filed his GSTR1, that too within due date he has filed. So he has filed GSTR1. In that GSTR1, he has declared the invoice of this tax invoice. So that amount was reflected even in his GSTR2B also. Third condition, so a few more conditions like whether received. Yes, the goods are received also. Is there any restriction? No, this person is a genuine person. He did not commit any kind of restriction also. So now what this person will do, he will claim the input tax credit, assuming all other conditions are also satisfied. But what this supplier is doing is he is filing GSTR1. He filed GSTR1. Why GSTR1 will be filed? What is the main purpose of the GSTR1? If you ask me, the main purpose of the GSTR1 is to pass on the credit. The main purpose, why this GSTR1 is structured. Sir, why there is two returns? Anyhow, in the GSTR3B only directly they can declare the sales and claim the pay the payment. No. Why there is a need for extra return called GSTR1? The main purpose of GSTR1 is so that the suppliers will declare their outward supplies, and specifically they will declare invoice wise B2B supplies so that credit can be passed on to recipients. So that is the main purpose why GSTR1 has been introduced. So supplier has successfully filed the GSTR1. He passed on credit. But what this useless fellow is doing is he is not filing his GSTR3B. What he is doing? He is not filing GSTR3B. See, if he don't pass on the credit, customers will blame him. Customers will call and irritate him. Boss, I have purchased the goods from you, but I am not getting the input tax credit. They will call him and they will harass him. So that's why, in order to not lose the customers, what this fellow is doing is he is filing GSTR1. But what he is not filing? GSTR3B. Why he is not filing GSTR3B? If he files the GSTR3B, he has to make the payment of tax. He has to make the payment of tax. So this fellow has filed GSTR1, but he is not filing GSTR3B. That means he collected the GST, passed on the credit, but that GST amount he is not paying it to government. Then the government told, if that is the case, dear recipient, we will not give you input tax credit. We will not give you input tax credit. So why the government will not give you input tax credit? Because they did not receive. No, they did not receive it. So if they did not receive it, why I will give input tax credit to the recipient? Now, don't you think it is a punishment for the recipient? He's a genuine person. Say, for example, he paid the tax. He got the tax invoice. Imagine he paid the amount also to the supplier. But still, if the supplier has not filed his GSTR3B, whereby he will make the payment of the taxes, then even for the recipient, they will not allow the input tax credit. Yes, agreed. This is a punishment for the recipient. That's why what the recipient should do? Do the business only with genuine persons. And few minute details are there here. How this transaction will work out, I will tell you. So here there are some minute details which you have to pay attention. Listen carefully. See, when I say the amount of GST should have been paid to the government, supplier should have paid the amount of GST to the government. When I say GST has to be paid to the government, I am not saying GST has to be paid only in cash. GST can be paid through utilization of input tax credit also. See, this person is collecting 18,000 rupees here, 18,000 rupees of output tax liability he has. Just imagine that is the only outward supply he has made. So what is his output tax liability? 18,000 rupees. Now what he should do? He should file the GSTR3B. Now in the GSTR3B, say for example, if there is already input tax credit, he can adjust that input tax credit of 10,000, balance 8,000 rupees only he will pay. Okay. Or say for example, this person is having an output tax liability of 18,000, but he is having lot of input tax credit. 20,000 rupees of input tax credit is there. So now if he declares, okay, I have enough of input tax credit, if he has adjusted by filing the GSTR3B, if he used input tax credit, that is also meant, that also means payment only. When I say supplier has to make the payment of the GST, I don't mean that GST has to be paid in cash. Even by utilizing the input tax credit also, he could have made the payment. But the thing what I am saying is, when I mean that supplier has to make the payment of GST, what I am referring to that is he should file GSTR3B. So you can make the payment either using input tax credit or using cash, doesn't matter. But what is the thing which is required to be done by the supplier? Supplier should have filed his GSTR3B. So if the supplier files the GSTR3B, then the payment would have gone to the government and government will give you the credit to the recipient. But if the supplier is not filing GSTR3B only, then he can't pass on the credit. Then the government will not give ITC to the recipient. But how this transaction will practically work out? How this transaction will practically work out? Sir, as a recipient, how I will come to know whether the supplier will have filed a GSTR3B or not? I would have already taken the credit. The moment I got the information, the moment that information is reflected in the GSTR2B, I would have already taken the credit. Whether supplier at a later point of time filed the GSTR3B or not, how will I come to know? Practical obstacle is there here. So government has given one mechanism.
to bring this rule into implementation, they have given one mechanism. So what mechanism they have given is, once again, let us go with the example. Say for example, this supplier has done the transaction on 5th of April 2024. 5th of April 2024. Now for the month of April, he filed GSTR1. When he will file the GSTR1? 11th of May, he will file the GSTR1. Who? Supplier. So now this recipient, while filing the returns for the month of April, this recipient has also filed his GSTR1, and that amount, this GSTR amount, is also reflected in his GSTR2B. And while filing the GSTR3B, he has taken that input tax credit. Who has taken input tax credit? Recipient has taken input tax credit. When? While filing the returns for the month of April. April month returns generally will be filed on 11th GSTR1, 20th GSTR3B. So when filing that GSTR3B, this person has taken input tax credit. Now government says, okay, if all the conditions are fulfilled, you claim the input tax credit. Dear recipient, you have invoice and you have received the goods. Amount is reflected in GSTR2B. You claim the input tax credit. You claim it. This person has taken 18,000 rupees of input tax credit. He claimed it. Now what the government says is, we will wait for the supplier to file the GSTR3B. We are not asking you to immediately reverse it. We will wait. Okay, supplier did not file the GSTR3B. We will wait. At least before the due date, he will file. We will wait for the month of May. He did not file it. No problem. We will even wait for the month of June. We will even wait for the month of July. We will wait. But how long the government will wait? The government told, we will wait till 30th of September following the end of the financial year. We will wait till 30th of September following the end of the financial year for this supplier to file his GSTR3B and declare this particular supply. We will wait till 30th of September. 30th of September following the end of the financial year. When I say 30th of September following the end of the financial year, what does that come? What will be that what will be that 30th of September? This is a transaction forms part of which financial year? 24-25. 30th of September following the end of the financial year means 30th of September 2025. The government will wait till 30th of September 2025 for this supplier to file his GSTR3B. But the government waited till 30th of September 2025. Still this supplier did not file his GSTR3B. Now the government will intimate this recipient through the common portal, and they will give 2 months of time on or before 30th of November. Within 2 months, on or before 30th of November, this person should reverse the amount of input tax credit whatever he has taken. What he should do? He should reverse it. Why? Because initially government has allowed him to take the input tax credit. You have taken the ITC for the month of April only. So now the government has waited. It has waited for the supplier to file the GSTR3B till 30th of September following the end of the financial year. If till 30th of September following the end of the financial year also supplier has not filed the GSTR3B, now the government will intimate the recipient, boss, your supplier, we have waited so long, but your supplier has not filed the GSTR3B. Please do reverse it. For reversal, how much time they will give? 2 months of time they will give. Within that 2 months of time, you have to reverse it. What do you mean by reversal? If a balance is still lying in your ledger, just reverse it in the ledger. If there is no balance in your electronic credit ledger, you have already used it. What you should do? Deposit it back, pay it back. If amount is already there in your credit ledger at that point of time, just reverse it. In the credit ledger, you can do the reversal. If the amount is not there in your electronic credit ledger, what you should do? You have to pay it back. You have to, if you have already utilized, you have to pay it back to the government. Understood? Clear and comfortable, everybody? So this is what the provision actually works it out. Okay, so this is a new thing which they have added. This provision is there, but this 30th of September and 2 months of time will be given. Government will wait. All these things were not there in the older versions. These have recently added. So important from the examination perspective. Understood how the transaction practically works out, right? So if you see here, yeah, reversal of ITC. So the recipient can claim ITC in GSTR3B if the supplier furnishes the details in the GSTR1. The moment supplier has furnished the GSTR1, you can claim input tax credit. Government will not disturb you at that point of time. If the supplier fails to file GSTR3B for the corresponding tax period, by what date? By 30th of September of the following financial year. To whichever financial year this transaction belongs, next year's 30th of September. For the following financial year, the recipient must reverse the ITC in their GSTR3B by 30th of November. Government will wait till 30th of September, then they will give you 2 months of time to reverse it. So then you have to reverse it. Now say for example, this supplier has reversed it. this recipient has reversed it on or before 30th of November 2025. He reversed it, but later this useless fellow realized his mistake. Supplier has realized his mistake. He realizes that, okay, I did not file the GSTR 3B, because of that my recipients are suffering. He realized his mistake and he filed his GSTR 3B in the month of December 2025. He filed his GSTR 3B. Now, can the recipient can re-avail the input tax credit? Can he re-avail input tax credit? Yes. If the amount has been paid later, if you have reversed that amount because of non-payment of GST to the government, and later at a later point of time, if the supplier has gone and made the payment to the GST department, then you can re-avail the input tax credit. Whatever amount that you have reversed, that you can re-avail it. Understood? So that is what even they try to say here. Sir, what will happen if I don't reverse? Sir, if the government has given me time till 30th of November, if I don't reverse within that time, then you are required to reverse it later along with interest. If you reverse it within 30th of November, just reverse the ITC amount. If you reverse it later, reverse it along with interest. So once the supplier pays the outstanding tax and files a GSTR 3B for the relevant tax period, the recipient may re-avail. If at a later point of time, after you have reversed, at a later point of time, if the supplier is filing his GSTR 3B, you can re-avail that reversed input tax credit. Next one. So how many conditions we have seen? Come on, make out the conditions. 16 subsection 2 clause A. What does that say? You should be in a position of a tax paying document. 16 subsection 2 clause AA. Amount should have been reflected in your GSTR 2B. 16 subsection 2 clause B. You should have received the goods. 16 subsection 2 clause BA. There should not be any restriction on you. 16 subsection 2 clause C. The tax should have been paid to the government. Clear? Next. One more condition. Filing of return. Basically, see, amount will only be shown in GSTR 2B. It will be auto-populated statement. But if you want to claim it, what you should do? You should file the GSTR 3B. That credit which you are eligible for will be reflected only in GSTR 2B. That will only reflect. The moment GST input is shown in the GSTR 2B, it doesn't mean it will get automatically credited to your electronic credit ledger. If you want to avail that input tax credit, what you should do? GSTR 3B you have to file. So if you file GSTR 3B, then only you will be able to avail the input tax credit. So that's what they say. That is anyhow implied condition. So to avail ITC on eligible inward supplies, the registered person must have filed their return in GSTR 3B. They are talking from the recipient's point of view. As a recipient, if you want to claim input tax credit, you should file your GSTR 3B. File your GSTR 3B, claim your input tax credit. So that is the last condition. Okay. Now, there are some provisos. There are some provisos to 16 subsection 2. Let us try to understand what are that provisos. One proviso which they have clarified is, sir, what if goods are received in lots or installments? What if goods are received in lots or installments? Like if you remember the discussion in the previous session, I have given you an example. What is the example of goods getting received in lots or batches? That Tata Motors example I have told. That, yeah, even you can say that also. Windmill also. That those are goods sent out in semi-knocked down or completely knocked down condition. So Tata Motors 100 vehicles are there. They are not able to send in one consignment. They are able to send in 10 consignments of 10 vehicles each or 5 consignments. See, I told that ITC has to be availed only on receipt of the goods. In case if the goods are getting sent in lots or batches or installments. Say for example, that 100 cars I have purchased an order. In the month of May, the company has given me tax invoice for all that 100 cars. Company has given me invoice for all the 100 cars. But I did not receive the 100 cars. I am receiving the cars in installments. So on 15th of May, I received first installment. On 30th of May, I received second installment. On 15th of June, third installment. And 30th of June, fourth installment. Finally, on 15th of July, last consignment of the goods I have received. Now, when I should claim the input tax credit? When I receive the first lot or when I receive the last lot? Government has clarified, in case of goods received in lots or batches or in semi-knocked down or completely knocked down conditions, you should be eligible to claim the input tax credit only on receipt of the last lot or the last installment. Whenever you receive, then only you become eligible for ITC. Clear? Next one. So we have one more provision. Payment for the invoice to be made within 180 days. So let us try to understand what is that. So one more important proviso, from here also questions are going to come. Proviso 2 for 16 subsection 2, which says that, say for example, you are a recipient who are a registered person. There is a supplier who is a registered person. Okay. So now the supplier has given you tax invoice. 1 lakh amount of tax invoice he has given. 18,000 rupees of GST also he has given. Say for example, invoice has been given on 5th of April 2025. Okay, so now this recipient, he has taken the tax invoice, he's having a tax invoice, amount is reflected in his GSTR 2B, he received the goods also, there is no restriction, and even what else is that, supplier has also filed his GSTR 3B, supplier did not do any delay, and even GSTR 3B also he has filed. GSTR 3B he has also filed. So he successfully claimed that input tax credit amounting to 18,000. When he filed the return for the month of April, he claimed that ITC amounting to 18,000. But this transaction has taken place on credit basis. It is quite common, business transactions happens on credit basis. It is unavoidable part of the business. Now even this transaction has also taken on credit basis. Now what the government puts an restriction is, in case if you have bought the goods or services on credit basis, you enjoy input tax credit, we don't have any objection, but you are required to make the payment to the supplier within 180 days. Within 180 days you are required to make the payment to the supplier. If you have already done the payment, well and good, no issue. For example, if you are not buying the goods or services on credit basis, you are paying the advance and getting the goods and services, then there is no question of invoking this provision only. This provision will come into picture when you have purchased the goods or services on credit basis. In that case, the government says, dear recipient, you have to make the payment within 180 days. If you don't make the payment within 180 days, then what will happen? If you don't make the payment within 180 days, then whatever amount of GST you have availed, that you need to reverse it along with interest. Reversing just ITC alone will not be enough. What you need to reverse? Even interest also you have to add and pay back to the government. 18% interest at the rate of 18% per annum you have to calculate. So now if you calculate here, if you work it out here, so on 5th of April 2025 tax invoice was given. So now we have to calculate 180 days. So while filing the return for the month of April, say for example on 20th of May, when the return was filed for the month of April, then this recipient has already availed input tax credit. 18,000 rupees of input tax credit they have already availed. Now from this 5th of April we have to see 180 days. From this 5th of April we have to see 180 days. How does 180 days we have to calculate? In April we have how many days? 30. And in that take out 5. So by 30th of April 25 days are over. Then May 31 days. Then we have June 30 days. Then July 31 days. August 31 days. See till here how many days are over? Come on. 150. So if you catch an average 150, 145, 146, 147, 148 days are over. Okay, right. So I think till 180 days means even September 30 days also you can take. 148 plus 30, 178. We have 2 more days. So that 2 more days will fall on 2nd of October. So 2nd of October 2025. You should have made the payment within 2nd of October 2025. Sir, what will happen if I don't make the payment? What will happen if I don't make the payment? If you don't make the payment within 180 days, you have to reverse it. How much amount I have to reverse? 18,000 rupees I have to reverse. Not just that, on this 18,000 you have to calculate interest at the rate of 18%, starting from the date on which you have availed the input tax credit till the time you are reversing on that portion. You have to calculate that many number of days, and you have to calculate the interest. That interest also you have to pay it back to government. Clear? Able to understand? So that's what they say here. A registered person must pay the supplier the value of the goods or services within how many days? Within 180 days from the date of issuance of the invoice. If payment is not made within 180 days, then what will happen? Reverse or pay an amount equal to ITC whatever you have availed, and also pay applicable interest in section 50, as per section 50, that is at the rate of 18% you have to pay the interest, and reflect the reversal in form number GSTR 3B for the tax period immediately following the 180-day period. Nothing but once this time expires, say for example the period is expiring on when 180 days is expiring on 2nd of October. After this, whatever next GSTR 3B you will file, generally next GSTR 3B will come on when? Next GSTR 3B will come on 20th of October. In this month also he will file one GSTR 3B. No. So in that GSTR 3B you have to show that reversal amount along with interest. Able to understand? Right. Next. Sir, here also one more thing. Say for example, sir, I did not make the payment within 180 days. I reversed the GST amount along with interest. Later I am making the payment, sir. I reversed it. So I did not make the payment till 2nd of October. I reversed the amount on 20th of October. But later in the month of December 2025, I made the payment. Can I re-avail the input tax credit? Yes. If you have reversed it already and you are making the payment, you are making that scenario good, you can re-avail the input tax credit. Sir, I am paying it now. No, will the government pay me the interest? don't expect that. So you are required, you can only re-avail the input tax credit. Whatever interest that you have paid, that is gone. That is anyhow not coming back. Clear? Able to understand? So that's what they say there. Next. And once again, this payment of 180 days condition will not become applicable in some circumstances. The payment of 180 days, making the payment to the supplier within 180 days does not become applicable in some circumstances. That means in these circumstances, even if you don't make the payment to the supplier within 180 days, still you need not reverse it. Still you can continue to enjoy the input tax credit. So what are that exceptions? What are that exceptions where 180 days rule will not become applicable? First one, see, we know that in some cases, supplier, in case some supplies will be considered as, some activities will be considered as supply even without consideration. Yes or no? Some activities will be considered as supply even without consideration. Those activities we have seen in schedule 1. How many activities are there? 4 such activities are there. So we have seen 4 such activities where even if done without consideration, still we deem it as supply. So supply of goods or services between related persons without consideration, still we call it as supply. You tell me, if you are considering some activity as supply without consideration, is there any relevance for this rule here? There is no consideration only, no. When there is no consideration only, what is the logic of making the payment within 180 days? They will not pay the consideration only. Then what is the need of this 180 days condition? So this 180 days condition will not become applicable in respect of those supplies which are, in respect of those activities which are deemed as supply even without consideration. Basically for schedule 1 activities, this 180 days condition will not become applicable. Similarly, and one more thing they say here, in case if you are required to pay the tax on reverse charge mechanism, you received some goods or services on which you are required to pay the tax on reverse charge mechanism, then also you will not be able to required to reverse it. If you have received some supplies, say for example, you are a recipient, you received some supplies amounting to 1 lakh rupees. On this supplies, you have made the payment to the department under reverse charge mechanism. You have already paid the amount of GST to the government. Even if you don't make the payment to the supplier within 180 days, still that restriction will not become applicable. You can continue to avail the input tax credit. So making the payment to the supplier within 180 days, that will not become applicable in respect of those supplies which are covered under RCA. And also it will not become applicable in case of deemed supplies which you are doing without consideration. And also additions to the value of supply for the supplier's liability incurred by the recipient under 15 subsection 2 clause B. Now it's time for your brain to dig what is 15 subsection 2 clause B. Did we discuss section number 15? No. We are about to discuss, no? Value of supply we have discussed, okay. 15 subsection 1 talks about? Okay. 15 subsection 2 talks about additions. 15 subsection 2 says what are the additions which are required to be added to the value of supply. What does 15 subsection 2 clause B say? Payments which are made by recipients to the third parties, which is actually the supplier's obligation to make in respect of that supply, it should be added to the value of supply. So now what they say here is, but in that case also, this rule of making payment of 180 days will not become applicable, not for the entire consideration. So let me show you what example we have used there to understand this. What example did we use? Catering example I have used, no? Right. Once again, let us use the same example. So there is a supplier who is providing catering services. There is a recipient who is receiving that services. Okay. Now say for example, don't say this as recipient is receiving for wedding and all. Wedding will not be able to avail input tax credit. That is a personal event. Let us say for example, the recipient is some company X Limited. This company is conducting some celebration. And first thing, I cannot use catering services. Why? Because on catering services ITC is blocked. But anyhow, ignoring all that, since we don't know all that provisions, since we have not yet discussed 17 subsection 5, just on a assuming that we don't know anything, we are doing the discussion. Okay, right. So this person has provided services. We agreed for 10 lakh rupees of consideration. But as usual at the venue, what happened is that this third person has come, he has unloaded the drinks and all, he started asking for payment. So in order to avoid the mess, what the recipient has done? Recipient has made the payment of 1 lakh rupees. Okay. To the third party, which is actually whose obligation to make? Supplier's obligation to make. And balance, how much is required to pay to the supplier? 9 lakhs only he is required to pay. 9 lakhs only he is required to pay to the supplier. But in this case, what will be the value of supply? What will be the value of supply? See here, the transaction value is 9 lakh rupees only. But what will be the value of supply? 10 lakh rupees. Why? Because as per 15 subsection 2 clause B, even this 1 lakh rupees also should be added. So here the value of supply will be 10 lakh. Supplier will give invoice for how much amount? 10 lakhs only. He should give the invoice for 10 lakhs. And how much GST he will charge? 1,80,000 he will charge. Total 11,80,000 worth of invoice he will give. Now, recipient will claim how much input tax credit? Say here, simple rule. On the basis of tax invoice, how much ITC he will avail? 1,80,000 rupees of input tax credit he will avail. But he is required to make how much payment to the supplier? 9 lakhs is required to pay, but he has not yet paid it. He has not yet paid it. Supplier has given invoice. Say for example, on 5th of April 2025, supplier has given the invoice. For entire 10 lakhs, he will give invoice. Why? Because as per 15 subsection 2 clause B, that 1 lakh whatever has been paid by recipient to the third party should also be added to value of supply. So supplier will give invoice for entire 10 lakh rupees, and invoice was given on 5th of April 2025. But this person did not make the payment yet to the supplier. Till what time you have to make the payment? 180 days. If you calculate that 180 days, just previously we have done. So it will fall on 2nd of October 2025. So on or before this date, he should have made the payment. Now this person is not making that payment. Whatever amount he is required to pay for that 9 lakh rupees, that he did not pay on 2nd of October 2025. So if he did not make the payment within 180 days, what should happen? He should reverse. What recipient should do? Recipient should reverse ITC. Everybody agree with me? Right. Now, how much ITC he has to reverse? Should he reverse this 1,80,000 worth of ITC on the entire 10 lakh rupees, or should he reverse only proportionate ITC with regard to the 9 lakh rupees? Only proportionate ITC with regard to the 9 lakh rupees only he will reverse. He will not reverse entire 1,18,000. Why? Because 1 lakh is already paid. 1,80,000 out of that 10 lakh rupees, 1 lakh is already paid. Only GST amount with regard to that 9 lakh rupees, whatever amount which is due to the supplier, on that proportionate amount only he will reverse it. The entire amount he will not reverse. Why? Because that 1 lakh he has already paid. So out of this 1,80,000, 18,000 he need not reverse it. Why? Because he has already made that payment to the third party. He will reverse only 1,62,000 rupees of ITC. Proportionate amount for 9 lakhs only he will reverse, not the entire ITC of 1,80,000 he will reverse it. Able to understand? Clear and comfortable. So this is what they say. For this 1 lakh rupees, that 180 days condition will not become applicable. Whatever payment which has been made by the recipient to the third party, which has been added to the value of supply as per 15 subsection 2 clause B, for that once again payment of 180 days condition will not become applicable. In that case only you will reverse proportionate amount of input tax credit, not the full amount of input tax credit. Understood? Comfortable everyone? Right. So that's what even they say here. So in 3 cases you will not be required to apply that 180 days rule. What are the 3 cases where you are not required to apply 180 days rule? Number 1, in case of RCF. Number 2, deemed supplies without consideration. Number 3, in respect of those payments which are made by recipients to a third party and added to the value of supply under 15 subsection 2 clause B. Understood? That's all. And later whenever you are making payment, if you are not making payment within 180 days, but at a later point of time if you are making the payment, you can re-avail that input tax credit. Understood? Right. So what and all the conditions we have seen, once we will do one quick recap. With that section 16 we have completed. Quick recap we will do. 16 subsection 1 talks about eligibility. Who is eligible for claiming the input tax credit? Tell me who is eligible. 2 things they have told. Registered person, goods or services to be used or intended to be used for business. Then 16 subsection 2 says conditions. 16 subsection 2 clause A, tax paying document, possession of tax paying document. 16 subsection 2 clause A, amount should have been reflected in your GSTR 2B. 16 subsection 2 clause B, you should have received the goods. 16 subsection 2 clause BA, no restriction should be there on you. 16 subsection 2 clause C, payment should have been made to the government. Supplier should have filed the GSTR 3B. In fact, 16 subsection 2 clause D, filing of the GSTR 3B. 2 provisions. For 16 subsection 2 we have discussed 2 provisions. Provision number 1, if you have received the goods in lots or installments or semi knocked down or break it down condition, claim it only when last lot or last installment is received. Second provision, recipient should make the payment within 180 days. If you don't make 180 days from the date of invoice, if you don't make the payment within 180 days, what will happen? You have to reverse the amount of input tax credit. Not just reversing the amount of input tax credit, along with interest you are required to reverse it. And in 2 cases, 16 subsection 2 clause C and second provision, if you are reversing input tax credit, but if you are making a payment, if you are making that scenario good at a later point of time, like supplier did not file GSTR 3B, you reversed it. Later if the supplier is filing GSTR 3B, you can re-avail it. Similarly, you did not make the payment within 180 days, you reversed it. Later, if you are making a payment, you can re-avail it. Understood? Easy, right? So should we take a break for breakfast? It's already 9:30. Or should we do questions till here? So let me see what questions are there. Okay, we'll do one thing. We'll take a break. So we'll come back and discuss the questions. First, we'll complete whether there are any questions from 16. After the break, we are going to have a even more interesting discussion. Blocked credit we are going to have. Very, very important from the examination perspective. Interesting discussion also. So that we'll discuss after the break. First, we'll do questions. If there any questions are there specifically talking about 16, we'll see that. If not any, then we will discuss section number 17 directly. Okay, right. See you after the break. What time you will come back? Right. So shall we resume our discussion? Fine. So in the previous session, we have completed 16 subsection 1 and 16 subsection 2 also we are done. So along with that, a few more subsections are there under section number 16. Let us try to understand those subsections also. First, we will try to understand 16 subsection 3. So what does 16 subsection 3 say? Very simple thing. It is something talking about the capital goods. If the depreciation is claimed on tax component, ITC can't be availed. Which means if you are purchasing a capital goods in the sense what will come, plant and machinery will come, and all that furniture, fittings, everything will come there. So in case if you are capitalizing an asset in the books of accounts, say for example, you purchased some 10 lakh worth of machinery. On that, applicable rate of GST is 18% and you paid 1,80,000 rupees of GST. Total how much you have paid? 11,80,000 rupees you have paid. Even capital goods also will qualify as inward supplies or not? Even capital goods also will qualify as inward supplies. So even this GST whatever you have paid on the plant and machinery, that is also eligible for availing input tax credit. But you will be given two options with regard to capital goods. See, generally whatever assets, whatever capital goods we have, that we capitalize in our books of accounts, that we capitalize on your books of accounts, and that will try to depreciate it. Yes or no? So say for example, if I am capitalizing 10 lakh rupees of the asset I have purchased, 1,80,000 rupees of GST also I am capitalizing, total 11,80,000 rupees I am capitalizing. That means what? If I capitalize total 11,80,000, I will claim depreciation on the value of the machinery, and I am claiming depreciation on the GST component also. So what the government says here is, in case if you want to capitalize the GST component, also, we will not allow that input tax credit. We will not allow input tax credit. If you want to avail input tax credit, don't claim depreciation. Don't capitalize that GST in your books of accounts. So only one option we will provide. Either capitalize the GST paid on capital goods in the books of accounts or claim depreciation. You can't do both simultaneously. You can't say I will claim depreciation of 1,80,000 also, and also I will claim this 1,80,000 as an input tax credit. You can't say that. Anyone, either claim depreciation or claim input tax credit. Anyone you have to do, that is completely your choice. What you are willing to do, that you decide and accordingly do it. Clear? So that is what 16 subsection 3 is saying. Nothing much here to understand. Next one, 16 subsection 4. Sir, what is the 16 subsection 4 say? 16 subsection 4 talks about time limit for availing the input tax credit. Say for example, I am a registered person. I purchased some goods or services in the month of April. In April 2024, I have purchased the goods. What I should do? For the month of April, whenever I file the return, say I am filing my GSTR 3B on 20th of May, whenever I am filing that GSTR 3B, in my GSTR 3B, I have to claim it. I have to avail that input tax credit. Say for example, 1 lakh worth of goods I have purchased, on that 18,000 rupees of GST I have paid. So this 18,000 rupees of ITC generally I can claim whenever I file the return for the month of April. That I will generally do it on 20th of May. If all the conditions regarding availing of input tax credit is fulfilled, I can claim that input tax credit. But say for example, I am not claiming it. I am not availing that input tax credit. I have a purchase and all the conditions are fulfilled. I am eligible for claiming the input tax credit, but I did not claim it while filing the return for the month of April. I forgot. Maybe I forgot or intentionally I did not claim it. Whatever may be the reason, I did not do it. Then what I can do? Sir, will I lose the opportunity to claim that forever? No. If you did not claim it while filing the return for the month of April, no problem. When you are filing return for the month of May, then also you can claim it. In the May month, you can say, hey, last year I had one purchase. In the last month, I did not claim my ITC. Now I will claim it. So you can claim it while filing the return for the month of May. Sir, May also I forgot. No problem. You can claim it in the month of June. While filing the return for the month of June, you can claim it. Sir, then also I forgot. No issue. In the month of July, you can claim your ITC. Sir, how long like this? Can I claim it after 5 years? Can I claim it after 10 years? No. They have put one limit. So what is the time limit which they have put? So the maximum time limit within which you are supposed to avail the input tax credit is ITC on invoices or debit notes from a financial year can be availed until 30th of November of the succeeding financial year or the date of filing the relevant annual return. So what they are trying to say, 30th of November following the end of the financial year or actual date of filing of annual return, whichever is earlier. So that means maximum will have what time limit? April transaction has taken place in the month of April 2024. It form parts of which financial year? 24, 25. So 30th of November following the end of the financial year. What is that? 30th of November 2025. And for this year, annual return will be filed. Due date is 31st. They are not saying due date. What is the actual date of filing of annual return? You have to determine. Say for example, annual return was filed on 15th of December 2025. Whichever is earlier. Which one is earlier? 30th of November will be earlier. So the last date up to which you can claim your input tax credit is what? 30th of November 2025 here in this given case. So in case if you did not claim the input tax credit for the month for which in which you have received that supplies, you need not worry. You can file that in your subsequent months. But how long, sir? No, you will not be given an infinite amount of time. There will be a limited amount of time within which you can claim your input tax credit, and that limited amount of time is 30th of November following the end of the financial year or the date of filing of the annual return, whichever is earlier. But however, this time limit will not become applicable in two cases. This time limit of 30th of November following the end of the financial year or filing of annual return, this time limit will not become applicable in two cases. Which two cases? See, in two cases I told you are required to reverse the input tax credit. Two cases I told where you are required to reverse the input tax credit. Which two cases I have told? One is 16 subsection 2 clause C, where I have told that the supplier has collected the GST but he is not filing his GSTR 3B. And one more case in which you are required to reverse your input tax credit is if you are not making the payment within 180 days. Within 180 days you are not making the payment. In both these cases, initially what we do, if these conditions are violated, first we will reverse the input tax credit. But there I told one more option. In case if these things are made good, you have reversed the input tax credit, but these things are made good. Like for example, the supplier has filed his GSTR 3B or you later made the payment within 180 days. And if you want to re-avail, if you make these things good, you can re-avail the input tax credit. So if you want to re-avail the input tax credit, then there is no need to see the time limit. You can claim it after 10 years also, after 5 years also, not a problem. In case if you want to re-avail the input tax credit which has been reversed, either because the supplier has not filed his GSTR 3B or you did not make the payment to the supplier within 180 days. So whatever may be the reason, if because of some reason you have reversed your input tax credit, but you have made that default good now, you want to re-avail the input tax credit, you can do it at any point of time. In that case, the time limit of 30th of November following the end of the financial year or date of filing of annual return, these things will not become applicable. Understood? So this is what 16 subsection 4 says. So ITC on invoices or debit notes, even on the debit note also, in whatever year debit note has been given, 30th of November following the end of the debit note. See, one more thing, this here I will give you one illustration. Let me see how many of you will be able to answer. So there is one recipient. Okay. So now this recipient has received a tax invoice. This tax invoice was given on 25th of March 2024. So tax invoice is 1 lakh rupees and GST amount is 18,000 rupees. Total tax invoice was given for 1,18,000. Now with respect to that supply, the recipient has also got debit note. Later might be he did not make the payment on time. He is the supplier is collecting the interest from you. So he collected 10,000 rupees of interest from you. On that 18,000 on that 1,800 rupees of GST also collected. Total 11,800 rupees of debit note was given. What was given? Debit note was given. Say for example, debit note was given on 5th of May 2024. 5th of May 2024. Now you tell me, for this tax invoice, what is the maximum time limit within which I am required to, within which I can claim the input tax credit? 30th November, agreed. I need an year. 30th of November 2024. Sure about it? Yes. Why? Because this relates to a financial year 23-24. Financial year will end on 31st of March 2024. 30th of November following the end of the financial year, it will fall on 30th of November 2024. Now, within what time limit I can claim ITC on this debit note? 30th of November. So I will give you options also. 30th of November 2024 or 30th of November 2025. 24 or 25? 24. 25. I think you got the point, no? Why this doubt is coming? In case of debit note, is the time limit should be calculated with respect to the financial year in which a supply was made, or with respect to the financial year in which a debit note was given. No, in which a debit note was given. In which debit note was given. In whichever financial year debit note was given, that will be the relevant financial year. So debit note belongs to which financial year? 24-25. 30th of November following the end of the financial year will be falling on 30th of November 2025. So this can be claimed on this debit note. ITC can be claimed till 30th of November 2025. Clear? So two cases I have covered. One is credit note related discussion. I have told you within what time limit credit note can be declared in the return. There we have seen in case of credit note, you can declare that with the relevant year of supply. Their relevant financial year in which supply has taken place. But when it comes to availing input tax credit on the basis of debit note, 30th of November following the end of the financial year in which that debit note was issued, not the supply was made. Understood? Clear and comfortable, everybody? Right. See here. Yeah. I have given this point also here in the material. The date of the debit note, not the original invoice date, determines the relevant financial year. So in case of debit note, you need not worry about when the initial supply, when the original supply has been made. It will be only relevant for us when the debit note has been issued. Understood? Next. However, this time limit does not become applicable when re-availing the credit that was previously reversed. Understood? Right. Next one. Okay. And one more thing. Fine. See, and one more thing they say here. In case of unregistered persons, in case of supplies covered under reverse charge mechanism. Say for example, there is a supplier who is an unregistered person. You are a recipient who is a registered person. You are receiving some goods or services which are covered under RCM. So 1 lakh rupees is the value of supply. On this, when I say RCM is applicable, who will pay the GST amount to the government? Recipient. So recipient will pay that 18,000 rupees of GST to the government. Now since the supplier is unregistered, he will give the self-invoicing, no? He will do the self-invoicing or not? So when he does the self-invoicing, so say for example, he generated self-invoice. He generated the self-invoice on, for example, 25th of March of 2024, he generated the self-invoice. On this, within what time limit he can avail the input tax credit? This RCM, within what time limit he can avail the input tax credit? Same. The 30th of November will be calculated. Here relevant financial year will be the date, the year in which the recipient has given the self-invoicing. So here the recipient has given the self-invoicing in the financial year 23-24. So 30th of November following the end of the financial year, it will fall on 30th of November 2024. Understood? Clear and comfortable? Right. Now some people, what they will try to do is, see what this recipient can do is, see if he gives the invoice on 25th of March 2024, he will be able to claim the ITC only till 30th of November 2024. Now what, since it is just a matter of self-invoicing, what this recipient also can do is, instead of giving the self-invoicing on 25th of March, he can declare the self-invoicing on, he can generate that self-invoicing in the month of 5th of April 2024 he can do. If he does that, what time limit he will get to claim the input tax credit? In that case, he can claim the input tax credit till 30th of November 2025. They can do this or not? They can play these kind of tricks or not? In that case, what will happen? You know, since you gave a late invoice, that means you are declaring the supply late in your returns. That will attract interest. That will attract what? Interest. Why? Because you should have declared. See, we will go by what is the time limit for issuance of invoice. You should give the invoice within the time limit. Whenever time limit falls, within that time limit, you are supposed to generate the tax invoice. In case if you are not generating the invoice within the time limit, if you generate the invoice beyond the time limit, what will happen? That means you are declaring the supplies in a late manner. Whatever supply you should have declared in the month of May, that you will declare it in the month of April. If you are doing it, that will attract interest or not? Definitely that will attract interest. So even though if the supplier thinks, even though if the recipient thinks in this manner, let me do the self invoicing in the next year, then you will violate the provisions relating to last date for issuance of invoice, and automatically interest provisions will become applicable. So he can't do it. Even if he wants to do it, if he's ready to bear the interest and all, okay, fine, he will do it. But there is something to his disadvantage. Clear, everyone? So even the recipient who is required to pay the tax at the reverse charge mechanism, he is supposed to issue the invoice within the time limit. If he tries to do these kind of things, interest will get attracted, because you are trying to make a delayed declaration of supplies. Right. Next. So that's what even they try to explain here in this entire paragraphs. Next. Time limit for taking ITC in case of revoked registration cancellation. See, this is one interesting provision. 16 subsection 6, very interesting provision. So guys, if you remember, we discussed the procedure for revocation of cancellation. No? Procedure for revocation of cancellation we have seen. So if you remember, if your registration is cancelled on suo motu basis by the proper officer, you can submit an application for registration. Within 90 days, you can do it. However, that period can be extended by 180 days. So if the proper officer is satisfied that your registration shall be given, he will give it back to you. He will give back the registration to you. Okay. So let me give you one scenario. What will happen? Say for example, listen carefully. Little bit complicated. If you don't follow the example, you will lose the track. You will not be able to understand the concept. So listen carefully. Financial year 24-25. In the financial year 24-25, I received some, in April, I received some supply as I'm a recipient. Okay. I'm a recipient. So in April 24, I received a invoice. I purchased the goods. Invoice is also there. All the conditions of 16 subsection 2 have been fulfilled. So I am eligible to claim the input tax credit. What I should have done while filing the return for the month of April, that is when I do it on 20th of May, I should have availed that input tax credit. I did not do it in the month of April. Should I worry? No need to worry. I will have a time limit. What is the maximum time limit within which I can give? 30th of November following the end of the financial year. Say for example, 30th of November till 30th of November 2025. I have time. Okay, so till 30th of November I have time. Right. So let me put it this way. So this is so this is 31st of March. So this is where the financial year is ending, 31st of March 2025. What is the maximum time limit within which I can declare that in my returns and avail the input tax credit? Till 30th of November 2025. This is the maximum time limit within which I can claim that ITC. But what happened is, say for example, I did some violation. So I have told you some prescribed violations at the 29 subsection 2. If you committed any of the violations given under 29 subsection 2, the proper officer on suo motu basis, you can come forward and cancel the registration. So what happened is, the proper officer came and cancelled your registration. On 1st of November 2025. He cancelled your registration. Now you tell me, as on 1st of November 2025, when your registration is cancelled, at that point of time, are you still eligible to claim the input tax credit on that April 2024 invoice or not? Assuming registration is not cancelled, as on 1st or till 30th of November, you have the time for for claiming ITC on the invoice, whatever has taken place in the financial year 24-25, till 30th of November, you have time. But because of some violations, your registration was cancelled. So on the date of cancellation, you still have the eligibility to claim ITC, but your registration is cancelled. Can you file any returns after that? Your registration is cancelled with effect from 1st of November 2025. Will you be able to file the returns? No. So then what happened is, your registration is cancelled, but there is a valid reason you wanted to apply for revocation of cancellation. You applied for revocation of cancellation also. Then what happened? PO has found it valid and he gave your registration back on 31st of December 2025. He revoked your cancellation. And when we know that when the PO revokes the cancellation, once again registration will come into force from here only. Once again, registration will come into force. But during this duration, were you able to file the returns? When your registration is under cancellation, from 1st of November till 31st of December, that means from the date of your cancellation till the date of revocation of cancellation, will you be able to file the returns? No, you will not be able to file the returns. See, since you are not able to file the returns here, you are not able to claim the ITC. Time limit is expired now. 30th of November is gone. This invoice is there. On this invoice, you should have claimed the input tax credit. You had a time till 30th of November. You could have claimed it. See, from 1st of November till 30th of November also, you could have claimed your ITC. But what happened? Your registration is cancelled. Later you made an application for revocation of cancellation. PO has revoked your cancellation. Your registration once again has become effective from here. But during that time span, you are not able to file the returns. Since you are not able to file the returns, the time limit got expired. The time limit got expired. But as on the date of cancellation, you are still eligible for claiming input tax credit. But because of this cancellation proceedings, you are unable to file the returns. Since you are unable to file the returns, you are not able to claim that input tax credit. Now you tell me, should this person be given one more opportunity to claim that ITC or not? Why? Because it is a hindrance. He wanted to do it, but he was unable to do it. Why he was unable to do it? His registration was cancelled. So he was unable to do it. So now what the act has given the permission is, if you remember, from the date of revocation, in case if your registration has been cancelled, from the date of cancellation of registration till the date of revocation of cancellation of registration, whatever pending returns are there, those pending returns you are required to file within 30 days from the date of revocation of cancellation. No, so whatever returns that you submit within that 30 days, in that return you can declare, even though the time limit has expired, in that return you can declare those supplies and you can still claim your input tax credit. You can still claim your input tax credit. Guys, able to understand? Little bit complicated. I think with the help of example I was able to make the discussion clear. So in case you are eligible to claim the input tax credit, but because of some circumstances your registration was cancelled, at the time when your registration was getting cancelled, you are still eligible to claim the input tax credit. But your registration is cancelled, there is a valid reason, you submitted an application and your cancellation was revoked. So, but from the date of cancellation till the time of revocation of cancellation, you will not be able to file the returns, because during that point of time your registration was cancelled. Since you don't have the option to file the returns, your time limit has got expired. Time limit for availing input tax rate expired. But the government will give you one more option, one more opportunity they are giving. So anyhow, for this duration, you are required to file the return within 30 days from the date of revocation of cancellation. In that returns, you submit your invoices on which you have the right to claim input tax credit as on this date. All that invoices you can declare in that returns and you can claim the input tax credit. Government will give you the input tax credit. Understood? Even though the time limit has expired. Comfortable, everyone? Right. So if I read the provision for you, you will be able to understand it. If the taxpayer's registration is cancelled and later revoked, they cannot file the returns for the period from cancellation to revocation until the registration is reinstated. If the taxpayer did not claim ITC on any invoice or debit note for that financial year, and the time limit under 16 subsection 4 lapses during the cancellation period. So our time limit has got lapsed during this cancellation period. ITC cannot be claimed on those invoices or debit notes. In that case, you will not be able to claim it. So for these people, government has given option. What they have told: the time limit for availing ITC under 16 subsection 4 is extended until the date of return filing if the returns for the cancellation to revocation period are filed within 30 days of revocation, provided the ITC time limit under 16 subsection 4 had not already been expired at the time of registration cancellation. That means at the time when your registration is cancelled, at that point of time, if you are still eligible for claiming input tax credit, then your time limit will be extended. For this duration, you will file the returns within 30 days. In that returns, you can claim the input tax credit. Let me give you one more scenario. So now you have to apply your knowledge, whatever I have told you here. Come on, watch it carefully. Watch the example I am giving. So there is a registered person, financial year 24-25. Okay. So he received one invoice in the month of April 24. All the conditions of 16 subsection 2 are fulfilled. So he is eligible to claim the input tax credit, but he did not do it. What is the maximum time limit which is available for him? Come on, respond. Till 30th of November, he is having the 30th of November 2025, he is having the validity to claim the input tax credit. But his registration was cancelled with effect from 1st of December 2025, or let me give some gap. On 15th of December 2025, his person's registration was cancelled. When it was cancelled? 15th of December. But it was a genuine case. He made an application for revocation. His registration was his cancellation was revoked on 31st of December 2025. So during this time span, will he be able to file the returns? No, cancellation was in force. Now for this duration, from the date of cancellation till the date of revocation, whatever pending returns are there, that he can file it within how many days? Within 30 days from the date of revocation of cancellation. Now this registered person, in these returns, he want to declare that invoice on which he did not claim the ITC. Is it permitted? whatever invoice he did not claim ITC for the month of April that he wants to claim in these returns. Can he do that? No. Why? Because whenever your cancellation has come into force, by that time the time limit is already expired. Able to understand? So in the previous case, whenever your registration has been cancelled, at that point of time you are still eligible for claiming input tax credit. But in the second case, by the time your registration is cancelled, the time limit for claiming input tax credit is already over. Understood? So this is what 16 subsection 6 is. Next one. So these are relating to 17. This anyhow we will cover it in the section number 17. This too you can ignore it. So that's all guys. This is what the important provisions from section number 16. When a person becomes eligible and what are the conditions and what are the restrictions for availing of the input tax credit. So we have covered section number 16 fully. Now we will try to do some questions. Let us have a look at the question. Help me with the page number please. What? 90. Any illustrations? Let us see this illustration. Listen carefully. Vijay Sales, a registered supplier, receives 100 invoices for inward supply of goods or services involving GST amount of 10 lakh rupees from various suppliers during the month of October. Totally he has received 100 invoices for buying goods or services. For all the 100 invoices put together, total how much amount of GST he has paid? 10 lakh rupees. Out of 100 invoices, details of 80 invoices involving GST of 6 lakhs have been furnished by their suppliers in their respective GST R1s filed on the prescribed due date thereof and are reflected in the GSTR 2B of Vijay Sales. There was no amendment in the GSTR 1s by suppliers using GSTR 1A for the month of October, that you keep it aside. Compute the ITC that can be claimed by Vijay Sales in its GSTR 3B for the month of October to be filed by 20th of November, assuming that the GST of 10 lakhs is otherwise eligible for ITC. Tell me how much ITC can be claimed? 6 lakhs only can be claimed. Why 6 lakhs only can be claimed? Only the amount in respect of that 6 lakhs has only been declared in their return declared by the suppliers in their GST R1s. Hence, that 6 lakhs only can be availed. The balance 4 lakhs, even if they have filed after the due date, in the next month it will get reflected. In the next month they can avail it. If they are not at all filing it, he cannot avail it. Right. Next. So we have a few definitions here. What is input tax? I've already told what is input tax means. It is it means the tax which is paid on supply of goods or services or both made to a registered person. Basically, whatever tax we are paying on our goods or services or capital goods, that we call it as input tax. What are the conditions necessary for availing input tax credit? We have already discussed in a detailed manner. So all the conditions, 16 subsection 2, all the clauses, you have to write it here. Next. Can a person take ITC without payment of consideration for the supply along with the tax? Without paying consideration, can he avail ITC? Yes, he can avail ITC, but within 180 days, he has to make the payment. If he doesn't make the payment, whatever he has availed, then he is required to reverse it. What is the time limit for taking ITC and reasons thereof? So what is the time limit, guys? 30th of November following the end of the financial year or actual date of filing of annual return, whichever is earlier. What is the ITC availment? This we will talk about it later. ITC availment in case of newly registered person. That is relating to section number 18. Okay, this is not. Let us see here. Swastik Private Limited is a manufacturer of taxable goods. It purchased a machinery for 8 lakh rupees on which IGST of 14,400 is paid. The company has claimed a depreciation under the Income Tax Act 1961 on the full value of the machine, that is including the IGST component, as also availed ITC of 14,400 paid by it as IGST. They are capitalizing it in the books of accounts and they are also claiming ITC. Is it permissible? No. Any one you have to do, both you can't do. It will be a violation of 16 subsection 3. So these are all not things. Right, so this we can do. This is regarding the time limit and all. Let us see. Comfortable Private Limited is a registered under GST in the state of Odisha. It is engaged in the business of manufacturing of iron and steel products. It has received IT engineering services from Hi-Fi Infotech Private Limited for amount of 11 lakh rupees excluding GST at the rate of 18%, that too on 28th of October. So they have received that services on 28th of October. Invoice for service was rendered on 5th of November. Invoice was given in the month of November. Comfortable Private Limited made part payment of 4,20,000 on 30th of November. So initially what will happen? So whenever they have got the invoice, they will claim input tax credit. So how much is the total invoice they have given? 11 lakh rupees is the total invoice. That is exclusive of GST. If you add the GST component, how much it will come to? GST rate, how much they are telling? 18%, no? So calculate and tell me. Come on, take out your calculators and tell me the figures. 1,98,000 is GST figure. Huh? Okay, so 1,98,000 is GST figure. Total 12,98,000 is the total amount inclusive of invoice. Now what happened? Out of that, so what is the date of invoice? One more thing. Tell me what is the date of invoice from the question. The date of invoice is they have given it as 5th of November. So 5th of November is the date of invoice. Okay, 5th of November is the date of invoice. So payment should have been made within how many days? Within 180 days. So 5th of November they have given the invoice. Anyhow, let us see the facts once again. Comfortable Private Limited made part payment of 4,20,000 on 30th of November. So out of that 12,98,000, how much amount they have already paid? 4,92,000 they have already paid. See, when they are making the payment, that is on 30th of November only they have paid. Within 180 days only they have made the payment. So 4,92,000, this is inclusive of GST. Total amount is 12,98,000. Out of that, how much they have paid? 4,92,000 they have paid. That means how much amount is balance? 8,06,000 rupees is still yet to be paid. This 8,06,000 is also inclusive of GST. They are yet to pay it. Next one. What happened? Figure is wrong, huh? 4,20,000 they are telling in the question. Okay, sorry. Right, tell me then. 4,20,000 payment is already received. What is the balance? 8,78,000 they are still yet to pay. Next one. Then what happened? Being unhappy with the service provided by Hi-Fi Infotech Private Limited, it did not make the balance payment. Deficiency in service rendered was made good by Hi-Fi Infotech Private Limited by 15th of April of the next financial year. Comfortable Private Limited made the balance payment on 6th July of the next financial year. See, they are required to make the payment within 180 days. So what is the 180 days? Tell me, let us calculate how, on what date 180 days will fall. So November, invoice was given on 5th of November. So in November, 30 days. So take out 5. By 30th of November, 25 days are over. December, 31. January, 31. February, 28. Then we have March, 31. Till here how many? 146. Okay, then I think April also we can take. Here, till here, 176. So we need 4 more days. That 4th day will fall on 4th of May. So they should have made the payment on or before 4th of May. But when they are actually making the payment in the question? So they are making the payment within 6th of July. So tell me, within due date or beyond the due date? Beyond the due date. So you will be required to reverse input tax credit. Will you reverse full input tax credit of 1,98,000 or will you reverse only proportionate amount of input tax credit? Proportionate. So on what proportion? On this 8,78,000. Once again, you should not calculate it into 18%. This 8,78,000 is already inclusive of GST. So you have to do the reverse calculation. So 8,78,000 into 18 divided by 118. If you do that, directly GST figure you will get it. How much it is? How much it is? 932. So this much amount of GST they are required to reverse it. But however, they are making the payment. No. First what they will do is on 4th of May, they did not make the payment. So after this, whenever next GSTR 3B will fall, when the next GSTR 3B will fall on 30th of May, on 20th of May, they will file one GSTR 3B. So then what they will do? They will reverse it. How much they will reverse? 1,33,932 they will reverse. Not just reversing of this GST amount, even along with interest. Interest also they will pay it back. But however, they are making the payment on 6th of July, no? So in the month of May they will reverse, but they have made the payment on in the month of July. So in the month of July, once again they can avail input tax credit. 1,33,932 only they can avail. They can't ask for interest. Right. Examine the availability of ITC with Comfortable Private Limited in respect of the IT engineering services received by it from Hi-Fi Infotech Private Limited. So if you read the answer directly, in the given case, Hi-Fi Infotech Private Limited provides a service in the month of October, and Comfortable Private Limited receives the invoice in the month of November. Therefore, in view of the above provisions and assuming all other conditions are required for availing ITC having been fulfilled, ITC of 1,98,000 will be availed by Comfortable Private Limited for the month of November whenever it receives the invoices. However, proportionate ITC amounting to 1,33,932 will be reversed in GSTR 3B of Comfortable Private Limited for May month to be paid along with interest thereon, as full payment has not been made within 180 days of the issuance of the invoice, that is by 4th of May of next financial year. And ITC of 1,33,932 can however be availed by Comfortable Private Limited for the month of July when it makes the balance payment. You can re-avail it, but first you have to definitely reverse it. Next. So this is once again, let us see. Diwan and Sons of New Delhi has placed an order of 250 kgs of plastic granules at rupees 50 per kg on Karim Bros of Noida. So here they use multiple names and they will try to confuse you like anything. So better, my suggestion will be, whenever you are reading these kind of questions in the examination, either try to make a summary in the form of some diagram. You try to do it. Generally I do it now when I am explaining the questions in that format. You do try to present it in the pictorial format, or either try to highlight it. I think in these kind of questions even highlighting also will not work. You have to compulsorily give it some structure, some pictorial representation you have to do if you don't want to miss on the if you don't want to lose on the details. So here what they are trying to say here is two entities they are telling. One is Diwan Sons and the other one is Karim Bros. Who placed an order with whom? Who placed an order with whom? Come on, respond. Diwan Sons has placed an order for 250 kgs of plastic granules at the rate of 50 per kg. So they placed an order. That means who is the supplier here? Who is the supplier? Karim Bros is the supplier here. Diwan Sons is recipient. Okay, so they are placing 250 kgs at the rate of 50 rupees each. Then what happened? Of Noida, UP. Karim and Bros has agreed to deliver the goods at the warehouse of Diwan and Sons at New Delhi. What Karim Bros they told? What the supplier told? Okay, sir, we will deliver it to your premises, which is there at Delhi. While the order was getting packed at the factory of Karim Bros, Diwan and Sons got an order from Shubh Kamana Sales of Hapur, UP. Now once again they are telling one more party has come into picture. Who is that party? Shubh Kamana. So they got an order. So who got an order? Shubh Kamana did not get an order. They placed an order with Diwan Sons. So they placed an order with Diwan Sons. Fine. Next what happened? For same quantity, for 250 kgs of plastic granules at the rate of 60 per kg. So they placed an order with 250 kgs at the rate of 60. Now between the transaction in Diwan Sons and Shubh Kamana, who is supplier? Who is supplier? Diwan Sons is a supplier. Shubh Kamana is a recipient. Then what happened? In order to save on transportation cost, Diwan and Sons asked Karim and Bros to directly deliver the plastic granules to Shubh Kamana Sales at its godown, which is located in Hapur. Bill to ship to transaction. Very good. So Diwan Sons, what they have ordered? Sir, why to send it to me once again? They told that supplier, you do one thing. You please send the goods directly to my customer. So now Karim Bros will bill to whom? Diwan Sons. But they will ship to Shubh Kamana. Diwan Sons will bill to Shubh Kamana. So they will give one invoice. Karim Bros will give invoice for 250 kgs at the rate of 50 rupees. And Diwan Sons will give invoice for 250 kgs at the rate of 60 rupees. Now who can claim input tax credit? Both can claim the input tax credit. So Shubh Kamana also can claim the input tax credit because all the conditions they have fulfilled. Even Diwan Sons also can claim input tax credit. Sir, they have not received the goods. No. But they have given the clarification in the case of bill to ship to transaction, it will be deemed that even this entity has also received the goods. Right. Next. Accordingly, Karim and Bros has delivered the plastic granules at the godown of Shubhakamna Sales at Hapur. Examine the availability of ITC with Divan Sons and Karim Bros. Note all the parties are registered under GST and the applicable rate of GST is 18%. Can they both claim the input tax credit? Yes, both of them can claim the input tax credit. Next. Question number 19, not required now. We will do it later. So that's all. So these are the questions relating to section number 16, whatever discussion we had till now. Now we will proceed further and understand the remaining sections. So how many sections we are required to cover as a part of this chapter? I told what? 3 sections we are required to cover. 3 only, no? 16, 17, 18. Out of that 16 we are done. Now we have to cover section number 17. Section number 17 I told it talks about 2 things. What does it speak about? One is apportionment and the other one is blocked credit. So apportionment means, as I have told, sometimes you pay GST on your goods, on your input services, on your capital goods, but you will not be able to use 100% of the GST. You will be required to divide it. Only a proportionate amount you will be able to avail it. The other proportion you will not be able to avail it. So that is apportionment. Apportionment we will come back to later. Apportionment related discussion we will have it later. First we will try to understand blocked credit. So GST department says that if you have purchased certain goods, if you have received certain services, we will not allow you to take the input tax credit. Yes, you are a registered person. You have availed, you are a registered person, you have fulfilled all the conditions, you purchased that goods or services for the purpose of your business only, you have the intention to use it in the course of business only, all the conditions you have fulfilled, but even though still we will not allow you to take the input tax credit. So against some goods, the assets, the GST is completely blocked, fully blocked. They will not allow you to take even a single rupee of GST, even though you have fulfilled all the conditions, even though genuinely you have done the transaction. So why do you think government will say that? For what kind of goods and services do you think government will put this kind of restriction? We will not allow you to take single rupee of input tax credit also. Capital, not just on the capital goods, even on some normal goods and services also they will restrict. Why do you think the need? Just think from the common sense. Don't think from the provisions perspective. Think from a common sense. Why do you think the need arises for the government to completely block ITC on some goods and services? Because the nature of some goods and services will be such that it is very difficult for us to determine whether it is getting used for business purposes, whether it is getting used for personal purposes. It becomes extremely difficult. You might have a intention, to use it for the purpose of business only, but it becomes extremely difficult for the department to analyze, to verify really that has been used for business purposes and really that has been used for this commercial purposes or personal purposes. They can't find it out. It is very difficult to establish it. So that's why government don't want to take headache in all that items. So what they have told is, we don't want to fall into all that mess. We will do one thing. Those goods and services with respect to which it is very difficult for me to determine whether it is getting used for business purposes or getting used for personal purposes, wherever there is a difficulty, I will do one thing. I will not allow you the input tax credit only. I will not allow you input tax credit only. Say for example, one simple example I will tell you. I am having an office. I am a chartered accountant. I am having an office. I am a registered person. I am doing a very good amount of practice. I have taken a registration under GST Act. So now every day I have to come to my office. Every day I have to come to my office. I have to go back to my home. Sometimes I will have to go and meet the clients. Sometimes I have to go to the GST authorities or income tax authorities for representation related matters, client meetings. So much of travel I have to do. So what I have done is I have purchased a car. So that car I'm not at all using for my personal purposes. Even the car, whatever I have purchased, I'm not even taking that car to my home. That car I'm keeping it at my office only. So I come to office, and from the office, if I want to travel to any client place, if I want to travel to any GST offices or income tax offices for representational purposes, only for that purpose I will use the car. If I have any personal purpose, I will use my personal vehicle. I will not use that car other than for my official purposes. So can I claim input tax credit on that? So government thought, the government, what here the government says is, okay boss, your intention is very clear, but how we will come to know whether you have used it only for business purposes or not? How we will come to know? Say for example, you purchased a car. Instead of using, you are using it for office purposes also, and also one day you have to go on a vacation with your family. You took that car and went on a vacation. How the government will come to know whether you have used that car for vacation purposes, or you have used it for official purposes? Are you using for traveling to home? Are you using it for traveling to office or the client's premises? How the government will be able to know? Very difficult for the government to establish. No. So government told, no, I don't want to take all this headache. I will block the input tax credit. If you buy a motor vehicle, I will block the input tax credit. So like that, there will be certain goods, there will be certain services, which in respect of which it will be very difficult for the government to determine whether it is getting used for business purposes or it is getting used for personal purposes. Government doesn't want to take headache in that matter. So they have given one thumb rule. We'll give you a list of goods, we'll give you a list of services. If those goods and services are procured by any person, we will not allow the input tax credit. So let us try to understand what are that goods, what are that services in respect of which ITC has been blocked. So all that discussion we have it under 17 subsection 5. So in the 17 subsection 5, we have various kinds of goods. Like it will start from here. They have given various kinds of goods and services in respect of which ITC has been blocked. We will try to understand one by one. Okay. So we'll start with the first category of assets on which ITC has been blocked. First asset, they say motor vehicles for a transportation of passengers with a seating capacity of less than or equal to 13, including the driver. And for the purpose of this provision, we call it as ineligible motor vehicle. For the purpose of this clause, we will call it as ineligible motor vehicle. So they are telling, if you buy a motor vehicle, we will not allow you the input tax credit. But here there are some minute details which we need to understand. Number one, they are telling which kind of asset on which ITC will be blocked. Motor vehicle. When I say motor vehicle, what will come? Two-wheeler, one-wheeler, four-wheeler, everything will come. Okay. So any goods which you have purchased, any motor vehicle which you have purchased. When I say motor vehicle, which should be operated by a fuel, some kind of fuel should be there. So if you have any manual vehicles, that will not come under motor vehicles. So motor vehicles. And that too, those motor vehicles which are designed to carry passengers. Restriction is there only on those motor vehicles which are designed to carry passengers. So what will come under designed to carry passengers? Cars will come. Even motorcycles also will come. Even bike is also designed for transportation of passengers. You might be using it for other purposes, but the design is only for carrying of passengers. So cars, bikes, everything will come, whichever has been designed to carry the passengers. So restriction is there on motor vehicle, and only on that motor vehicle which is designed to carry passengers. Designed to carry passengers. And third condition, that motor vehicle which is designed to carry passengers, that should have a seating capacity of less than or equal to 13, including the driver. If you have purchased a motor vehicle designed to carry passengers only, but if it is having a seating capacity of more than 13, no restriction, you can claim the input tax credit. No restriction, you can claim the input tax credit. So let us try to understand different examples when it will be blocked, when it will be allowed. So first of all, repeat everybody. So what kind of asset on which ITC is blocked? It should be a motor vehicle. It should have been designed to carry passengers. It should have a seating capacity of less than or equal to 13. When all these three conditions are satisfied, then ITC will be blocked. So say for example, I am a chartered accountant, I am a registered person, I am running an office. So in order for my transportation, in order to travel to and from the office, I have purchased one bike. I have purchased one two-wheeler. I spent some 2 lakh rupees and I paid on that 2 lakh rupees 36,000 rupees of GST. 2,36,000 total I have paid. Can I claim ITC? Can I claim ITC? No. Why? Because it is a motor vehicle designed to carry passengers having a seating capacity of how much here? Boys, you tell me. Boys have a seating capacity. Bike have a seating capacity of how much? 4. 4 you have. Right. You are redefining the rules, huh? Right. So having a seating capacity of less than or equal to 13. Here 2 only. So on this ITC will be blocked. Can I claim ITC? No. See, since I am not able to claim ITC, can I capitalize it? Can I capitalize a GST component? Obviously you can do, no. See, under 16 subsection 3 what they told, either claim ITC, either claim depreciation. Here anyhow you are blocking my ITC. What I will do? I will capitalize and claim the depreciation. I will capitalize and claim the depreciation. That anyhow you can do. There is no restriction on that. Clear? Next. Say for example, I am a chartered accountant. I purchased one car. 4-wheeler I have purchased. This car I am going to keep it at my office only. I will use it only for the purpose of traveling to clients' premises and GST officers. Will I be able to claim the input tax credit? No, I will not be able to avail the input tax credit. Clear? Right. Say for example, there is a company. There is a plastic bottles manufacturing company. Now this company has purchased one we have this mini autos, no, mini trucks we say, right? So it has purchased one mini truck. It has purchased one mini truck. It paid some 15 lakh rupees for that mini truck, and they have also paid some 1,50,000 rupees of GST on that. So you tell me, on that can they avail this input tax credit? Mini auto they have purchased, mini auto in the sense mini truck they have purchased, and they purchased it for the purpose of transportation of their goods. They will have some raw materials and all which are required to be carried from here to there. So for that purpose they have purchased that mini truck. ITC be available, not available? Available, not available? ITC is available. Why ITC is available? It is a motor vehicle not designed to carry passengers. It was designed to carry goods. So no restriction. No matter whatever is the seating capacity, if the vehicle is designed to carry goods, there is no restriction. They can avail the input tax credit. Okay. Now, let me give you one more example. Infosys company is there. Infosys company, as you all know, in IT companies, they have to pick the employees and drop the employees at their locations. So what they have done is they have purchased one bus, and that bus they are using for the purpose of transportation of their employees. Is ITC allowed or blocked? ITC allowed or blocked? Say something. Allowed or blocked? Allowed. Why allowed? Why? Because bus will have a seating capacity of more than 13. Yes, it is a motor vehicle designed to carry passengers, but it is having a seating capacity of more than 13. So there is no restriction. Here they can avail the input tax credit. Understood? So restriction is there on motor vehicle designed to carry passengers having a seating capacity of less than or equal to 13. Then only they can, then only the ITC will be blocked. Now, one more case here. See, this we generally call it as ineligible motor vehicles. If you are buying this ineligible motor vehicles, you will not be able to avail input tax credit. See, but I know so many people who will claim input tax credit even on the motor vehicles also. See, what actually the procedure is, I will tell you. See, what is the procedure is, anybody, if you go and buy the motor vehicle also, on that also you will give you will get the input tax credit. On that also you will pay the GST. If you give your GSTIN number, even that supplier who sold you the motor vehicle, what he will do, he will file the GSTR1. While he filing the GSTR1, he will say to so and so person, I have sold a motor vehicle, and that will get reflected in your GSTR2B also. Whatever GST that you have paid on your motor vehicle, that you will get reflected on your GSTR2B also. But what you should do, you should reduce that amount and claim it. When you are filing GSTR3B, say for example, you purchased various goods here. Say for example, total some 20 lakh rupees of ITC is there in your GSTR2B. In that 20 lakh rupees of GST, in that 20 lakh rupees of input tax credit, which is reflected in your GSTR2B, some 2 lakhs is there, which is relating to the motor vehicle. But in 2B, how much figure it will show? Full value it will show 20 lakh rupees. But when you are filing GSTR3B, no, what you should do is, from this 20 lakh rupees, you should exclude that ITC, which is related to motor vehicle. And when you are filing GSTR3B, you are required to claim only 18 lakh rupees. Able to understand? So even on ineligible assets also, ITC will get reflected in your GSTR2B. But when you are claiming it, what you should do? You should exclude that figure and claim it. You should exclude that figure. This has to be done manually. Okay. So you should exclude that figure and claim it. Okay. So, but here what most of the people will do is, let us utilize it. If at all tomorrow if the GST officer comes and all, then we will see. Then we will see, they will decide, and there are so many people who will claim ITC, because sometimes working capital requirements will be there. They might have a huge amount of GST output tax liability. So what they will do, they will first claim the ITC, and they will use it. Later when the GST officer catches, or later when they give the intimation, then they will reverse it. So these kind of things also many people will do. But whatever it is, GST is blocked on motor vehicle having a seating capacity designed to carry passengers having a seating capacity of less than or equal to 13. It will get reflected in your GSTR2B, but you have to reduce it and claim in your GSTR3B. Next. No, it will not be carried forward. GSTR2B will not be carried forward. If you claim it, claim it. If you don't claim it, leave it. That's all. Nothing. It will not be carried forward to the next month and all. Next. See, however, they have given some relaxation. They have given relaxation to some category of persons. Keeping in mind their business requirements and all, they told that generally if you purchased an ineligible motor vehicle, we will not allow you to take the input tax credit. But the government told, keeping in mind the requirements of some people, keeping in mind the nature of business of some people, for some people we will allow the input tax credit. For some people, we will allow input tax credit even though it is a motor vehicle designed to carry the passengers having a seating capacity of less than or equal to 13. So if you are a registered person, if you are purchasing a motor vehicle having a seating capacity of less than or equal to 13, and if you are using it for certain eligible purposes, If you are using it for some eligible purposes, then they will allow you input tax credit. So what are that eligible purposes for which if you make use, you will be able to avail the input tax credit? So what they have told us, first one, if you are a person who are purchased a motor vehicle having designed to carry passengers having seating capacity of less than or equal to 13, but why you have purchased that motor vehicle is with the intention of making a further supply. With the intention of making a further supply, then they will allow you to take input tax credit. So what do you mean by making further supply? Say for example, I'm a second hand vehicle dealer. So what I have done is I purchased one motor vehicle. So say I paid some 10 lakh rupees of 10 lakhs worth of purchase of motor vehicle. On that 1 lakh 80,000 rupees of GST I have paid. Total 11 lakh 80,000 I have paid. But why I am purchasing that motor vehicle is I want to sell it. I'm not buying it for the purpose of using, or for, I am not using it. I'm not using it for the purpose of my purposes. I purchased that motor vehicle with the intention of making a further supply. Then the government told, if that is the case, we will allow you to take the input tax credit. We will not block the input tax credit, provided if you are purchasing it with the intention of making a further supply. One more category of persons, one more eligible purpose if you put to, then also you can avail input tax credit. So one more eligible purpose is, if you are purchasing that motor vehicle and you are using it for making a taxable supply. If you are making it for using a taxable supply of transportation of passengers. If you are using it for making a taxable supply of transportation of passengers. So like say for example, there is one person who purchased a motor vehicle, paid the GST also. Why he purchased that motor vehicle is he want to provide the cab services. He want to provide the passenger transportation services. So then also he can claim the input tax credit. Say for example, he's buying this car and he's providing passenger transportation services. He's picking and dropping the people and collecting the money from them. So then also you can avail the input tax credit. Now if you go by that logic, say for example, Infosys company is there. Infosys company purchased one car. So on that they have paid some 10 lakh rupees and 1 lakh 80,000 rupees of GST also they have paid. Total 11 lakh 80,000 rupees they have paid. Now why Infosys has purchased this car is, using that car they want to provide transportation to their staff. So they have some employees who are required to be picked and dropped at their locations. So for the purpose of providing transportation to their employees, they have purchased this motor vehicle. Now you tell me, can the Infosys company avail the input tax credit? Can the Infosys company avail the input tax credit? What is the second eligible purpose I told? If you are making a supply of passenger transportation services, then you can avail the input tax credit. Now going by that logic, will the Infosys company be eligible to claim the ITC? The answer is no. No. Why? Because they are not providing outward services of transportation of passengers to others. See, if Infosys is also somewhat a cab service company and they have purchased that motor vehicle where they are collecting the money from the customers and providing the passenger transportation services, then it would have been eligible. But here they are providing transportation services to their staff. They are not providing any outward service. They are just doing a service to their employees by picking them and dropping them at their places. Able to understand? So even if the Infosys company buys a car having a seating capacity of less than or equal to 13 for providing transportation services to their employees, still on that ITC will not become eligible. Able to understand? So it should be a outward supply, that too outward taxable supply of passenger transportation services. Understood? Clear? Next. One more eligible purpose they have told. If you are a person who are purchasing a motor vehicle having a seating capacity of less than or equal to 13 designed to carry passengers, but why you are purchasing that motor vehicle is for the purpose of providing outward supplies of imparting driving skills. For what purpose? Imparting driving skills. What do you mean by that? Driving school you are running. You purchased a motor vehicle and using that motor vehicle you are providing driving skills. So driving school you are running. Then also you can avail the input tax credit. So these are three eligible purposes. Apart from these three eligible purposes, if you are putting your motor vehicle to any purpose other than that, you can't enjoy input tax credit. But however, if you purchase that ineligible motor vehicle, but if you are putting to use for this three eligible purposes, then that recipient can happily avail the input tax credit. Understood? Clear and comfortable, everybody? Right. So this is what regarding first one. I have covered exceptions also. Next. Vessels or aircrafts. Second category of assets on which ITC has been blocked is what? Vessels or aircrafts. Vessels or aircrafts. So what do you mean by vessel? What do you mean by vessel? Ship. So it could be a cruise ship, it could be, even here when I say vessel, it could be designed to carry passengers, it could be designed to carry goods, whatever it could be. They did not specifically say vessels or aircrafts are designed to carry passengers, designed to carry goods. They did not say. Vessel could be anything. It could be designed to carry goods, it could be designed to carry passengers. Similarly, aircraft also, they have only told aircraft. That aircraft could be designed to carry passengers, that aircraft could be designed to carry goods, whatever it could be, doesn't matter. Okay, right. So if there is any vessel or aircraft, if someone is purchasing a vessel or aircraft, then the government has told on that whatever whatever GST that you have paid, that we will not allow it to you as a input tax credit. That we will not allow it to you as a input tax credit. So say for example, some Ambani is there. Ambani has purchased one hatch where he will go and enjoy with his family on a vacation. Will he be able to enjoy input tax credit? No, he will not be able to enjoy input tax credit. So someone has bought a aeroplane. So for their purposes, for whatever maybe, say for example, Ambani is there. Every day he wants to come to his office in a helicopter. So he purchased one helicopter. Every day he's coming to the office, and every day he's leaving the office in the helicopter. He's using for official purposes only. So you tell me, can he claim ITC on that? No, he can't claim ITC on that. So they told vessel or aircraft on which ITC is blocked. But later here also they gave some relaxation. If you purchased an vessel or aircraft, but you are using it for some eligible purposes. What, once again, if you are using it for some eligible purposes, then also they will allow you input tax credit. Sir, what are that eligible purposes? They told as it is the above three things. Whatever eligible purposes they have told for motor vehicles, the same three purposes they have told. What are that same three purposes? Number one, if you are making it with the intention of making a further supply. Let's say for example, ABG shipyard, one company is there. They are purchasing the vessels and they are selling the vessels. So can they enjoy input tax credit? Yes. Number two, using that vessel or aircraft if they are providing a taxable supply of passenger transportation services. If they are providing services of passenger transportation services, like say for example, Indigo Airlines, they purchased an aeroplane. Can they avail input tax credit? Yes. Why yes? They are providing the taxable service of passenger transportation services. Similarly, if someone has purchased a vessel, so why they are purchasing the vessel is using that vessel they want to provide passenger transportation services. In that case also ITC is available. And third case, they say if someone is buying a vessel, basically for vehicles we say driving skills and all, but for vessel we say navigation. If you are buying a vessel and using it for providing the services of navigation of vessel. Similarly, if you are buying one aircraft with the intention of providing the output services of how to fly an aircraft. Same, for vehicle we say driving, for vessel we say navigating, for aircraft we say flying. Basically here also driving classes you are conducting. So then also that ITC you can avail. And one more, in addition to that three, one more thing also they have told. One more eligible purpose also they have told. If you are purchased vessel or aircraft, but if you are using it for the purpose of making outward supply of transportation of goods. If you are using it for the purpose of transportation of goods, then also you can enjoy the input tax credit. If you are using it for transportation of goods, then also you can enjoy input tax credit. Clear everyone? So some companies that they have purchased an aircraft. Why they have purchased an aircraft is it is a cargo aircraft. They will use it only for the purpose of transportation of goods. Can they enjoy input tax credit? Yes, they can enjoy the input tax credit. Understood everyone? So this is what the second category of the assets on which ITC has been blocked. So what is that? Vessels and aircraft. But here they told 4 eligible purposes. For motor vehicles designed to carry passengers, there they did not say anything regarding transportation of goods. Why? Because in the asset only they told motor vehicles designed to carry passengers, that you can't use it anyhow for goods. No, so that's why that was not needed. Transportation of goods was not needed. But here vessels or aircraft, they might be designed to carry passengers, they might be designed to carry goods. But if you are providing outward services of passenger transportation services, and also if you are providing outward services of transportation of goods, in both the cases you can enjoy the ITC. Understood? So two class of assets we have covered on which ITC has been blocked. Now we will try to understand one more thing. Now we will try to understand service. General insurance, servicing, repair and maintenance relating to ineligible motor vehicles, vessels and aircrafts. So if you purchased any ineligible motor vehicle, if you purchased any vessel, if you purchased any aircraft on which ITC is blocked, even for that vessel, aircraft or motor vehicle, if you are incurring general insurance services, services, repairs and maintenance, on that also ITC is blocked. Sir, what do you mean by this? So once again, I am a chartered accountant. I purchased a car. So I purchased a car with the intention of using it on my business, using it for my business purposes. So now you tell me, on this car, can I take the input tax credit? No, because I am not putting it to use for any eligible purposes. Now for this car, I have paid insurance. Say for example, I paid 10,000 rupees of insurance. On that I have paid 1800 rupees of GST. For this car, I have undergone some servicing. 20,000 rupees of the service charges I have paid, 3,600 rupees of GST I have paid. For this car, I have undergone some repairs and maintenance, for which I paid some 30,000 rupees. On that, somewhere around some 5,400 rupees of GST I have paid. Can I claim ITC on that general insurance services, repairs and maintenance of that motor vehicle? No. So what they have told is, if ITC on the motor vehicle is blocked, even ITC on general insurance servicing, repair and maintenance also will be blocked. Similarly, say for example, I have purchased an vessel. So I am ineligible to claim the input tax credit on that vessel unless I put it for eligible purposes. ITC will be blocked. If ITC is blocked on vessel, on that vessel, if you are incurring any general insurance, on that vessel, if you are incurring any service or servicing, on that vessel, if you are incurring repairs and maintenance, even on that cases also ITC will be blocked. Same will happen even with the aircraft also. So if ITC is blocked on motor vehicle, vessel or aircraft, even ITC also will be blocked on general insurance, servicing, repairs and maintenance with regard to that aircraft, vessel or ineligible motor vehicle. Understood? Which implies that if I am eligible to claim ITC on motor vehicle, vessel or aircraft, I will also be able to claim ITC on general insurance, servicing, repairs and maintenance. Say for example, there is a person, he purchased a motor car. Why he is purchasing the motor vehicle is because he wants to provide passenger transportation services. He wants to provide passenger transportation services. Now you tell me, in that case, will he be able to avail ITC on the motor vehicle? Yes. If he is able to avail ITC on motor vehicle, even on general insurance on that motor vehicle, even on that servicing of the motor vehicle, even on the repairs and maintenance of that motor vehicle also, you can avail ITC. Clear everybody? Able to understand? Same thing happens even for vessel or aircraft. If you are eligible to claim the vessel ITC on vessel or aircraft, say for example Indigo Airlines is there, they purchased an aircraft. Why they are using it? For the purpose of providing passenger transportation services. Will they be eligible to claim ITC on the aircraft? Yes. If they are eligible to claim the ITC on the aircraft, even on the insurance, even on the servicing, even on the repairs and maintenance, whatever expenses they are incurring, on that also they will be able to enjoy the input tax credit. Thumb rule: if you are eligible to claim ITC on the asset, you will be able to claim ITC on even that servicing, repairs and maintenance also. If you are unable to claim the ITC on the asset, you will not be able to claim ITC on general insurance, servicing, repairs and maintenance also. Clear? However, for some other peoples also they have given some relaxation. For some other people also they have told they can claim the input tax credit. So who are they is, when such services of general insurance, servicing, repairs and maintenance are availed by manufacturer of ineligible motor vehicles, vessels or aircraft. If these are general insurance, servicing and repairs and maintenance services relating to the motor vehicle, vessel or aircraft, if they are received by the manufacturers of the motor vehicles, vessels or aircraft, even they can also avail the input tax credit. Like for example, if you take Tata Motors is in the business of manufacturing of the motor vehicles. For the motor vehicles, whatever they are manufacturing, they have taken general insurance policies, they have undergone servicing, they have undergone repairs and maintenance. Can they avail input tax credit? Yes, they can avail. Or say for example, ABG Shipyards is there, it is into business of manufacturing of the vessels. For the vessels, whatever they are manufacturing, they have taken general insurance, they have undergone servicing, they have undergone repairs and maintenance. Can they take input tax credit? Yes, they can do it. Even manufacturers of the vessels, aircrafts or motor vehicles also can claim ITC. Not just that, they say one more point here. These the services of general insurance, servicing, repairs and maintenance, that ITC can also be availed by supplier of general insurance services in respect of ineligible motor vehicles, vessels or aircraft insured by them. So now what do you mean by this? Say for example, a chartered accountant purchased a car. On that, can he claim ITC? No. So now what he has done is, from Tata Insurance, he purchased the insurance policy also. From Tata Insurance, he purchased an insurance policy. Say for example, some 10,000 rupees he has paid for the car insurance. On that, 1,800 rupees of GST he has paid. Total 11,800. Can he claim ITC on that insurance? Can he claim ITC on that insurance? No, he can't claim ITC on the general insurance also. Why? Because on asset, if ITC is blocked, even on general insurance, servicing, repairs and maintenance also ITC will be blocked. So now what I am doing is, I am driving that car. So one day while I am driving the car, my car was met with an accident. My car met with an accident. Okay, the car met with an accident and the car was damaged completely. But I need not worry. Why I need not worry? Insurance I have. So what I have done is, I have taken this car and gave it to the service center. And this service center has done all the repairs. Say for example, the repair cost has come to somewhere around 2 lakh rupees, and on that they have charged 36,000 rupees. Total 2,36,000 rupees is the bill. Now this bill they will give to whom? This bill who has to pay? As a car owner, I have to pay, or this bill will be given to insurance company? this bill will directly go to insurance company. This bill will go to Tata Insurance. So now they have to compensate for the 2,36,000 rupees. Now you tell me, can this Tata Insurance, they have got the bill now, 2,36,000 worth of bill they have got, on which 36,000 rupees is GST. Can the Tata Insurance claim that ITC? Yes, Tata Insurance can claim the ITC. So general insurance service provider, if he has incurred any expenses relating to other general insurance servicing, repair and maintenance of that ineligible motor vehicle or vessel or aircraft, then they can enjoy input tax credit without any trouble. Understood? Clear and comfortable, everybody? So that's what even they have told when it comes to general insurance servicing, repairs and maintenance relating to ineligible motor vehicles, vessels or aircrafts. If you are using it for eligible purposes, you can claim ITC. Or if you are a manufacturer of them, you can claim ITC. Or if you are a general insurance service provider, then also you can claim the ITC. Understood? So 3 categories of blocked credit we have seen. What are they? Number 1, motor vehicles, ineligible motor vehicles. Number 2, vessels and aircraft. Number 3, general insurance servicing, repairs and maintenance of ineligible motor vehicles, vessels or aircraft. One more point is regarding that vessel or aircraft is there, which is relating to leasing, renting or hiring of the motor vehicles or vessels or an aircraft on which ITC is not allowed. So what some people have started doing is, say for example, I am a chartered accountant, so I needed one car for the purpose of my travel purposes. So what the government says is, if you purchase a car, we will not give you ITC. If you purchase a car, we will not give you ITC. So what I thought is, let me do one thing. Why to purchase a car unnecessarily? I will take the car on rent. Every month I will pay the rent only. Every month I will pay rent. Say for example, I have taken one car on rent. Every month I am paying the rent of some 10,000 rupees. I am paying the rent to that car. So every month on that rental charges, I am paying even 1,800 rupees of GST also. Can I claim ITC on that renting? Since they have put a restriction only on purchase, assume that if they have put a restriction only on the purchase, if ITC is blocked, then what all these people will do? Instead of purchasing, they will start taking on rent so that they can enjoy input tax credit. But this is just nothing but a overriding of the provision or not. So that's why what the government told us, no. If on some asset, if on purchase of some asset, ITC is blocked, even if you have taken renting of that asset also, we will block your ITC. So if you purchase a motor vehicle, if ITC is blocked on you, for the same motor vehicle, if you are renting it out, then also we will block your input tax credit. Similarly, if you purchase a vessel, ITC will be blocked for you. You are not purchasing, you are taking that vessel on rent. On that renting also ITC will block. If you are purchasing an aircraft, if on ITC aircraft, if on aircraft ITC is blocked, even if you take that aircraft on rent, then also will block the ITC. That means if you would have been eligible to take the ITC on motor vehicle, vessel or aircraft, you will also become eligible to take the ITC on renting of these assets also. Say for example, I am a person who is providing passenger transportation services. So if I am providing passenger transportation services, if I purchase a motor vehicle, will I be able to take ITC? Yes. If I am eligible to take ITC, but I am not purchasing, I am renting that motor vehicle, will I be able to take ITC? Yes. If you are eligible to take ITC on purchase of the motor vehicles, vessel or aircraft, you will also be eligible to take the ITC on renting or leasing of that motor vehicle, vessel or aircraft. Understood? So that's what they have told. In addition to that, few more things also they say. Say for example, I'm a person, so I'm giving cars on rent. I'm into business of giving cars on rent. Say for example, one day a company came to me. X Limited came to me. So X Limited company came to me and told, we needed some 10 cars on rent. I agreed. Okay, sir, I will provide 10 cars on rent for you. So why this company needed that is for doing some transportation of their employees or whatever could be the reason. This company came to me and told, I want 10 cars on rent. So I told, okay, sir, I will give you 10 cars on rent. See, on this renting, can this company claim ITC? No, company cannot claim ITC. Why? Because for a company, ITC is blocked if they purchased it. If on purchase ITC is blocked, even on renting also ITC will be blocked. Now this person who is into renting of that cars, this person doesn't have enough of cars. He's having 9 cars only. So what he has done is, he went to another renting person, who is into business of renting of cars, and he told, boss, I have agreed to rent 10 cars to X Limited, but I don't have 10 cars, I have only 9 cars. I want you to rent me a car. I want you to rent me a car. So he told, okay boss, I will rent a car for you, 10,000 rupees, 1,800 rupees of GST, total 11,800. Now can this person avail input tax credit? Yes. Why? Because he is into same line of business. So if you are engaged in making the same kind of supply, same kind of outward supplies, then also you can enjoy the input tax credit. Clear everyone? Next, one more relaxation also they have given. One more relaxation also they have given. See, what they have told is, say for example, Infosys company is there. Infosys company, if they purchased a car for the purpose of transportation of their employees, if they purchased one car having a seating capacity less than or equal to 13, if they purchased a car for the purpose of transportation of their employees, will they be able to claim the ITC? On purchase, they will not be able to claim the ITC. So generally, if on purchase ITC is not available, if they have taken that car on rent, then also ITC should have been blocked. If they have taken that car on rent, then also ITC is blocked. But why Infosys company has taken that car on rent is because they want to provide transportation to their employees. They want to provide transportation to their employees. And providing of transportation to their employees is a mandatory under some statutory obligation. Is mandatory under statutory obligation. They told in that case on renting we will allow you to take the input tax credit. In that case we will allow you to take the input tax credit, which means if I will tell you all the different scenarios here. If Infosys company is there, it is required to mandatorily provide transportation to their employees. In order to provide transportation to their employees, they purchased a motor vehicle having a seating capacity less than or equal to 30. They purchased a motor vehicle for the purpose of providing transportation to their employees, and providing transportation to their employees is mandatory under a statutory obligation. ITC allowed or blocked? Purchased. Blocked. If they purchase, it will be blocked. However, Infosys company, they are required to provide transportation to their employees as per some statutory obligation. It is mandatory, but for providing the transportation, instead of purchasing a motor vehicle, they have taken that motor vehicle on rent or hire. Can they avail input tax credit on the renting services? The answer is yes. The answer is yes. You have to remember this. So, purchasing of motor vehicle for transportation of their employees is blocked. But however, if you have taken a motor vehicle on rent for providing transportation to the employees, but it is mandatorily required under some statutory obligation to provide passenger transportation services, then on renting you can claim input tax credit, but on purchase you can't take input tax credit. Clear? Able to understand? So that's what you will be able to find it here. So if you see, so renting, leasing or hiring of motor vehicle, vessels or aircrafts on which ITC is blocked. When you are making similar kind of outward supply, then you can claim ITC. And also when such services are provided by an employer to its employee under a statutory obligation, then also it will be allowed. Purchase you will not get, but for renting they have given this relaxation, provided if it is a statutory or mandatory obligation under some act. Clear? So how many things we have covered? How many blocked credits we have covered? 4 blocked credits we have covered. What are they? Number 1, motor vehicles, vessels and aircrafts. General insurance, servicing, repairs and maintenance with regard to that ineligible motor vehicles, vessels or aircrafts. Leasing, renting of ineligible motor vehicles, vessels or aircrafts on which ITC is blocked. Right. So 4 we have covered. Okay. So let us proceed further now. See, regarding this motor vehicles and all, there is one more clarification which we need to understand. So what is that clarification is? So one doubt has come before the GST department. So what is the doubt which has come before the GST department is, say for example, one automobile company is there, one automotive dealer is there who will sell the cars and all. So now what he will do is, generally he will purchase a car. He will purchase a car from the manufacturer. So he will purchase a car, and that car he will make a further supply. He will keep it in the showroom and that car will be sold to the customers. So whatever motor vehicle he is purchasing with the intention of making a further supply, on that ITC will be allowed or not allowed? Allowed. Why? Because he is making a further supply. He is using it for eligible purposes, so he can avail the ITC. There is no doubt about it. But now let me give you a different scenario. Here what happened is, this automotive dealer, he purchased one car. He purchased one car from the showroom, from the manufacturer. He purchased one car. Now why he purchased that car is not for the intention of making further supply, not for making further supply, but that car he will use it as a demo vehicle. That car he will use it as a demo vehicle. So what do you mean by demo vehicle? Say for example, I went to Hyundai showroom. So in the Hyundai showroom, I want to buy a Creta car. So that what Hyundai showroom is doing is, they are buying the Creta cars from the showroom, from the manufacturer, and they will sell it if the customer comes. So whatever cars they are purchasing and which they will sell it to the customers, on that can they enjoy input tax credit or not? Yes. But see, when customers go to the car showroom and when they want to buy the car, they want to test drive. They can't give a new car for test drive to every customer, no. So what they will do? One demo vehicle they will keep. So that Hyundai showroom also has purchased one car which they are using it as a demo vehicle. They did not purchase it with the intention of making further supply. Instead, they will use it as a demo vehicle. If any buyer comes and he wants to do a test drive, they will use that demo vehicle for the purpose of test drive. Now the doubt has come whether on that demo vehicles ITC can be availed or cannot be availed. Whether ITC can be availed or cannot be availed. So the department has clarified, yes, even though you are not directly making a further supply, but the intention of keeping that as a demo vehicle is to facilitate the further supply only. You are keeping the demo vehicle so that people will do the test drive, they will know the experience, and that will help you to sell your remaining cars, same model of cars. So that's why what the department told is, even on that test drive vehicles or this kind of demo vehicles also, the company, these car showroom dealers will be able to avail the input tax credit. They can enjoy the input tax credit. There is no restriction on that. So that is what the clarification. This is also one recent circular, important from the examination perspective, right? Yeah, so if I read the important point here, ITC blockage does not apply to motor vehicles that are supplied or used for further supply of similar motor vehicles. So since demo vehicles they help in the sale of similar motor vehicles, they are considered used for making a further supply of such motor vehicle. Therefore, ITC for demo vehicle is not blocked. It will be allowed as a input tax credit. Next one. Now they talk about certain composite supplies and certain services which are on which ITC is blocked. Mainly they talk about the services on which ITC is blocked. So on which ITC is blocked, there are list of services. Let us try to understand one on one. So food and beverages. If you are buying food and beverages, whether for your business purposes also, still they will not allow the input tax credit. Say for example, I have my office. In my office, one day I am planning for a team lunch. To my staff, I have to feed. So what I have done is I placed an order where I want to I am conducting some team lunch for my staff only. I will serve that food. So I spend some 10,000 rupees, purchased a food, and that food I want to spend it. I want to give it to my team. Tell me, am I using it for personal purposes or business purposes? I've given it to my staff, not to my family. I've given it to my staff for my business purposes. Should I claim ITC or not? The department told no, ITC is blocked for you. If you are buying food and beverages, on that ITC you will never get. Whether you are using it for personal purposes, whether you are using it for business purposes, you will not be able to enjoy input tax credit. Say for example, in these software companies and all, they will give coffee stations and all will be there. At the workstations, they will have this common area where they will supply coffee and all to their staff. For that, they purchase coffee powder and all. On that, can they avail input tax credit? No, they can't avail. Why? Because ITC on food and beverages is blocked. For whatever purpose you use, you will not be able to avail the input tax credit. Not just that, even on outdoor catering services also ITC is blocked. So what do you mean by outdoor catering service? We already know, no? So say for example, my firm has just completed 10 years. So I wanted to conduct some 10 years anniversary. So I'm conducting a 10 years anniversary. I called one caterer. I told, boss, I'm conducting an office anniversary for 10 years. You please provide catering services to me. See, this services, whatever I'm receiving, for my business purposes or for my personal purposes? Business purposes only, but still the department has told on catering services, we will not allow you the input tax credit. Then beauty treatment services. See, say for example, some famous actor is there. She wants to get some beauty treatment. So why she is getting the beauty treatment is to get more movie offers. That is purely business, no? So some movie actor is there. She want to get some beauty treatment. Why she wants to get the beauty treatment is so that she can get more offers for movies and she can do more business. She can pay more GST. So that is her intention. That's why she is getting the beauty treatment services. Will ITC be allowed or not allowed? First of all, is it business purposes or personal purposes? Very difficult to determine, no? So that's why government did not take the chance there. If someone is receiving the beauty treatment services, on that we will not allow you input tax credit. Next one, healthcare services. Anyhow, healthcare services are exempted. On that they will not charge GST only. So there is no purpose in saying that. If at all you receive any health services also, no one will collect the GST from you. If at all GST is collected from you, you will not be able to avail input tax credit. Next, cosmetic surgery and plastic surgery. This we know, this will not come under healthcare services. So if some actor, someone is undergoing cosmetic surgery, plastic surgery, they want to fix their nose, they want to fix their cheeks and all, some actor is undergoing it because once again he wants to get more movie offers. For the purpose of business only he can argue, but the government says we will not allow the input tax credit. And then similarly, life insurance and health insurance services. So if you have taken, for example, I am running my business, I have taken a health insurance policy. what is my logic is, if I stay healthy, if I get my treatment on time, then only I will be able to continue the business, then only I will be able to run the business. I will say I am getting my life insured, I am getting my health insured for the business purposes only. Okay, equal, good argument, but the GST department told we will not allow the input tax credit. So whether it is business, personal, it is very difficult to establish in these circumstances whether it is for business purposes or for personal purposes. So that's why government doesn't want to take any chance here. They told in respect of food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, life insurance and health insurance services, we will not allow you to take input tax credit. But however, they told that if these services are getting received by another person who is also into same line of business, if the recipient is into a same line of business, then they can enjoy the input tax credit. So say for example, I'm a restaurant. So as a restaurant, what I'm doing is I am purchasing goods. I'm purchasing food items. Like for example, food and beverages I'm procuring. Why food and beverages the restaurant is procuring? Because they want to make a further supply. So they are into same line of business. They are buying the food and they are selling the food. Can the restaurant company enjoy the ITC? Yes, they can enjoy. Similarly, say for example, there is one caterer. There is one catering company. Say for example, some X Limited company, they want to celebrate their 5 years of anniversary. They have given the outdoor catering contract to this so and so contractor. So Mr. X is the caterer. To him the order has been given. And as per the agreement, he needs to supply some 10 items. He needs to supply some 10 food items. Along with that, some 2 drinks is required to submit. Two drinks is required to provide. Total 12 items is required to provide. This caterer accepted. But out of that 12 items, one item he don't know how to prepare. One item he is not an expert. Say for example, gulab jamun. This company has asked for gulab jamun also as a part of catering service. But this person is not so well versed with preparation of it. So what he has done is he went to another caterer. He told, boss, I got so and so order. I want you to provide only gulab jamun catering services to me. So he provide, okay, I will provide that for you. So this caterer is providing the services to another caterer. So can this caterer avail input tax credit on that catering services? Yes. Why? Because they are into similar line of business. Same thing will even apply for beauty services also. So what do you mean by beauty services? Say for example, there is one event happening. There is one fashion event happening. So one day, one company has got, say for example, there is a beautician, Mr. or Mrs. X, whoever is there. So she provides beauty services. She does that makeup and all. So one day, one event is happening, fashion event is happening. There are total of some 20 models are there which are going to participate in that fashion event. And she agreed to do that makeup services for that 20 people. But on the day of event, she knows she will not be able to handle all the 20 models at once. So what she has done is she went to some another beautician and told, so and so event I got, so I am required to provide makeup to 20 models, but I don't have enough of bandwidth there. So I want you to help me out. Out of 20 people, 5 people you provide the makeup, remaining 15 I will provide. For that I will pay you the consideration. So this beautician is providing services to another beautician. So can she avail the input tax credit? Yes, she can avail the input tax credit. So if you are providing the services to who are in the same line of business, they say one more thing. They say one more thing also here. So when ITC will be available is such goods and or services when used by a registered person for making an outward taxable supply of the same category of goods or services or as an element of taxable composite or mixed supply. They say one more thing. Either the recipient is using it for making the same outward supply or they are using it as one of the element of a composite or mixed supply. See, providing same category of service we understood, but what is this providing it as a one of the element of composite or mixed supply? Let us try to understand this with the help of once again an example. Say a company X Limited is there. They want to conduct some 10 years anniversary they are celebrating. So they want to do a very grand event. That event was given for event management company. There is one event management company Y Limited. To that event management company they have given that event responsibilities. So as a part of that event management, that company is required to take care of multiple activities. They are required to take care of decoration, they are required to take off guest receiving, they are required to do that fun activities also, and as a part of that they are also required to look after food catering services also. They are only required to provide. So now this event management company is providing multiple services. For that they are receiving some 10 lakh rupees of consideration. So for that 10 lakh rupees, they are providing decoration services also, guest receiving services also, food also, and even fun related activities also they are providing. So you tell me it is a composite supply or not? event management service is a composite supply, or even you can, if it is naturally bundled, composite supply. If it is artificially bundled, mixed supply. Whatever it is, multiple services are getting provided at one price. Now this event management company, as a part of that event management event, they are even required to provide food or not. They are even required to provide catering or not. So what they have done is, this event management company went to another person, Mr. A, who is a caterer, and they told, boss, you provide catering services to us so that we can provide them at this event. We can provide them at this event. So now this person has provided catering services to this event management company. So event management company is receiving outdoor catering services. They are not making the same category of outward supply. Event management company is not receiving catering services to provide catering services. But this event management company is receiving catering services to provide event management services. In that, one of the element is what? Catering. Able to understand? Then also can they enjoy input tax credit? Yes, then also they can enjoy the input tax credit. Able to understand? Clear and comfortable, everybody? So these services, which services? Come on, repeat everyone. These goods or services: food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, life insurance and health insurance. Generally they are not on which ITC is not available. But when ITC will become available? When the recipient is also providing the same category of the goods or services, or he is using it as one of the element of composite or mixed supply. And one more thing also they say here, if these kind of services are receiving by some employers for the intention of providing the same to their employees, and they are under a statutory obligation to provide these things to their employees, then also those employers can avail the input tax credit. If these food and beverages, outdoor catering, beauty treatment, etc., if these services are getting received by some companies, basically some companies are receiving it to provide these services to their employees, and providing them is an statutory obligation, is them mandatory under some law or regulation, then those companies also can enjoy input tax credit. Like for example, say Tata Motors company is there. Now Tata Motors company, they have one factory. As per the Factories Act, inside the factory they have to run a canteen, and in that canteen they have to provide food to their employees. That is a mandatory requirement. Running the canteen in the factory is a mandatory requirement under Factories Act. So they are under a statutory obligation. So in order to run that factory, this Tata Motors is receiving food and beverages. They are receiving catering services. On that, can they avail input tax credit? Yes, they can enjoy input tax credit. Why? Because they are under a statutory obligation to provide the same to their employees. It is mandatory for them under some law or regulation. So that's why in those cases they can avail the input tax credit. Understood? Shall I proceed further? Right. Next. Right. So this also we have covered. Such goods and or services when provided by an employer to its employee under a statutory obligation, then also you can enjoy the input tax credit. Next category of service on which ITC is blocked. What is that? Membership of a club, health and a fitness center. So if you are taking a membership of a club, if you are taking a membership of a gym, if you are taking a membership of some fitness center, on that if you have paid any GST, that GST you can never enjoy it as input tax credit. But however, if some company is taking it for their employees, so Infosys company is there, for their employees they have taken the subscription for a gym, they have taken a membership of a fitness center, and it is a statutory obligation on the employer to provide these activities to their employees, then they can enjoy ITC. If there is no statutory obligation, out of concern for their employees, if they are providing it, then you can't enjoy ITC. So if you are providing it under a statutory obligation, it is mandatory under some law or regulation, that's why you are providing these facilities to your employees, then you can enjoy ITC. Next one, travel benefits extended to employees on an vacation, such as leave or home travel concession. Now what is that is, say for example some company TCS is there. Now they have a few employees. For some employees they want to give some travel allowances. So this TCS company told, boss, if you want to go to any destination, go it. Say for example they are telling, we'll do one thing, we'll book your hotels at some location. At Mumbai, if you want to go and visit Mumbai, at Mumbai we will book the hotels for you, we will provide the transportation for you, we will only book the transportation for you, so everything we will book, so you just go and enjoy that. So now this company is receiving that leave services relating to leave, travel or concession for the purpose of their employees. On that services they might have paid GST, on the hotel they might have paid GST, on the transportation they might have paid GST. Now the government says on that also companies can't claim the input tax credit unless providing that leave, travel or providing that things are mandatory under some law or regulation. Because of some statutory obligation you are providing these services to the employees, you can enjoy input tax credit. If there is no statutory obligation, if you are doing it out of your own choice for the sake of your own employees without any obligation, then the government told, we will not allow ITC in those circumstances, we will we will not allow you the ITC. Clear? Right. So this category also we have covered. So what and all we have covered in this category? So six some general services we have covered. Then membership of a club, health and fitness center, and travel benefits extended to employees. Clear? Next two are very, very important. Next two things are very, very important. One is regarding works contract services. Other one is self construction of immobile property. So both are very important. Let us try to understand. Little bit complicated also. If you pay attention, I will make that simple for you. Right. So this thing also we'll try to learn it with the help of very excellent examples. Please, I need your complete attention. Focus now. So what kind of services they are telling on which ITC will be blocked? Works contract services. 17 subsection 5 clause C. It says works contract services. On the works contract services, ITC will be blocked. But first of all, what do you mean by works contract service? Did I explain you? Works contract service. Say yes or no. Say something. Yes, then tell me what I have explained. That is job work. That is job work. Works contract, I know I have explained. Okay. Using goods and say no, you are saying half of the answer. Using goods and rendering some services. So that we call it as works contract. So if I am providing some supply in which I am supplying goods also, yes, I am supplying services also. That we call it as a works contract. Is it? Every time when I supply goods and every time when I supply services as a part of something, will that always be considered as works contract? Say for example, printing industry example I have told at one place. So I am doing the printing services also. Along with that, I am also providing paper, pins, all that things also I am providing. Can that be called as works contract? That is also a supply where I am making supply for a single price. I am supplying goods also. I am supplying services also. Can that be called as a works contract? No, not a works contract. Works contract doesn't mean all the contracts where you are making supply of the goods as well as services. What actually will fall under works contract services is if I am making some supply in relation to immovable property. If I'm making some supply in relation to immovable property, and in that supply if I'm providing goods also, if in that supply I'm supplying services also, then only I call it as works contract. If you take the printing example, I'm providing goods, I'm providing services, but that is not an activity related to immovable property. I can't call it as a works contract. So in order to qualify as a works contract, I should be making some supply with regard to immovable property. I should be doing some activity with regard to immovable property in which goods are also involved, services are also involved for a single price. That I call it as works contract. So basically, say for example, I'm a contractor. So there is one person who wants to construct a building. There is a landowner, he wants to construct a building. I agree to do the construction for him. I agree to do the construction for him. So as a part of that construction, whatever goods are required in that construction, like sand, cement, iron, steel, that also I will only provide. And whatever services which will be required, like labor services and all that, that also I will only provide. I agree to provide all that services at a price of 1 CR. So for this 1 CR, I am also providing the goods, I am also providing the services, that too in relation to an immobile property. This will qualify as works contract. This will qualify as works contract. Now 17 subsection 5 clause C says that if you are receiving any works contract services in relation to immobile property, works contract services in relation to construction of an immobile property, on that they told they will not allow us the input tax credit. Sir, what do you mean by this? Let me try to give a few scenarios. Once again, pay attention guys, important discussion we are going to have. Reliance Industries Limited is there. Okay. They want to construct one factory. They want to construct one factory. They have a land. They want to construct one factory on that land. So what they have done is they went to one contractor. One contractor told, sir, I will construct that factory for you. I will construct that factory for you. So he told, sir, I will do the construction for 1 CR. For 1 crore rupees, I will do the construction for you. On that, applicable rate of GST is 18%, total 1.18 crores. Okay, so we agreed for the deal. So now this person, what service he is providing? Works contract service is providing. Why? Because he agreed to do some activity in relation to the immobile property, and as a part of that supply, goods are also involved, services also involved. Now what Reliance Industries Limited will do for this expenditure? Is it a capital expenditure? Is it a revenue expenditure? capital expenditure. Though they will go and capitalize this in their books of accounts. They will treat it as an asset in their books of accounts. So now what the government says here is, if you are providing any works contract services in relation to the construction of immobile property, department told on this we will not allow you the input tax credit. You will not become, no. Say for example, you are ready to capitalize only once a year. You are ready to capitalize only once a year. You are not ready to capitalize GST also. But still the government says what? We will not allow you input tax credit on the works contract in relation to the construction of immobile property. Even if you don't want to capitalize the GST also, still we will not allow you to take the input tax credit. Understood? Right. Second case, let me give you one more case. See, if they are not permitting me to take the input tax credit, what I can do then? I can capitalize it. That anyhow I can do. But what the government has strictly restricted, we will not allow you to take input tax credit on the construction of immobile property. Let me take another case. Say for example, Infosys company is there. Infosys company is already having an office building. They have 3 floors of office building. On that, they want to construct one extra floor. They want to construct some extra floor on the building. So they already have this building. They just want to construct this extra floor. So one person came forward and told, sir, I will construct that extra floor for you. I will charge you some 20 lakh rupees. In that 20 lakh rupees, I will provide whatever goods required, like cement, sand and all I will provide. Along with that, services also I will provide. Okay. So on that, applicable rate of GST is 18%. Some 3,60,000 rupees of GST also I will charge. 23,60,000 I will charge. Now, this is in the nature of capital expenditure or not? This Infosys company, he is providing basically here works contract services in relation to the immobile property. So on this 20 lakh rupees, whatever works contract services, and this extra floor will be capitalized by the Infosys company in their books of accounts, because it will fulfill the asset criteria, fixed asset criteria. It will fulfill it. They will capitalize it. Now, what the government says is, on this also we will not allow you to take the input tax credit, because it is a works contract service in relation to immobile property. Now, let me give you one more example. Say for example, Infosys company is there. They already have this building. So now in this building, on the ceiling, they have some issue. Some ceiling got broken because of wear and tear or something, whatever it is, the ceiling was broken. That ceiling needs to be fixed. So they gave, the one contractor came forward and told, sir, I will fix that ceiling for you. Your ceiling is having some damage. I will fix that ceiling for you. So for that, for fixing that ceiling, goods also will be required. Cement, sand, steel, all that you will require. Along with that, services also you require. So this person told, sir, I will fix everything for you. I will also take care of the goods. I will also take care of the services. So you pay me some 1 lakh rupees. I will fix that ceiling for you. On that, applicable rate of GST is 18%. Total 1,18,000 rupees. Is this also a works contract? Yes, this is also a works contract. See, works contract means what? If you are making any activity with regard to the immobile property, and as a part of that activity, you are supplying goods also, you are supplying services also. All such activities will qualify as works contract. So here also this person is providing works contract services. Now what the company has done is, this expense they have incurred, but that does not fulfill the criteria of fixed asset. That does not fulfill the criteria of the fixed asset as per AS 10. So this expenditure is a regular routine repairs and maintenance. They are treating it as a revenue expenditure. What they are treating it as? Revenue expenditure in the books of accounts. Now, can this company claim input tax credit on that works contract services? This 18,000, can they avail ITC? The answer is yes. Yes, they can avail input tax credit. They can avail input tax credit. So basically, the point which I want to conclude here is, if you are an entity receiving works contract services with regard to the immobile property, and that expenditure qualifies as a capitalization under accounting standards, it is not your choice. It is not a choice given to you. If you want, you capitalize, and you capitalize. If you don't want, take the input tax credit. No, you should not see that way. So if you have incurred, if you have received any works contract services in relation to immobile property, if that fulfills the criteria of capitalization in your books of accounts as per accounting standard, on that ITC will be blocked. If you are receiving any works contract services in relation to immobile property, which will not qualify for capitalization, then you can take the input tax credit. Clear, everyone? So what is the important conclusion I have made? If you receive works contract services in relation to construction of immobile property, which qualifies capitalization, on that ITC will not be allowed. ITC will always be blocked. On the other hand, if you are getting any works contract services in relation to immobile property, which will not qualify as capital asset, which will qualify as revenue expenditure only, on that you can claim ITC without any restriction. Comfortable? Shall I proceed further? Right. So now, few more circumstances I have to explain. Few more things I have to explain. Now what the government says is, say for example, let me give you a scenario here. Fine. See, whatever you are able to see here, this is actually one plant and machinery. So if you see here, uh, does this plant and machinery qualify under immobile property definition? Does this plant and machinery qualify under immobile property definition? What is the definition of immobile property? Land, benefits arising out of land, something which is permanently attached to the earth, something which is permanently fastened to the earth. So now this is also something which is fastened to the earth or not? This is also something which is permanently attached to the earth. So whatever the thing you are able to see here, this is also a immobile property. This is also a immobile property. But this is a plant and machinery. This is a what? Plant and machinery. So now say for example, some company wants to construct this plant and machinery, which is an immobile property actually. So this immobile property they want to construct. So one contractor came forward and told, sir, I will construct this plant and machinery for you. And for this, whatever material required, so this iron and steel, this cement, sand, this poles and all, whatever is required, we will only bring all that material. So we will only supply the goods, we will only provide the services. You give us total 50 lakh rupees, we will construct that immobile property for you. We will construct that immobile property for you. Is that a works contract? Yes. Why? Because it is a supply in relation to an immobile property, and in that supply, goods are also included, services are also included. So this will qualify as works contract, and this will be fulfilling the criteria of capitalization or not? This will be fulfilling the criteria of capitalization. What did I say? If you are receiving works contract services in relation to immobile property, which fulfills the criteria of capitalization as per accounting standard, on that ITC will be blocked. Say for example, on this 50 lakh rupees, some 9 lakh rupees of GST he has charged, total 59 lakh rupees of invoice he has given. So if you go by the rule, whatever I have told, this 9 lakh rupees of input tax credit is blocked. They should not avail it. But what the GST department has told is, this they can avail. This they can avail it as input tax credit. So I told 3 cases here. Generally, what is the general rule is, if you receive any works contract services in relation to immobile property which fulfills the criteria of capitalization, what you should do? ITC will be blocked. But however, you are receiving works contract services in relation to immobile property only, but that immobile property qualifies as plant and machinery, eligible plant and machinery. What will qualify as plant and machinery? We will see it in a while now. But in case if you are receiving works contract services in relation to immobile property, but that immobile property qualifies as eligible plant and machinery, even though if it is getting capitalized in the books of accounts, still you become eligible to claim ITC. However, if you are receiving works contract services in relation to immobile property, which does not require the criteria of capitalization only, that you can always avail input tax credit. Able to understand? Comfortable everybody? So if I have to give you one simple chart, if you are receiving works contract services in relation to what? Immovable property. First, what we need to check, is it fulfilling the criteria of capitalization or revenue? So we need to check, is it capitalized or is it treated as revenue expenditure? This you have to go by accounting standard, not as per your own choice. If it is qualifying as revenue expenditure, what we can do? We can claim it as input tax credit. In case if it is getting capitalized, then we need to check whether that immobile property is fulfilling the criteria of eligible plant and machinery. If it is fulfilling the criteria of eligible plant and machinery, if it is fulfilling the criteria of eligible plant and machinery, ITC you can avail. If it is not an eligible plant and machinery, then ITC is blocked. Not an eligible plant and machinery, then ITC is blocked. You can't claim the input tax credit. Understood? Clear and comfortable? They have given one more case also. There is one more case in which you can avail the input tax credit. If you are a person who is receiving works contract services in relation to construction of immobile property, and even though it is fulfilling the criteria of capitalization, still you can enjoy input tax credit. In which cases you can enjoy input tax credit? Say for example, there is a company, okay, they want to construct a factory. That contract they have given to one contractor. He agreed to provide works contract for the construction of the immobile property. Say for example, he given a contract for 1 CR. He got a contract for 1 CR. Applicable rate of GST is 18 lakh rupees. Total 1.18 CR worth of invoice he has given. Now this company is constructing immobile property which is not qualifying as a plant and machinery, and it fulfill capitalization criteria. Can this company claim ITC? No. This company can't claim ITC. No. Why? Because it is a construction of immobile property, capitalization, not a plant and machinery. So they can't claim ITC. But this contractor, he doesn't have enough of resources. This contractor doesn't have enough of resources. He did not do big projects till now. He was doing small projects only. This is the first big project he got. He will not be able to complete the construction on his own. So what he has done is he went to another works contractor. He went to another works contractor and told, boss, I got a contract, but I am not able to do the entire construction on my own. You please provide me the services of constructing. You please provide me works contract services. He told that, say for example, first 2 floors I will construct, third and fourth floor you construct it for me. So for that third and fourth floor, whatever construction you have to do, you only provide the goods, you only provide me the services. So basically this works contractor is providing the services of works contract in relation to immobile property to another works contractor. Now you tell me, can this works contractor avail ITC? Say for example, he is providing the services amounting to 50 lakh rupees. He gave the invoice of 9 lakh rupees to the another works contractor, total 59 lakh. Now, can this contractor claim ITC of that 9 lakh rupees? Yes, this contractor can avail the input tax credit of 9 lakh rupees. Why? Because he is into same line of business. Understood? So summary, once again, if I have to give you entire summary. So come on, participate. Works contract services in relation to construction of immobile property, qualifying as capital asset in the books of accounts of the recipient, and that is not falling under eligible plant and machinery criteria. ITC allowed or blocked? ITC is blocked. Works contract services for construction of immobile property that fulfills criteria of capitalization, and that immobile property is in the nature of eligible plant and machinery. ITC is allowed or blocked? ITC is allowed. You are receiving works contract services in relation to immobile property which does not fulfill the capitalization criteria, which is treated as revenue expenditure. Blocked or allowed? Allowed. If works contract services are received by another works contractor who is providing the works contract services to somebody else, then also ITC will be allowed. That's all. Now, one most important thing which we need to understand here is what will fall under eligible plant and machinery definition. What will fall under eligible plant and machinery definition? Because I was telling that if you are constructing immobile property and if that falls under eligible plant and machinery, then you can enjoy ITC. So it becomes necessary for us to know what will fall under eligible plant and machinery, what will not fall under eligible plant and machinery. So what will fall under plant and machinery is apparatus, equipments, machinery fixed to the earth by foundation or structural supports for outward supply of the goods or services. So basically whatever apparatus, equipment, machinery fixed to the earth, foundation, structural supports, everything will come under capital plant and machinery. Like this structures, this apparatus will come, even this foundation also will come under plant and machinery definition. They have fixed this with the help of some foundation and structure. No, so even this also will come under plant and machinery. This foundation also will come under plant and machinery. This apparatus also will come under plant and machinery. But however, some things are not included in the plant and machinery definition. So what will not come under plant and machinery? Land will never be considered as plant and machinery. Building will not be considered as plant and machinery. Civil structures also will not be considered as plant and machinery. Say for example, if this plant and machinery, I want to keep it inside a roof. So this plant and machinery, this is in the open space, no? Now I want to keep this plant and machinery in one civil structure. I want to construct a wall, construct a roof. Inside that I want to fix it. See, now this will become plant and machinery, but the civil structure, this walls, roof and all, that will not come under plant and machinery definition. Next one. Even telecommunication towers. These telecom companies will install the telecommunication towers. No, they also will never be considered as plant and machinery. That means on that ITC you will not get. And similarly, pipelines laid outside the factory premises. Whatever pipelines that are getting laid outside the factory premises, that also will not come under plant and machinery definition. So what do you mean by this? What do you mean by pipeline laid outside the factory? Say for example, ONGC is having their factory. So they have their factory here. Okay. So now inside the factory, they will do the refining activity and all. Now whatever oil that is getting refined, that has to go and get stored in some containers outside of the factory. They will keep some big containers where they will store all this processed or refined oils and all. So now what they are doing is, from the factory they have to lay down the pipeline. No, from that factory they have to lay down the pipeline whereby the refined oil will go from the factory and it will go and get stored in the container. So now this pipeline they have to lay. One day this contract was given to one person. They told, boss, you lay the pipeline for us. You lay the pipeline for us. Now this person told, okay, whatever pipes and all are required, that also I will supply. Even I will only install all that pipeline also. So he told for the purpose of that he need 50 lakh rupees. Is that a works contract? Yes, that is also a works contract in relation to immovable property, where the goods are also getting supplied, services are also getting supplied. So he agreed for 9 lakh rupees of GST, also total 59 lakh rupees worth of amount he is charging. Now this company is receiving the works contract services in relation to construction of an immovable property. Now you tell me whether this immovable property will qualify as plant and machinery. Whether this pipeline outside of the factory, will that be qualified as plant and machinery? The answer is no. Why? Because in the definition they have strictly excluded pipelines laid outside the factory premises. They will not fall under plant and machinery definition. So this is a works contract services in relation to immovable property, not falling under plant and machinery definition. On that they can't enjoy the input tax credit. ITC will not be allowed for them. Clear everyone? Right. So tell me what will be included in the plant and machinery definition. What will fall under eligible plant and machinery definition? Apparatus will come, equipment will come, machinery will come, and even machinery fixed to earth, the foundation or structural supports. But what will not get included in the plant and machinery definition? Land will not get included, buildings will not get included, civil structures will not get included, telecommunication towers will not get included, and even pipelines laid outside of the factory also will not get included in the plant and machinery definition. Understood? Right. So this is what the works contract services, when it will become eligible, when it will not become eligible for input tax credit. Now some people have started thinking innovatively. So as I've already told, whenever we have a provision, people interpret it with a different notion. So how we can overcome that? That thought will always be there in the minds of the people. So they will think of innovative ways how they can overcome that restriction. So what some people started doing is, say for example, Reliance Industries Limited, they want to construct one factory. As we all know, if this contract is given, if the contract is given to a works contractor who will agree to construct this factory for us, can they claim input tax credit? Reliance company cannot claim input tax credit. So what they want to do is, they don't want to give it as a works contract. They want to do the self construction of their immovable property. What do you mean by self construction? So what they will do is, whatever goods they require, they will purchase. So whatever cement they require, whatever sand they require, steel and all, they will purchase. So they are buying the goods and they will receive the services. So they will find one labor contractor who will provide the labor to them. So they will appoint the labor, and under their administration they will construct this building. So they are buying the goods separately, whatever they require, and they are receiving the services separately. That means they are doing the construction on their own. They did not give it as a contract to another person. Now you tell me, on that can they claim input tax credit? They gave restriction only on works contract, no? So what do you mean by works contract? If under a single supply you are getting the goods also, you are getting the services also in relation to immovable property, that will fall under works contract. On that works contract, ITC will be blocked. But what some companies started doing, they stopped offering that works contract to others. They started constructing on their own. They received the goods separately, they received the services separately, and they did the construction of their own immovable properties. Then that will not get covered under 17 subsection 3 clause C, no? It will not get covered under works contractor. So on that goods, whatever they have purchased, they can enjoy ITC. On the services, whatever they have received, they can enjoy ITC. So, but this is nothing but overriding or not. So what the government has told us, government has brought one more provision. We will not give input tax rate even on this also. We will not give input tax rate even if you do the construction on your own account also, we will not give you input tax credit. Either you give it as a works contract to others, or either you are doing the self construction of your immovable property whereby you are receiving the goods separately, you are receiving the services separately. On that also we will not give you input tax credit. But however, here also same relaxations are there. Say for example, some companies that they want to fix the ceiling. To fix that ceiling, they don't want to give the works contract. To fix the ceiling, whatever goods they require, they are procuring. Whatever services they require, they are procuring. So can they enjoy input tax credit on that? Yes. Why? Because that will not qualify as a capital expenditure. That will qualify as a revenue expenditure. So if you are buying some goods, if you are buying some services for fixing some immovable property, but that will not qualify as capital expenditure, that will qualify as a revenue expenditure, then you can enjoy input tax credit. Similarly, if some company wants to do self construction of their immovable property, which will qualify as eligible plant and machinery, then also they can enjoy input tax credit. Why? Because if you get the works contract services in relation to construction of an eligible plant and machinery, anyhow you are getting input tax credit. Similarly, if you don't want to give it as a works contract, if you want to do the construction on your own, then also they will give you input tax credit. Clear? Able to understand? Next one. One more case also they have given relaxation where construction of immobile property you can get input tax credit. Say for example, there is Reliance Industries Limited. They want to construct a building. Okay, so they have given that as a works contract. So they came to one person, they came to one contractor. Now they have given the contract to this person to construct this building. Amount is 1 CR, 0.18 CR is the GST. So now you tell me, can the Reliance claim the input tax credit? Can the Reliance claim the input tax credit? No. Why? Because it is a works contract service in relation to construction of an immobile property. Now this builder, this contractor, they have to construct this building for them. No. Building for whom? Building for client. This contractor, they have to construct the building for Reliance. For the construction of that building, they are buying the goods. Contractor has to purchase all the goods. No. In order to construct that building, he has to purchase cement, sand, steel and all. And also he has to receive services. So this person is buying the goods or buying the services in relation to construction of an immobile property, not on his own account. Why he is buying the goods and services? For constructing an immobile property for others. Basically same line of business you can say. You are receiving the goods and services for providing works contract services to others. Can this person enjoy input tax credit? Yes, this person can enjoy input tax credit. So if you are buying the goods separately, if you are buying the services separately for construction of immobile property, but not on your own account, but for others you are doing the construction, then you can enjoy input tax credit. Able to understand? So one more extension I will tell you. Say for example, there is one builder. There is one builder. This builder is buying all the goods which is required for construction of an immobile property. This builder is also receiving services for construction of immobile property. So why he is buying that goods and services is because this builder wants to have his own office. He wants to construct his own office. For constructing his own office, he has received the goods, he has purchased the services, and his own office he is constructing. Can he enjoy input tax credit? No, he can't enjoy the input tax credit. Able to understand? So when you are buying the goods, when you are buying the services for construction of immobile property for others, not on your own account, you can enjoy ITC. On the other hand, if you are buying the goods, if you are buying the services for the construction of an immobile property on your own account, for your own office, for your own premises, then you can't enjoy input tax credit. Clear? Same guys, like works contract only, but there they say works contract, here they say self construction. The things are same. So GST will be restricted when the expenses qualify as capitalization in the books of accounts. But even though the expense is qualifying as capitalization, but if it is a eligible plant and machinery, then you can enjoy input tax credit. If you are doing some construction of immobile property on your own, but that will not qualify as revenue expenditure in the books of accounts, then also you can enjoy that will not qualify as capital expenditure in the books of accounts, then also you can enjoy input tax credit. Or you are receiving the goods, you are receiving the services for construction of immobile property not on your own account, for others you are doing construction, then also you can enjoy input tax credit. Understood? Right. So this is what they try to say here. So self construction of immobile property also we have covered. 17 subsection 3, 17 subsection 5, clause D also we have covered. Understood? Next. Now there is one circular has come. What one circular has come is clarification on ITC on ducts and manholes used in the network of optical fiber cables in terms of 17 subsection 5. So what do you mean by this ducts and cables is, say for example, these telecom companies, they will do, no, if they want to provide the connection, if they want to provide landline connection or Wi-Fi connection in one area, what they will do? They have to bring the pipelines, they have to bring the connections beneath the ground, beneath the earth, they have to have that pipelines and all. So say for example, Reliance Industries Limited is there, they want to provide a Wi-Fi connection or landline services in one area. Before they can provide that services, say for example, one locality is there. So in that locality, what they have to do? First, they have to dig the holes and they have to keep that big things and all they have to keep. And inside that pipelines, below the ground, they have to fix the pipelines, and through that wiring they have to do. So what this telecommunication company, this Reliance Industries Limited, this Reliance Jio, what they have done is they have given works contract for fixing that manholes, for fixing that pipelines below the ground. They have given that as a works contract to one of the person. So one person is there. To that person, this company has given a contract. What they have to do is they have to dig that below the ground, that pipelines and all, and also they have to fix all that wires and all. So this person will provide all the goods, that pipelines, whatever is required, and that fixation, everything he will do. So he will provide the goods, he will provide the services, everything he will do with regard to that manholes and pipelines. So now doubt which has come here is whether on these telecom companies, whatever works contract the service is providing for fixing that manholes and wires and all, on that, say for example, he told he will do that for 50 lakh rupees. GST he told 9 lakh rupees, total 59 lakh rupees. On this amount, whether this telecommunication companies, can they avail the input tax credit? Can they avail input tax credit? This they will definitely capitalize in their books of accounts only. Works contract services in relation to immovable property, but here we need to check what, whether it will qualify as a eligible plant and machinery or not. That is what the question before the department. I think I should show you. I will show you once what is that OFS and all will look like. Just give me 1 minute. This one here. So like this, they will dig the holes and fix the pipelines and all, no, before they can provide the connection and all in a area, in a residential area, they will do these kind of things. So like this, they will dig the holes, they will do the wiring and all. So this is what we call it as that OFS services and all. So someone has agreed to provide that services to the company. So now whether they can claim ITC, whether they can claim ITC or not, it depends on whether that things will fall under eligible plant and machinery or not. That was a doubt which has gone to the department. So what do you think? What do you think? So what the department has told us, just look at the definition of plant and machinery. We have excluded some things from plant and machinery. Whatever we have excluded, in that did we mention this one? In that did we mention this manholes, pipelines will not come under? I told pipelines laid outside of the factory and all I have told, but this is not something outside of the factory and all, no. So they told in the plant and machinery definition, we have given exclusion. In the exclusion, did we mention this? We did not mention. So that means this will also qualify as a eligible plant and machinery. So on that you can avail input tax credit. That's what the clarification which has been given. So if we read it here, yes. So if I just take you through this one, ducts and manholes are not excluded from the definition of plant and machinery, as they are not in the nature of land, building or civil structure. They are also not telecommunication towers or pipelines laid outside of the factory. So ducts and manholes will qualify as eligible plant and machinery, and on that ITC they can happily claim it. There will not be any restriction. Understood? Right. So with this we have completed 17 subsection 5, not completely. So clause C, clause D we have done. There are few more cases in which ITC will be blocked. These are all simple things, we already are aware of it. So inward supplies charge it to tax under composition levy. As we all know, if you are buying the goods from a composition dealer, can you claim ITC on that? He will pay that 1%, 5%, 6%, he will pay, no. Whatever he has paid, that can you avail it as input tax credit? No. Why? Because composition dealer can't pass on the credit. Composition dealer can't avail the input tax credit. He will break the input tax credit chain actually. Understood? Next. So this we already know. Inward supplies charged to tax under composition levy. On that you can't claim ITC. Similarly, inward supplies received by NRTP, even NRTP also can't claim the input tax credit on goods and services whatever he has procured. So what do you mean by NRTP, guys? Non-resident who doesn't have a place of business in India, he comes to India, participate in some exhibition and sell some goods and go back. We all know NRTP requires compulsory registration. So now say for example, NRTP has come to India, one expo is happening, he came to that expo, he wants to supply some goods or services in that expo. For the purpose of supplying that goods and services, he procured some goods and service from within India. And on that he paid GST also. But the GST department told, if you are an NRTP, whatever goods and services you have procured within India, on that we will not give you GST. Similarly, if you are importing any services only, just let me cross check once. If you are importing services, for the purpose of making that taxable supplies in India, if you are importing some services, on that importing of services also you will pay GST, but on that also we will not allow you the input tax credit. But in case if you have imported any goods, on that if you have paid any GST, on the importing of goods only we will allow ITC. For a NRTP, goods and services procured within India, ITC will not be allowed. If he has imported any services in India, for that also ITC will not be allowed. Only on one item ITC will be allowed. What is that? GST, IGST paid on import of the goods. On that only he can claim input tax credit. Remaining on all others, ITC will be blocked. Next. Inward supplies used or intended to be used for CSR activities. Very simple. Say for example, some company is there. some ex-limited companies are, as we all know, under section 135 of the Companies Act, if some companies fulfill certain criteria, they're required to spend 2% of their average net profits on the corporate social responsibility. So this company has exceeded that, has fallen under that criteria. They are required to spend 2% of their expenditure on 2% of their profit on social welfare. So now what this company has done is they have procured notebooks out of that CSR expenditure. They want to distribute, no, so they want to distribute notebooks. So they purchased some 50 lakhs worth of notebooks. On that they have paid 9 lakh rupees of GST. Now these notebooks, they want to use it, they want to distribute it as a part of their CSR expenditure. Can they claim ITC on that? No, they can't claim ITC. So whatever goods and services you have procured for the purpose of fulfilling your CSR activities, on that you can't enjoy input tax credit. Next one, input supplies used for personal consumption. If you are buying any input goods or input services for your personal consumption, either for your personal consumption or for your employees' personal consumption or for your director's personal consumption, if something is getting used for personal consumption, on that you can't enjoy input tax credit. Next one, free samples, gifts or goods lost or stolen. If you purchased some goods but you are giving it as free samples, you are giving it as free samples. So simple logic, guys. If you have procured some goods, if there is an outward supply, if there is output tax liability on that goods or services, input tax credit will be allowed. If you purchased some goods but you are doing something because of which output tax liability is not coming, even on that input tax rate also will not be allowed. So you have purchased a goods but you are giving it as a free sample, you are giving it as a gift, you are giving, either that goods are lost, either that goods are stolen, or that goods are destroyed. That means if there is no output tax liability, automatically there will not be any input tax credit also. So ITC will be blocked in case of goods given as free samples, in case goods given as gifts, in case goods are lost, ITC is lost, in case goods are stolen, ITC will be gone, in case goods are destroyed, even ITC also will be destroyed. Next. What is this? Right, a few circulars are there, so that's it. This we will see. Tax paid in fraud cases, detention cases, confiscation cases. This I think somewhere we have already seen, but anyhow I will try to explain. Say for example, supplier and recipient both have colluded with each other. So what they have done is, say for example, supplier is there, he told, he's a small supplier, he's not that 5 CR turnover and all. So this supplier is making supply of goods to the recipient. So as we all know, whenever movement of the goods is happening, tax invoice is required to be given and GST has to be paid on that. Both supplier and recipient agreed that, hey, we will make 1 lakh worth of supply, I will sell you 1 lakh worth of goods. These days GST officers are not checking. These days GST officers are not checking the conveyance and all. Let me do one thing, without giving any tax invoice, without giving anything, I will send you the goods. So anyhow, in the recent times, the GST officers are not coming for inspection. No one will catch us. We will see if someone catches us. So this person has loaded the truck full of goods without tax invoice, without e-way bill, without e-invoice, nothing. He has started the movement of the goods. But his time is very bad. What happened is, on that day only, GST officer was there for inspection. He stopped the vehicle. He find that you are moving the goods without paying GST and all. He seized that vehicle. Now the supplier called the recipient. Hey, we both have mutually agreed, no? So now we are caught. We don't have any other option now. We have to pay the amount of GST. So now what the recipient has done is, since they are caught, he paid the amount of GST. 18,000 rupees of GST he has paid. Now can he take that as input tax credit? Government told, get lost. If you are paying it and we are giving it as input tax credit, where is the punishment for you? Where is the punishment for you? So that's why if you have paid any GST because of committing any fraud, or because your vehicle is confiscated, or because of some other fraudulent activities, you are caught, and that's why you have paid the GST, that GST you can't claim it as input tax credit. Clear? So that is what this thing says. Understood? Right. So we have a few circulars. These circulars we will talk about it later. We will try to do some questions now. Okay? Okay. Right. We have still time, no? Why your energy is gone now only? We have still 25 minutes of time. So then we will break for lunch. So we'll do one thing, we'll solve some questions till now, whatever we have discussed regarding blocked credit. After solving the questions, we'll go for a break. Right. So just give me 1 minute, I'll resume. So let us do some questions now. Come on, it's your responsibility now. Right. So let us come here. Illustration number 2. Guys, please do participate. The more quicker you are in participation, the soon we can break for lunch. Come on, concentrate here. Electrical transformers to be used in the manufacturing process. GST paid on that is 5,20,000. First of all, I will read the question. What is the question? Determine the amount of ITC that can be availed by ABC Company Limited for the month of July by giving necessary explanation for treatment of various items and assume that all conditions are satisfied. So first one, electrical transformers to be used in the manufacturing process. On that they have paid GST of 5,20,000. Can they avail it? Did we find anywhere restriction on this item? No. So they can enjoy ITC. No restriction here. Next, trucks used for transportation of raw material. Allowed or not allowed? Motor vehicle, no. Designed to carry passengers is restricted, but it is for goods. Raw material inputs allowed. Confectionery items. These items were supplied free of cost to the customers in a customer meet organized by company. Goods given as gifts, you can say, or even you can say these are the goods for personal consumption, you can say, or even you can call them as food and beverages. It will fall under these many categories. Even if you apply any interpretation, so you can't enjoy ITC. So remaining three you can enjoy. This last item you can't enjoy the ITC of that. Next, this one. Subject to the information available, assume all other conditions necessary for ITC has been availed. The annual return was filed on 15th of September. So they have given annual return, might be they are testing something regarding the last date for availing input tax credit. So listen carefully. So they want you to calculate ITC for the month of October. Okay, for the month of October, they want you to calculate the amount of ITC available. So first, inputs A, 1 lakh rupees is the amount of GST. One invoice on which GST payable was 10,000 rupees is missing. How much they can avail? Why? Which condition is violated? 16 subsection 2 clause A, tax paying document possession has been missed. So they can enjoy only 90,000 rupees of ITC here. Good. Next, inputs B, 50,000 rupees. Inputs are to be received in 2 lots. First lot is only received in October. Can they claim that ITC in October? No, you have to wait till you get last lot. So you can't claim it in this month. Capital goods, GST paid is 1,20,000. XYZ Limited has capitalized the goods at full invoice value inclusive of GST, as it will avail depreciation on the full invoice value. Can they claim ITC? No, they can't claim. Why? Because they are ready to capitalize it in the books of accounts. Input services, 2,25,000. One invoice was dated 20th of January, on which GST payable was 50,000. It was missing and has been found in October. One invoice relates to 20th of January. See, they did not say any year. Let us assign some year here. So 20th of January 2025, that is when the invoice was related to. But they did not find the invoice. Invoice was missed. So they did not claim it in the month of January. Till what time they can claim? 30th of November following the end of financial year, or date of annual return, whichever is earlier. So what will be the 30th of November? 30th of November 2025. But in the question they have told annual return was filed on 15th of September. So they should have cutoff date is 15th of September. They can claim only till 15th of September. Even though they found the invoice in the month of October, can they claim it? No. So that 50,000 they can't claim. Balance 1,75,000 they can claim it. So 1 lakh this they can claim, and 1,75,000 here they can, 90,000 sorry. In the first case 90,000 and 1,75,000, 2,65,000 they can claim in total. A taxable person is in the business of information technology. He buys a car, maximum seating capacity 5%, for use of his executive directors. Can he avail ITC in respect of that GST? No. Why? It is a motor vehicle having a seating capacity of, designed to carry passengers, seating capacity of less than or equal to 13. So they have to, they should not avail that input tax credit. Next, a technical testing agency. No, this is not the now. This is not now. Just one more minute. Just give me a minute, guys. Sorry. Fine. This is also not. Let us do this. Harshgeet Private Limited, a registered supplier, is engaged in manufacturing of taxable goods. The company provides the following information pertaining to purchases made or services availed by it during the month of July. What is the requirement? Determine the amount of ITC that can be availed by Harshgeet Private Limited for the month of July by giving necessary explanation. Okay. Raw materials which will be received in the month of September. Raw materials which will be received in the month of September. You got invoice, you made the purchase, but you will get the materials in the month of September. I told practically that will not be followed, but for theoretical purposes we have to stick by that rule. You should have received that goods. Since you are going to receive when September, then only you can avail input tax credit. Now can you avail ITC? No. In the month of July you can't avail. Membership of a club availed for employees working in the factory. It is not obligatory to be provided under law. Can they avail? No. Good. Inputs to be received in 5 lots, out of which third lot was received during the month. Total 5 lots. Out of that, third only they have received. When they can claim ITC? Last lot. This also they can't avail. Trucks used for transportation of raw material. Yes. Capital goods, out of 3 items, invoices for 2 items is missing and GST paid on those 2 items is 80,000. Total ITC is 1,50,000, but 2 invoices are missing amounting to 80,000 rupees. How much they can avail? 70,000 they can avail. Good. Next. So they are telling, they are asking us to calculate what is the ITC available for the month of October. So let us see. Raw spices purchase. In that, raw spices which are sold to customers, 50,000 rupees. Can they avail it? They purchased raw spices, but they are used for personal use of directors. Goods used for personal consumption. No. Electrical machinery purchased for being used in the manufacturing process. Can they avail? Yes. A 6-seater motor vehicle used for transportation of employees. No. Nice. Payment made to a contractor for construction of staff quarters. Staff quarters. Construction of staff quarters. Works contract? Yes, it is a works contract. For construction of an immobile property. Staff quarters will never qualify as plant and machinery. Why? Because from the plant and machinery definition they have excluded land and buildings. So that will not qualify as plant and machinery. So this 1,25,000 they can't avail it as input tax credit. So very important guys, you have to write the explanations. If you are writing entire answer correctly, but if you are not writing explanation for each and every point, you will not get the marks. So better go through the answers once carefully. So what kind of explanation they are offering. Presentation is also very important. It will not just be enough if you are so good with your concept. If you are lacking in presentation, then also you will lose the marks. So we have to take both hand in hand. No matter how much conceptual clarity you are having, please make sure that you are presenting it in a proper way. And the only way by which you can learn the presentation is by solving. So you have to solve. You have to see what is the most of the mistake which most of the students will do is they will practice the questions even by looking only. So you have to put it on the piece of paper, at least one MTP, one question paper you pick up and write the answer. If I am sitting in the examination, how I will present the answer, then you will get the reality where you are lacking. You all will feel till that point of time that I am writing correct only, my presentation is super, I can rock this question if it comes in the examination. You will have all that feeling. See, that conceptual clarity will give you that confidence, but when you actually put into the paper, no, you will get to know what and all things you are writing there. So you try to write something, but something else gets conveyed there. So unless and until you put that on the paper, unless and until you try to solve the question on your own and compare it with the suggested answer, you will not get to know your flaws. Okay, so please do write the answers once. Take some question. If this question is given in the examination, how I am going to present this question in the examination, just imagine in that manner and write it. Definitely you will get to know where you are lacking in the presentation. So if you make that changes, nothing is stopping you. So it's my responsibility to make you clear with the concept, but the presentation you have to work it out. I can guide you how you can get that presentation proper, but if you put that efforts, then only your presentation will come clear. Okay, right. Next. Dina Limited, a registered supplier from Maharashtra, is engaged in the manufacturing of passenger autos. The company provides the following details of purchases made or services availed by it during the month of March. Purchase of iron, which is used as raw material. Goods were received in 2 lots, first in March and second in April. When they can claim ITC? April they can claim, but they are asking you to calculate for March. Can they claim it? No. Purchase of accessories which were delivered directly to the dealers of the company on the direction of Dina Limited. They can claim it. So they are purchasing the what? Bill to ship to model. So purchase of accessories which were delivered directly to the dealers of the company on directions of Dina Limited. So bill to ship to model, it will be deemed as if they have received and they can claim it. Next. Only invoice was received. So only invoice was received. Even though if you did not receive the goods, it will be deemed as if you have received it. Purchase of bus seating capacity 15 for the transportation of employees from their residence to the company and back. Allowed. Why? Because it is a motor vehicle having a seating capacity of more than 30. General insurance taken on a car seating capacity 5 used by executives of the company for official purposes. No. In the car ITC is blocked, automatically this also will be blocked. Now let me tell you one more thing. If they are asking something else in the question. This company is having auto. Auto is designed for passengers only, passenger transportation. On the autos, they have taken insurance. Auto is also motor vehicle, no. Having a seating capacity of less than or equal to 30, no. Designed to carry passengers, no. So they have taken general insurance services on autos. Can they avail input tax credit? Passenger, what passenger? Here in this case, here in this case they can take. Read the question carefully. Read the first paragraph. Here they are a manufacturer of passenger autos. Minute details. They did not test, but if at all they tested, you should be careful. So I told you, no, general insurance, servicing, repairs and maintenance for the manufacturers. If they availed that services, then they can avail input tax credit. Okay, so minute details you have to pay a lot of attention, guys. Please be careful. They did not ask it here. Just I thought of in the moment I thought that let me extend this point whether you will be able to answer it correctly or not. See, for the manufacturing, whatever they are doing, say for example, if their autos gets damaged because of a fire accident, inventory insurance only. Inventory insurance only. Fine. Any past examination questions? So these are all relating to utilization. This is all regarding common things only. There is nothing new. Here and there, few points will be there. See, sometimes they will give some extra points to confuse you. Like they say, inputs, they have purchased some inputs for the purpose of trail runs. What do you mean by trail runs? For example, if they have newly installed the plant and machinery, whether that machinery is working or not properly, they will buy some inputs for doing the trial run. On that, can they enjoy ITC? Yes, they can enjoy. There is no restriction. We did not read anywhere on that restriction is there. No. So just they will try to give you extra information to confuse you. Don't get confused here. Okay. So if you want to get to know about these points, whatever questions I did not solve, that you have to do it from your end once. Right. So that's all. So this is what regarding main questions. So remaining questions. So one more section we have to complete. Section number 18 is still pending. That will not take much time. We will wind it up in somewhere around. Yeah, appropriation is also pending, no? Right. So we'll do that in the afternoon session. We have to complete the appropriation part in 17, and then we have to do special circumstances where ITC will be made available, where ITC will be reversed. So that we will complete. After that, we will complete the related questions also. Then what we shall do? E-way bill we will do. E-way bill was pending, no? So small topic. We will pick up the e-way bill and complete it. And after tomorrow morning session, tomorrow morning we will take the place of supply. Today we will do some more exemptions also. Some more exemptions also we'll try to do if the time permits us. So tomorrow's plan will be, we have 2 more days, no? Ignoring today, we have 2 more days. Only 2. Ample of time here. So many we have. 48 hours. We are humans here. I am human basically. I know. I can't dedicate 48 hours. Okay. So tomorrow we'll do place of supply. So where did we stop our discussion in the previous session? I think we have completed blocked credit. So section 17 we have discussed, not completely. Blocked credit related discussion we have completed. So basically we have seen what and all are the different circumstances in which on our inwards, be it goods, sometimes on goods, sometimes on services, sometimes on capital goods, depending on the cases, ITC will be blocked. So what and all are the different circumstances in which ITC will be blocked? So all that we have covered. So along with that related questions also we have solved. So now what we will try to do is we will try to understand apportionment. As I have told, section number 17 talks about 2 aspects. One is apportionment. So in some cases you are required to apportion the credit. In some cases altogether the credit is blocked. So blocked discussion we have completed. Now we have to understand what are the different circumstances in which ITC will be apportioned. So very simple provision. Apportionment is very damn easy for us to understand. Say for example, there is a registered person. Okay, so that person has purchased some goods, or he received some services, or he purchased some capital goods. So whatever goods, services, or capital goods, whatever he has procured, those are going to be exclusively used for business purposes. In that cases, what will happen? Full ITC will be made available to you. If you have procured some goods, if you have procured some services, or you have procured some capital goods, and you are using it completely for business purposes only, then you can enjoy the full ITC, no issue. On the other hand, say for example, you have received some goods, you have received some services, or you have received some capital goods, and your intention is to completely use it for non-business purposes. Your intention is to completely use it for non-business purposes. Then what will happen? Then ITC in respect of that goods is completely blocked. So if you have budget, if you have procured inwards, if you are using it exclusively for business purposes, full ITC you can avail. If you are procuring inwards and if you are using it exclusively for non-business purposes, then also you can avail, then also ITC will be blocked completely. Then also ITC will not be made available to you. But when the problem will arise is, say for example, you are buying some goods, you are buying some services, or you are buying some capital goods, you are using it partially for business purposes and you are using it partially for non-business purposes. You are using partially for business purposes and you are using partially for non-business purposes. So then what will happen? In case if you are using it partially for business purposes and partially for non-business purposes, then you need to determine the proportion of that goods which you have used for business purposes. Only for that proportion you can avail input tax credit. Whatever proportion of the goods you are using it for non-business purposes, that ITC will not be allowed to you. That ITC will not be allowed to you. So you need to determine when you purchase some inwards, if you are using them from collectively for business purposes and for non-business purposes, you need to apportion how much of that goods have been used for business purposes, how much of that portion has been used for non-business purposes, you have to determine. And that portion which you have used it for business purposes, that you can take ITC, and that portion which you have used it for non-business purposes, you can't claim ITC. Sir, but how to divide it, sir? How to determine what is the percentage which we used for business purposes, what is the percentage that we used for non-business purposes, how can we determine it? So how can we determine it? That you need not worry about it. That discussion we are going to have at the CFNL level. Just you need to remember the fact here. Whatever proportion we use it for business, take credit. Whatever proportion you use it for non-business purposes, don't take credit. But on what basis that proportion will be decided? On what basis that percentage will be decided? That is not relevant for CA inter level. Okay, next. Now let us talk about one more case where apportionment will be required. Say for example, you are a registered person. You procured some inwards, be it goods, be it services, or be it capital goods. You procured some inwards and you are using them exclusively for taxable goods. You are using them exclusively for making taxable supply. So whether it could be taxable goods, taxable services, whatever it is, you procured some inwards and you are going to use all that goods or services exclusively for making taxable supplies. In that case, there will be no restriction. You can enjoy full ITC. In case if you are procuring some inwards, be it capital goods, be it normal goods, or be it services, if you are exclusively using for exempt supplies, if you are exclusively using for exempt supplies, in that case full ITC will be not allowed to you. Out of that, full ITC will be not allowed. But however, when the problem will arise is, you are receiving some inwards, be it capital goods, be it normal goods, or be it services, but partially you are using it for taxable purposes and partially you are using it for exempted purposes. Then you need to determine how much proportion of that inwards you are using it for taxable purposes, how much proportion you are using it for exempted purposes, that you have to determine, and whatever proportion that you are using it for taxable purposes, that only you can take it as input tax credit. Whatever you are using it for exempted purposes, on that you can't avail the input tax credit. Clear? But once again, how to determine the proportion, that we need not worry about it here. That is not relevant at the CA inter level. But here one more thing we need to understand. Say for example, you are receiving some inwards, be it goods, be it services, be it capital goods. You are using them for taxable supplies. You are using them for nil rated supplies. And you are also using them for exempted supplies. You are also using them for exempted supplies. So what do you mean by taxable supply? Those supplies which attract a positive rate of GST. When you are making supply, so on that some rate of GST is applicable, you are required to collect that GST. That is a taxable supply. Exempt supply, we know. What is exempt supply? Which is wholly exempted from tax. Now, what is this nil rated supply? Not tax rate is 0. Nil rated supply, if I have to put it in a different way. So this is actually once again at the CFNL related content, but I will tell you now. So nil rated supply means if you are a registered person, if you are making exports, or if you are making supply to SCZ units. Say for example, you are supplying some mobile phones only. You are supplying a mobile phone. Mobile phone attract GST at the rate of 18%. If you sell it to persons who are in India, for example, if I have a mobile store, tomorrow if you come and purchase from me a mobile phone, I will sell it to you and I will collect 18% of GST. But however, if I am supplying the same mobile phone either as an export, I am exporting it out of the country, or I am supplying it to a SEZ unit. So in that case, what will happen is, even though I am supplying the goods which attract a positive rate of GST, but I am not required to pay any GST. GST will not be applicable for me. Why? Because I am making supply to a export or SEZ. So that I call it as a nil rated supplies. Basically exports and SEZ related SEZ supplies, we call them as nil rated supplies. Even though you are making a normal taxable supply, but still GST will not be payable by you. So that we call them as nil rated supply. So conclusion is, even on the nil rated supplies also you will not be paying any amount of GST. Even on the nil rated supplies also you will not pay any GST. Say for example, 1 lakh worth of goods you have purchased, or services, goods, services, or capital goods, whatever it is, on whatever procurement, on your inward supplies, you have a GST of 1 lakh. Now you need to apportion how much of these inwards are used for taxable supplies, how much they are used for nil rated supply, how much percentage it has been used for exempted supplies. Say for example, I used some 50% for taxable purposes, 20% for nil rated supplies, and 30% for exempted supplies. How to determine percentage? Once again, you need not worry about it. Just remember the outcome. How to determine that, not relevant for you. So I have procured some inwards on which I have paid a GST of total 1 lakh rupees, but that inwards I have used it for making taxable supplies, for making nil rated supplies, and also for making exempt supplies. So by using some rules and all, I have determined proportion. For taxable I used 50%, for nil rated I used 20%, for exempted I have used 30%. Now GST also have to apportion in that percentage. So for taxable goods, ITC allocated is 50,000. For nil rated supplies, ITC allocated will be 20,000. For exempted supplies, ITC allocated will be 30,000. Now I can claim input tax credit both with regard to the taxable supply and the nil rated supply. Even on nil rated supplies, even though I am not required to pay any GST on the nil rated supplies, still I need not leave up the ITC whatever is there with regard to that nil rated supplies. So I still can claim ITC with regard to the nil rated supply. Only exempted related supplies, this you should not take it as input tax credit. But whatever ITC that is allocated, that is apportioned to nil rated supplies, also becomes eligible for claiming ITC. Understood? Important. So this point will be important from the examination perspective. Understood? Right. And only one thing which we have to know is, not in a detailed manner, what will fall under nil rated supply, that you have to understand. So what will fall under nil rated supply? Exports and SEZ related supplies will fall under nil rated supplies. On that you need not give back your ITC. You can still claim your ITC on that. So this is what regarding apportionment. That's all. We have completed the section number 17. Apportionment related discussion also we have completed. Now we have to talk about section number 18. So section number 18 talks about some special circumstances where the government will permit you to take the input tax credit also, and section 18 contains some special circumstances where the government will come forward and say and ask you to reverse your input tax credit also. So we are required to understand those circumstances where the government will allow us to, in those special circumstances where the government will allow us to take input tax credit, and also we need to understand those circumstances where the government will ask us to reverse the input tax credit. So first we will try to understand the circumstances where the government will ask us to take the input tax credit. They will allow us to take the input tax credit. So they say here 4 cases. In 4 circumstances the government will allow us to take the input tax credit. So let us try to understand what are that circumstances in which I can take input tax credit. Okay, right. So first case, so I'm going to talk about special circumstances to avail ITC. To avail ITC. Okay, I think I should have already something here. Just give me a minute. I think I should have already prepared some chart or something for this. Right. So 4 special circumstances I have told in which a person will be eligible to take the input tax credit. So first case, if you are a person becoming liable for registration, if you are a person becoming liable for registration. So either you become liable for registration under section number 22 or you become liable for registration under section number 24. So section number 24 talks about those circumstances where you become liable for compulsory registration, whereas section number 22 when your aggregate turnover exceeds the applicable threshold limit. Now say for example, you become liable for registration. You are a person, you became liable for registration. Say for example, you become liable for registration on 1st of January 2025. That is the date you become liable for registration. Within what time you are supposed to make an application for registration? Within 30 days you are supposed to make an application. Say for example, you have already made an application within 30 days. On 5th of January only you submitted an application for registration. Later you will get a registration certificate. No, later you will get a registration certificate. Say for example, somewhere at this point of time on 15th of January 2025 you got your registration certificate. But since you made an application within 30 days, your registration will be effective retrospectively. From which date you have become, from which date your registration will come into force? Your registration will become effective from the date you become liable for registration. On 1st of January itself, I become liable for registration. Now what they say here is, from 1st of January, see, before you become liable for registration, you would have purchased various goods, you would have purchased various services, you would have purchased various capital goods. Would you have taken input tax credit? No. Why we would not have taken? Why? Because we have not yet become liable for registration. We don't have registration, so we did not take any input tax credit. So, but what government says is, in case if you are a person liable for registration, either under section number 22 or section number 24, if you have submitted the application within 30 days, you become within 30 days of becoming liable for registration. In that case, 1 day prior to your effective date of registration. So I became liable for registration on when? 1st of January. 1 day prior to that, it will fall on 31st of December 2024. 1 day prior to that, whatever inputs in the sense what? Goods. Inputs means only goods. So whatever inputs which are there in stock, that is in the form of raw materials. Whatever inputs which are there in the form of semi-finished goods, that is work in progress. Whatever inputs which are there in the form of finished goods, you determine that stock on which date? 1 day prior to you become liable for registration, or 1 day before your registration has come into force. So you need to determine what is the stock of your inputs, either in the form of raw material, either in the form of work in progress, either in the form of finished goods. You determine that stock. On whatever stock you have, on that stock determine whatever is the amount of GST which is available. That entire amount of GST you can take it as input tax credit. That entire amount government will allow you as a input tax credit. So what they actually try to say here is, say for example, you become liable for registration on 1st of January 2025 and your registration has become effective from this date. So 1 day before that, as on 31st of December 2024, say for example, I started my business somewhere around, so on 1st of January I become liable for registration. I started my business on 1st of September 2024. See, from the date I started my business, from the date I have become liable for registration, I might have procured various goods. See, all that goods will not be there in stock. Say for example, I purchased some 10,000 quantity of raw material, but all that will not be there in my stock. I might have already consumed also. So 1 day prior to that, as on 31st of March, December, or as on 31st of December 2024, determine how much stock is there. Say for example, out of that 10,000 quantity, 2,000 quantity is still in the raw material form, and some 1,000 quantity is in the form of semi-finished goods, and some another 500 quantity is in the form of finished goods. Now I need to determine what is the value of this stock on 1 day prior to that date of registration. So I came to know that the stock value is somewhere around some 1 lakh rupees. So on this 1 lakh rupees, what is the amount of GST? At 18% is the applicable rate of GST. So 18,000 rupees of GST is there on the stock 1 day prior to the date I become liable for registration. Now what the government says is, this 18,000 rupees you can claim it as a input tax credit. The moment you got the registration certificate, you can take that GST which is there in respect of the stocks, in respect of the inputs which are there in the stock, or in the form of semi-finished goods, or in the form of finished goods. You can enjoy that ITC. You can claim that ITC. But you have to be very careful. So what they have told is, you can enjoy input tax credit only on inputs which are held in stock, semi-finished goods or finished goods. You can't enjoy input tax credit in respect of the capital goods. 1 day before that registration, even though you have capital goods, you can't enjoy input tax credit in respect of capital goods. You can't enjoy input tax credit in respect of services. Only you can enjoy input tax credit with regard to the goods, that too which are in stock. Clear? Able to understand? Sir, what if I make an application after 30 days? If I submit an application within 30 days of becoming liable for registration, you told I can get this special privilege. I can avail the input tax credit on my stock. What if I submit an application after 30 days, after 30 days of becoming liable for registration? Then what will happen? You will lose the benefit. You will not be able to enjoy the input tax credit. So that's why we told you can even submit an application for registration after 30 days also. But if you do that, you are going to lose various benefits. One such benefit which you will lose is what? You will lose the benefit to claim the input tax credit on the stock of your inputs. Understood? Understood the first case? Now, let us come to the second case. Say for example, you are not liable for registration, either under section number 22, either under section number 24. You are not liable for registration. But you wanted an voluntary registration. Even though you are not liable for registration, you wanted to get yourself voluntary registered. So you will submit an application. On one fine day, you will submit an application that you need a voluntary registration, and GST department, after thorough verification, they will grant you the registration certificate. In case if you have submitted an application for voluntary registration, in case if the department has granted you the registration certificate, from which date your registration will be effective? From the date whenever you got the registration certificate. Here there is no retrospective thing and all. If you want to get your voluntary registration, submit an application. Whenever you submit the application, GST department will grant the registration certificate. So whenever they have granted you the registration certificate, that itself will be effective date. Even in that case also, what the department says is 1 day prior to the effective date of registration. Say for example, you submitted an application for voluntary registration. You are not liable. You voluntarily applied for registration on 1st of January 2025. Department granted you the registration certificate on 15th of January 2025. Your effective date of registration also will be 15th of January only. 1 day prior to that, just 1 day before that. So what will be 1 day before that? 14th of January 2025. On this date also you have to determine stock. That too stock of inputs only, not services, not capital goods, only inputs which are held either in the form of raw materials or in the form of semi-finished goods or in the form of finished goods. That stock you have to determine. On that stock, whatever GST you have paid, that you can take it as a input tax credit. That you can take it as what? Input tax credit. Everyone able to understand? Two cases I have told. Number one, you become liable for registration. You submitted an application within 30 days. 1 day prior to the effective date of registration, whatever stock of inputs are there in the form of raw material, finished goods or work in progress, that you can take it as input tax credit. Now, second case, you are not liable for registration, but you are voluntarily submitting an application for registration. In that case also, 1 day prior to that effective date of registration, whatever stock is there, whatever stock of inputs is there, that too held in the form of raw materials, work in progress, finished goods, that you can take it as input tax credit. In both the cases, you can't avail input tax credit on services. You can't take input tax credit on capital goods. Clear? Next, coming to the third case. Okay. So what does the third case says? Third case says is, you are the person who opted for composition levy, but you want to convert yourself from composition levy to regular scheme. So if I give you a scenario here, say for example, you are a person under composition levy. One fine day you want to opt from composition levy to regular scheme, say today only. So on 10th of April 2025, on this day you are converting. Till this point of time you are a composition dealer. From now you want to become a regular person. So till the time you are under composition scheme, would you have availed the input tax credit? Would you have availed input tax credit? No, you would not have availed the input tax credit. So but now once you become a regular person, what will happen? You have to start collecting the output tax credit, output tax liability, and you should also adjust your input tax credit. So now the moment you become a regular person, you become liable to collect GST and also you become eligible to take input tax credit. In this case also, what the government has told is 1 day prior to that, 1 day before the conversion into that regular scheme. So what is 1 day prior here? On 9th of April 2025. Here also you need to determine the stock of inputs, which is either in the form of raw material, either in the form of work in progress or in the form of finished goods. So that stock you have to determine. On that stock, whatever GST that you have paid, that you can take it as input tax credit. Not just that. In this case, they say one more thing. Even on the capital goods also you can take the input tax credit. 1 day prior to conversion into regular scheme, whatever capital goods are there, that capital goods also you determine, and on that capital goods also, if you have paid any GST, you can claim input tax credit. Here also, if you pay close attention, I did not talk about services. In the first two cases, you can claim input tax credit only on inputs. Now here they are giving one more advantage. If you are converting from composition to regular, so what they are trying to say, you can claim ITC on inputs. Not just that, you can also claim ITC on your capital goods. Okay, but here there is a catch. Say for example, you purchased some 1 lakh worth of plant and machinery. On that, you paid some 10,000 rupees of GST. Okay, so this capital good is there as on 9th of April 2025. Now this 10,000 rupees of GST you can claim, but not fully. You can claim the input tax credit. What you should do is, you should determine when this capital good was purchased. So now this capital good was purchased on, say for example, this capital good is purchased on 1st of September 2024. When it was purchased, 1st of September 2024 it was purchased. Now you have to determine from the date of purchase till this date how many quarters are expired. You need to determine from the date of purchase till this one day prior to conversion into regular scheme, how many quarters are expired. So if you start calculating here, so it was purchased on 1st of September 2024. This is relating to, I told in the GST quarters are always fixed. So this forms part of which quarter? Third quarter. Q3 it will form part. Q3 or Q2 or Q2 only, no? So it will form part of July to September quarter. No, April to June is the first quarter, July to September is the second quarter. So one quarter is over. Even if part of the quarter also will be considered as one. Then it was also used from October to December. 2 quarters are used. Then it is also used from January to March. Third quarter is also completed. And in April, how many days are used? 9. But even part of the quarter also will be considered as full quarter. So from the date of purchase till that one day before you convert into a regular scheme, how many quarters are already over? 4 quarters are over. So now for this 4 quarter, each quarter 5% reduction you have to do. How much? Each quarter 5% reduction. So if you multiply that, how much reduction? 20%. So total GST amount is how much? 10,000. Total ITC on capital goods is how much? 10,000. So on that 10,000, I have to reduce 20%, which will come to 2,000. So balance will be how much? 8,000. So 8,000 rupees of ITC on the capital goods I can avail. 8,000 rupees of ITC on the capital goods I can avail. Guys, able to understand? Clear and comfortable? So third case, if you are getting converted from composition scheme to regular scheme, whatever is the date of conversion, one day before that, determine what stock you are having in the form of inputs, raw material, work in progress or finished goods. Also determine capital goods. Whatever inputs are there, which are there in the stock, full ITC you can claim. Whatever capital goods are there, on that also you can claim ITC, but you have to do reduction. For every quarter or part thereof, 5% reduction you have to do. The balance amount you can claim it as input tax credit. Understood? That is the third case where the government will allow you to take input tax credit. There is one more case. There is, yeah. Or if they capitalize, they can't do anything. If they have capitalized, why? Because any one, no. Either you have to capitalize it or you have to claim it as input tax credit, right? So next, fourth case. One more case where the government will allow you to take the input tax credit is, you are making some supply of the goods. Okay, those goods are actually exempted. Those goods are exempted from taxation. But government recently released a notification and they removed the exemption regarding that goods. Say for example, I am selling mobile phones. These mobile phones are under the exempted category. Just imagine. But the government released a notification and told from 1st of April 2025, the mobile phones will no longer be exempted. They will become taxable. See, just now as I have told, if you are making supply of exempt goods, whatever inputs you purchase for exempt goods, whatever services you use for exempt goods, whatever capital goods you use for exempted goods, on that you would not have taken input tax credit. No, you would not have taken input tax credit. Now your goods are becoming taxable. Going forward, you are required to collect the GST on that supplies. So here also what you should do is one day prior to that conversion. So what will be the one day prior to the conversion? 31st of March 2025. So on this day, you need to determine what is the inputs held in stock in the form of finished goods or in the form of work in progress. That ITC I can enjoy. And even here also, whatever capital goods are there, which are used for exempted goods on which you would not have taken input tax credit. One day before that, you take what capital goods are there. On that also you can take ITC, but here also reduced. How much reduction you have to do? For every quarter or part thereof, 5% of reduction you are supposed to do, and that reduced amount of ITC you can take it. Understood? So 4 special circumstances where the government will allow you to take the input tax credit. What are they? Number 1, new registration. voluntary registration. In the first two cases, you can avail input tax credit only on inputs held in stock. In the next two cases, you are getting converted from composition to regular, exempted to taxable. Then one day prior to that conversion, whatever goods which are there in your stock, whatever inputs which are there in your stock, not just that, even on capital goods, but a reduced percentage of ITC on capital goods, you can avail it. Understood? Clear and comfortable? So that is what they have told here. But there are few more minute things which we need to understand. There are few more specific things which we need to understand. Right. Okay. So what are the specific things which you need to understand is, sir, you are telling I can claim ITC, I can claim ITC on so and so, but how can I claim the ITC, sir? How can I claim the ITC? So how can you claim the ITC is, you have to give an electronic declaration. You have to submit one form. You have to submit one form. See here. So if you want to claim credit in those circumstances from the effective date, like for example, if you are granting the registry, if you are getting the registration, from the date you got the registration certificate, within 30 days, you have to submit one form. Sir, I have this much amount in stock, I have this much amount of capital goods, please give me the input tax credit. If you submit a form, then the government will give you input tax credit. It is not something automatically you will get it. If you want to claim input tax credit in all these special circumstances, what you should do, within 30 days you have to submit an electronic declaration. So one more thing also, they say registered person must file an electronic declaration on the common portal within how many days? 30 days of becoming eligible to avail ITC. The declaration must detail inputs held in stock, inputs in semi-finished goods, inputs on finished goods, and also capital goods. And there is one more condition. In case if you say that on whatever goods which are there in stock, whatever capital goods which are there, after taking that reduction and all, if the amount of ITC which you are claiming is more than 2 lakh rupees, if you are claiming ITC more than 2 lakh rupees in any of these four special circumstances, generally we'll submit a form. Sir, this much stock I have, these many capital goods I have. You will calculate, sir, this much GST is there on stock, this much GST is on capital goods. You will calculate the figure. If that figure of ITC is exceeding how much? 2 lakh rupees. Then just if you submit the statement alone will not be enough. That statement should also be certified by a practicing chartered accountant or a cost accountant. Why? Because the government is suspicious here. If you are claiming more than 2 lakh rupees of ITC, what is the guarantee that is genuine claim? Maybe you don't have that much amount of stock, maybe you really don't have capital goods, so just in order to there is an opportunity you might be claiming an excess amount. So that's why what the government told is, if the amount is more than 2 lakh rupees in any of these four cases, if you are claiming a total ITC of more than 2 lakh rupees, just the statement submission alone will not be enough. That statement should be certified even by a practicing chartered accountant or a practicing cost accountant. Sir, what if I am claiming less than 2 lakh rupees? No certification required, just on the basis of your self-assessment basis you can submit a form, government will give you ITC. Understood? Clear? Shall we proceed further now? Right. Next. And one more thing is there, one more important point I missed out. So what one more thing they say here is, you can claim ITC on inputs, no? I'm not talking about capital goods. In the four circumstances, you can claim ITC on inputs, right? So those inputs which you are claiming, which are there in stock, they should have a invoice date not older than 1 year. One more condition. If you want to claim input tax on these inputs, in the first case also you can claim on inputs, in the second case also you can claim on inputs. In all the four cases you can claim ITC on inputs, nothing but on the goods whatever you have purchased. But there is one more condition, more than 1 year should not have elapsed from the date of invoice of such goods. If I give you one example, if you take this example only, when I became liable for registration, first off, okay, let me do different example, I don't want that to be clumsy. Okay, see, this is the date I became liable for registration. On 1st of January 2025, I became liable for registration. What I will do, one day before, that is as on 31st of December 2024, how much stock is there, I will determine. See, this is the stock which is there on that date, but this stock might have been purchased long ago, no? Say for example, 10,000 quantity of stock is still there when, as on 31st of December. Out of this, 4,000 quantity, I have purchased it on actual purchase of 4,000 quantity has taken whatever is there in stock. Out of that, 4,000 quantity was purchased on 30th of June 2024. And another 4,000 quantity of stock I purchased on 28th of February 2024. The 2,000 quantity of stock which is there, that I have purchased somewhere on 1st of September 2023. 1st of September 2023. I have total 10,000 quantity of stock, but I can claim input tax credit on how much stock? One condition what they have told is 1 year should not have elapsed from the date of invoice, even though they are in stock. But if the date of invoice with regard to that stock is more than 1 year, you can't claim ITC for that. So if you see here, out of the 10,000 quantity, 4,000 quantity was purchased on 30th of June only. That between date of invoice and between that date of conversion, 6 months is there. Can I claim on that 4,000 quantity? Yes. Now coming to this another 4,000 quantity, it was purchased on 28th of February, 10 months only. 10 months only. So on 1st of September 2000, here the date of invoice is more than 1 year. 1 year has elapsed from the date of invoice. So even though I have 10,000 quantity of stock, I will not be able to avail ITC on total 10,000. I will be able to avail ITC only on 8,000 quantity. That 2,000 quantity, even though it is there in the stock, I can't avail it. I can't avail it. But this restriction is not there for capital goods. If the capital goods are purchased even before 1 year also, I can still claim ITC. Why? Because for every quarter they are reducing 5 percentage. No, so that's why no issue. If the capital goods are older than 1 year also, still fine, no issue. You can claim ITC. That reduced ITC you can claim. But inputs 1 year should not, more than 1 year should not have elapsed from the date of invoice in respect to such goods. Understood? In 4 cases it will become applicable in all the 4 cases. Right. Okay, 18 subsection 1 we are done. That is 18 subsection 1 and 2. See, I will explain 18 subsection 4 also. See, 18 subsection 4 talks about what are the special circumstances in which government will ask us to reverse the ITC. We discussed now 4 circumstances where the government will ask us to take the ITC. Now there are going to be some special circumstances where the government will ask us to reverse the ITC. Sir, when the government will ask us to reverse the ITC? Exact opposite of the previous things. So in case if you are converting from composition to regular, what the government told was take the ITC, no problem. In case if you are converting from regular to composition, 1 day prior to that, there also I need to determine how much stock is there in the form of inputs, finished goods, semi-finished goods, how much capital goods are there, so that I have to determine and I have to pay it back to the government. I have to pay it back to the government. Similarly, if I am converting from exempted to taxable, if I am converting from taxable to exempt, exempt to taxable we have already covered, no? Yeah, this one. These are the circumstances where the government will come and ask me to reverse it. So in case if I am getting converting from regular scheme to composition scheme, or if I am getting converting from, if my supply is getting converted from taxable supply to exempt supply, so 1 day prior to that, there also I need to determine what is the inputs which are held in stock, semi-finished goods or finished goods, and what is the input which is held in my what is the capital goods I'm having. I need to determine on that whatever GST is there, that GST I have to pay it back. If ITC balance is there, I have to reverse it. If ITC balance is not there, I have to deposit the cash in my electronic credit ledger. If balance is there, that just I will reverse. If I don't have enough of balance on my electronic credit ledger, what I should do? I have to deposit the cash and pay that amount. Okay. So not just that, even when your registration is getting cancelled, not just in the 2 circumstances where you are getting converted from regular to composition or taxable to exempt. In case if your registration is getting cancelled, if you are cancelling your registration, either you are closing your business, either you are no longer liable for registration, or either you are opting out of your voluntary registration. In case if you are cancelling your registration, from the date of cancellation, 1 day prior to that, whatever stock which is there in the form of inputs, finished goods, raw material goods, whatever capital goods are there, even at the time when they are allowing the credit, they are allowing credit only on inputs. But when they are asking the payment from us, there they will ask us to pay back even GST on capital goods also. So if the registration is getting cancelled, or if the supply is getting converted from taxable to exempt, or if it is getting converted from, or I am converting from regular to composition dealer, 1 day prior to that effective date, I need to determine what inputs are there in my stock, in my finished goods, in my work in progress, and my capital goods. On that, whatever GST is there, that I have to pay it back. Now here also capital goods, when it comes to payment, when it comes to availing of input tax credit, they are asking me to take reduced input tax credit. They're asking me to take what? Reduced ITC, 5% per quarter, no? Now when I have to pay it back, if the government is asking me to pay back, then if they ask full payment, full ITC payment, that is injustice or not? So even when the government is asking me to pay me back, then also they should ask me to pay reduced ITC only. On the capital goods, they should ask me to pay back reduced ITC. But how to calculate that reduced ITC? Able to understand what I'm trying to say? Let me give you a scenario here. Hey, what, you are feeling sleepy? Huh? Should I make you stand and listen to the class? Huh? That will be a punishment for me then. Okay, let us do one thing. Come on, participate, focus, or else these provisions are very confusing. If you read the book, no, gone case only. You will not be able to understand even a single line without the background discussion. So listen carefully. So there is a person, if you are getting converted from composition to regular person, what the government told here, one day before that, you need to determine what inputs are there in the form of stock, capital goods, that you will determine. And whatever capital goods are there, on that you can take ITC. First we will talk about special circumstance where they will allow us to take the ITC. How much ITC they are asking us to take? Determine what is the total ITC on capital goods, and determine from the date of purchase till the date of conversion how many quarters have passed. For each quarter reduce 5%. Say for example 10,000 rupees is the ITC. Some, as we have done, 4 quarters have passed. 4 into 5%, 20%. If I calculate that, 2,000. They will allow me to take only 8,000 rupees of input tax credit. Okay. Now what is happening is, say for example on one fine day, I am converting from regular person to composition dealer. I am converting from regular person to composition dealer. Now say for example, I am getting converted on 1st of January 2025. Here what the government says, one day prior to that, whatever inputs are there in the form of stock, in the form of raw material, in the form of finished goods, ITC, whatever GST with respect to that stock is there, pay us back. And along with that, they are also asking me to pay back whatever ITC that I have taken on capital goods. But here also they should not ask me full payment. They should ask me reduced payment. So here how to calculate the reduced payment? Here they have given a different rule. For claiming ITC, they asked us to reduce the ITC by 5% per quarter. For reversing the ITC, to calculate the reduced ITC on capital goods, they are giving different formula. So what different formula they have given is, you need to imagine from the total useful life of the capital goods to be 5 years. You need to imagine the total useful life of the capital goods to be how much? Not 5 years, I guess. Just 1 minute. Let me reconfirm. 5 years only. So you have to estimate the useful life as 5 years. Right. Estimate the useful life as 5 years. That means how many months? 5 into 12. 72. 72, no? No. 60 only. Right. So useful life is 60 months. So now I need to determine from the date of purchase till the date of this conversion, how many months have elapsed. Say for example, I purchased this asset on 1st of September 2025 once again. 1st of September 2024. Tell me how many months have elapsed from 1st of September till 31st of December 2025. How many months are elapsed? September, October, November, December. December. 4 months elapsed. So what they are trying to say here is, you have already used for 4 months. So we don't need you to pay GST for that 4 months. We have estimated the useful life to be how much? 60 months. Already useful life, how much you have consumed? 4 months you have consumed. What is the remaining useful life? 60 minus 4, if you do how much? 54. So you calculate the reduced ITC like this. Say for example, you have total 10,000 rupees of ITC on capital goods. 10,000 rupees into remaining useful life 54 by expected useful life. How much? 60. 54 by 60. 56. Sorry. 56 by 60. So you have to calculate this figure. How much will be the figure? Come on, take your calculator. Do it. Lazy fellows here. Louder. Let the boys say. How much here? 9,300. Correct only. 333. So you are required to pay back to the government 9,333 only. So I told two cases. If you want to avail ITC on the capital goods, reduced ITC. How to calculate the reduced ITC? When you are availing, hey, respond. When you are availing ITC, how you have to calculate the reduced ITC on capital goods? 5% per quarter. if you are required to reverse the ITC, how you have to calculate the reduced ITC? ITC into remaining useful life divided by 60. Okay, understood? Shall we proceed further? Here now I told you, no. So if I once again link the provision, if you remember, once again let us go back to supply chapter. In supply chapter we have seen schedule 2. Supply chapter we have seen the schedule 2, no? Have we seen? So what does schedule 2 talk about? Those activities which are neither considered as supply of goods, not even considered as supply of wrong, huh? What is that? That is schedule 3, no? Then what is schedule 2? Whether the activities will be considered as supply of goods or it will be considered as supply of services. In that paragraph number 4 we have seen where they say that in case if you are ceasing to be a taxable person, in case if you are ceasing to be a taxable person, one day prior to that, whatever goods, whatever inputs are there in the form of stock, raw material or finished goods, and whatever capital goods are there, they will be deemed to be supplied. Why do you think they have told that provision? Because now you will question, no, now they are asking you to pay the GST. If you are cancelling your registration one day prior to that, whatever goods are there, whatever stock is there, you have to pay GST. Now you will say, where I have done the supply? GST will be imposed by the government. Where, when I have done supply, you will question, no, supply is not there, I will not pay GST. Now what the government will say? Useless fellow, go and read schedule number 2. We have already included a clause there. If you are ceasing to be a taxable person, one day prior to that, whatever goods are there, whatever inputs are there, whatever capital goods are there, they will be deemed to have been supplied by. They have logged you now here. Yes. So that's why that provision was there. Understood? That's why I told that you will get the clarity when we take up the ITC chapter. Now I hope that you got the connection between the provisions. Clear? Shall we proceed further? Fine. This is how you have to learn the subject. Connectivity is very, very important. Next, we will try to understand 18 subsection 6 now. Sir, what is this 18 subsection 6? 18 subsection 6 says that you purchased a capital good. You are a registered person. You purchased a capital good. On that capital good, you have taken the input tax credit. Later, you are selling that capital good. Later, what you are doing? You are selling that capital goods on which you have taken input tax credit. Now, what the government says is, whenever you are selling the capital goods on which you have taken input tax credit, then also you are required to pay the amount of GST. You are not closing your registration. You are still continuing your registration. Say for example, so you are a registered person. You purchased one plant and machinery. For some 10 lakh rupees, you purchased a plant and machinery. On that, you have paid 1,80,000 rupees of GST. So what you will do? You will claim input tax credit. Now later, after certain years of usage, you will be required, you want to sell the plant and machinery, you know. So on one fine day, you are selling the plant and machinery. On one fine day, you are selling the plant and machinery. Now the government says that whenever you sell any capital goods on which you have availed input tax credit, you have to pay the GST even on that transaction also. What is the amount of GST I am required to pay? What is the amount of GST I am required to pay? The government gives you two options. Higher of, they will say higher of. You need to determine two figures. Whichever is higher out of that, that amount of GST you are required to pay. So what is that figure? One is either the GST which is payable on transaction value. GST which is payable on transaction value. Say for example, this plant and machinery is getting sold for 2 lakh rupees. After certain years of wear and tear, it is getting sold for 2 lakh rupees. On this goods, on this plant and machinery, applicable rate of GST is 18%. If you calculate how much it will come, 36,000. GST on the transaction value is how much? 36,000. Or reduced ITC. Or what? Reduced ITC. Sir, how to calculate that reduced ITC? They say how to calculate that reduced ITC is from the date of purchase till the date of selling. You have to determine how much usage you have done. For every quarter or part thereof, 5% you have to reduce. At different places for reduced ITC, different provisions they have given. So all brain ka khichdi will happen here. I will give you summary. I will give you one table, but listen carefully. So if you are selling capital goods, you have to pay the amount of GST on that sale also. But what will be the GST you will be required to pay? Higher of two figures. What is that? One is GST which is applicable on transaction value, or reduced ITC. How to calculate the reduced ITC? 5% per quarter or part thereof from the date of purchase. Say for example, from the date of purchase till the date of this sale, some for 10 quarters I have used. For 10 quarters I have used. So what is the total GST I have availed? 1,80,000. So I have to do reduced ITC. For every quarter I have used 5%. How many quarters I have used? 10 years. So 10 into 5%, which means how much? 50% reduction I have to do. If I do 50% reduction, it will come to 90,000. So balance is 90,000. So 90,000 rupees or 36,000 rupees, whichever is higher. Which one is higher? 90,000. This much amount of GST I am required to pay. If the ITC, if the balance is there in the electronic credit ledger, I will reverse it. If the balance is not there in the electronic credit ledger, I have to deposit and pay it. Okay, understood. Shall we make one table how to calculate the reduced ITC, in which circumstance what formula has to be used? Right, so let us do it. Scenario, reduced ITC. 18 subsection 1. 18 subsection 1 talks about availing of ITC. If you want to avail the input tax credit as per 18 subsection 1, in the special circumstances, if you want to avail the ITC, how you have to calculate that amount of ITC which you have to avail is 5% per quarter or part thereof. Next, 18 subsection 4, reversal of ITC. In case of reversal of ITC, how to calculate the reduced ITC? ITC availed into balance useful life, in months, divided by 60. Next, 18 subsection 6, sale of capital goods on which ITC is availed. Then also you are required to pay back the GST. How to calculate the reduced ITC? Once again, 5% per quarter or part thereof. Shall we proceed? Still writing? Do it. Okay, so let us proceed now. Okay, so we have completed 18 subsection 6 also. Few more things. Transfer of ITC on account of change in constitution of a registered person. So very simply, say for example, one sole proprietor has expired. A person is a registered person, his sole proprietor has expired. Now his business is getting carried on by his legal representatives. As we all know, in that circumstances, those legal representatives are required to take fresh registration. Old registration will be cancelled. Sir, what about the ITC lying in the old registration, sir? Will it just like that go waste? No, it need not go waste. What the legal representatives can do is they can submit an application. So form number GST ITC 02, that application they can submit. In that case, the ITC will be transferred from the old form to new registration. Similarly, unutilized ITC in the electronic credit ledger can be transferred to a new entity in the case of sale. If you are transferring your entity as a going concern, even when you are transferring the entity as a going concern, the ITC can be transferred to the another entity. In case of merger, if two entities are getting merged into one single entity, whatever ITC that is lying there before the merger, that ITC also can be transferred to that merged entity by submitting one form, GST ITC 02 form they have to submit. In case of demerger, if one single entity is getting divided into two entities, XY Limited a company is there, it is getting divided into X Limited and Y Limited. So whatever ITC is there in the name of this XY Limited, that can be transferred to resulting companies Y Limited and X Limited and Y Limited. But you will get a doubt, how to divide it? How to divide that ITC? They say in the ratio of their assets. In the ratio of the assets of X Limited and Y Limited, you can divide the ITC and transfer the ITC to the demerged entities. Same in the case of amalgamation, lease, transfer, or change in the business ownership, provided there is a specific provision for transfer of liabilities. That means when the entity is getting transferred as a going concern. So when we say entity is getting transferred as a going concern, when assets along with liabilities are transferred, then only we call it as a going concern. When the entity is getting transferred as a going concern, either on because of sale, demerger, amalgamation, or change in ownership, whatever it is, in all the circumstances, the transferor can submit one form GST ITC 02, and that will be shown to the recipient on his common portal. That will be shown to the transferee on his common portal. Once he goes and clicks the accepts there, all the ITC which is lying there will get transferred to his electronic credit ledger. Next. And as I've told, in case of demerger, on what basis ITC will be apportioned? ITC will be apportioned on the basis of value of the assets. So you have to submit one form ITC 02, and in that case you need to compulsorily include a certificate from a practicing chartered accountant or a cost accountant, irrespective of amount which is getting transferred. Irrespective of amount getting transferred. In the previous case of special circumstances, when you are availing ITC, certification of chartered accountant is required only when the amount is more than 2 lakh. But in the case of transfer of ITC, no limit, nothing. When ITC is getting transferred, you need a certificate from a practicing chartered accountant or cost accountant that yes, really liabilities are getting transferred. So regarding that, you need a certification. So once that application has been filed, that will be shown to the transferee on the common portal. If he accepts it, all the amount will get transferred to the input tax credit or electronic credit ledger. Next. Transfer of ITC on obtaining separate registration for multiple places of business within a same state or union territory. So now what is this provision is, say for example, there is a business person, he is having a place of business in Chennai also, he is having a place of business in Madurai also. Can he operate both of them under single registration? Yes. So he is operating both of these entities under single registration only. He did not take multiple registration. So till now he was running business under single registration. Now on one fine day he decided, because of ease in administration and all, he wants to divide. He wants to take separate registration. For Chennai entity he has to take separate registration. For Madurai he wants to take a separate registration. If he wants, will the department grant it? Yes, department will grant it, no issue. And department granted new registration for both the entities. Now whatever GST which is there in the single registration, can that be transferred to these two entities? Now that single entity is getting divided into two entities. No. Can the ITC be also divided? Can the ITC be transferred to that new entities? Yes, they can do it. But in what ratio, sir? Once again, in the ratio of value of the assets, you can transfer it. So that's what they try to say here. The registered person can transfer unutilized ITC either wholly or partly to the newly registered places of business within the same state or union territory. The transfer is based on ratio of value of the assets held at the time of registration. Here also you are required to submit an application within 30 days. If you want to transfer in that manner, you have to submit an application within 30 days from the date of that applying fresh registration. Okay, right. So with this, are we all done? We have a few more provisions regarding how ITC is utilized, and few more restrictions are also there. These things I will try to cover along with the payment of taxes chapter, but two small circulars are missing from explanation. The two circulars also we will try to complete it. This one, ITC in the hands of suppliers in respect of sales promotional schemes. See, say for example, one entity is there, they have purchased some goods with the intention of selling them. But that business, what they are doing is that goods they are distributing it as free samples. That goods they are distributing it as free gifts and all. Now we have read one point. If the goods are getting given as free samples, if the goods are getting given as free gifts and all, in those cases, even ITC with regard to that goods is also not available. But in some cases, what will happen is, as per para number 2, in some cases, even if you are transferring the goods without consideration, still it will be deemed to be supply. Permanent transfer or disposal of a business asset on which ITC has been availed. In case of free samples or gifts, if it is not getting covered as supply anywhere, then ITC will not be available. But in some cases, even though you are giving it as free samples or gifts, sometimes it might be deemed as supply as per 7 subsection 1 clause C, schedule 1. In those cases, you need not give up your ITC. Why? Because even without consideration also it is getting considered as supply. On that anyhow you will pay output GST. In that cases, no need to reverse the ITC. You can continue to claim the input tax credit. Okay. Simple logic. If samples and gifts are not considered as supply, with regard to that goods, you can't enjoy ITC. In case if samples or gifts are also considered as supply as per schedule 1, then you will anyhow have to pay output tax liability. You need not give up your ITC. You can continue to claim the input tax credit. Next one, buy one get one offer. So this is what one more issue is why this circular has come into picture is, see, often we see in the supermarkets and all, they will give something called buy one get one offer. If you buy one shirt, one trouser will be free. So 1+1 shirt offer, they will say. Now what some GST officers started doing is, say for example, some Reliance Trends has only kept a 1+1 offer. They told if you buy one shirt, another shirt will be free. So 1+1 offer they have told. Now what GST officers started doing is, hey, you are giving 1+1 offer, no? So one shirt if they purchase, another shirt you are giving it free of cost. That means one shirt only you have sold, one you have given it as gift without consideration. That means you have given it as a sample or free gift. We will allow input tax credit only on the one shirt. On the another shirt we will not give you input tax credit. On the another shirt we will not give you input tax credit. Now because of this, the people are very seriously offended. These shopping malls and all got very seriously offended. They told, boss, it is not giving one as free. We are giving two at the price of one. We are giving two at the price of one. You can't come and say, hey, there is 1+1 offer. 1+1 offer is there. No, I will not purchase the first one. Another free one is there. No, give me the free one. Will the shop owner give you that free one without purchasing? No. So it is not something which is given as gift. It is something which is getting sold. Two items are getting sold at a single price. So here even GST department also have given the clarification. Dear GST officer, don't harass them. It is not distributing the gifts, giving something as a gift or samples. It is two items getting supplied at a single price. They will become eligible to take the input tax credit. Next, discounts and all, here they say nothing. As we all know, discounts, if you have anything, that will be included in the invoice only. With regard to that discount, are you required to reverse any input tax credit? Not required. With regard to the discount and all, no reversal, nothing is required. These are all over interpretations of that GST officers and all. And when it comes to secondary discounts also, there is no impact. Because of the discounts, there will not be any impact on input tax credit availability. Transaction value itself is getting reduced. So there is no scope of ITC reversal and all in the case of giving discounts. Next, one more issue, ITC reversal when return of time expired goods or drugs are treated as a fresh supply. This is one important circular, very conceptual, very interesting also. Let us try to explore what is this. Oh, already we spent 1 hour. Still we are in ITC only. Fine. Yeah, this chapter deserves that much time. We can't do anything. So what is this? Medicines given as a free supplies and all. Let me give you one scenario. See, we have pharmaceutical companies now. We will have pharmacies also. Give me one pharmaceutical company name, manufacturer. Huh? Cipla. Okay. Cipla Pharmaceuticals. What is the business of that? It will manufacture pharmacy. It will manufacture this tablets and all, medicines and all they manufacture. Now, there is a one retailer. There is one business person who is a retailer of that pharmaceutical products, that medicines and all he will sell. We all know generally medicines have an expiry date. After that expiry date, we can't sell it. Even people should not consume the medicines after the expiry date. So say for example, these pharmaceutical companies, they generally have an arrangement with these medical retailers. If within the expiry date, the goods are not getting sold, within the expiry date, if the goods are not getting sold, they can return it back. To whom they can return it back? To the manufacturing company only they can return it back. Say for example, this Cipla company has supplied some drugs and medicines they have supplied to this retailer. So when they have supplied is on 25th of March 2024, they have supplied the goods and they have given a tax invoice. Say for example, 1 lakh worth of goods have been supplied. On that 1 lakh worth of goods, 18,000 rupees of GST they have charged. Total 1,18,000 rupees of GST has been charged. Now this person, what he will do? He will take input tax credit. On the basis of that 18,000 rupees of input tax credit he will take. So when the supply has taken place, 25th of March 2024. So supply has taken place in the financial year 24-25. Now there is a expiry date. The expiry date for this drugs is 1 year. 1 year is the expiry date. If within 1 year the drugs are not sold, this retailer can give it back to the he can return back the goods to manufacturer. So now what happened is 25th of March 2025 has come. Whatever goods this retailer has received, those were not sold and even expired. Time expired drugs these are. As per the agreement, what this retailer will do? Retailer will return back that goods. Retailer will return back that goods. So when the retailer has given back that goods, what should have happened in case of return of goods? What the supplier should issue? When the customer returned the goods, what document should be issued? Credit note should be issued. Credit note should be issued. Okay. So now when the credit note will be given, when the goods are returned on 25th of March 2025, goods are returned. On this date, this CIPLA has given a credit note. Say for example, on full value, they have given the credit note. So 1 lakh rupees, for that 18,000 rupees of credit note also they have given. So 1 lakh 18,000 worth of credit note they have given. Now what this recipient can do on the basis of one, or what this recipient should do on the basis of that credit note? He can reverse the input tax credit. And also this CIPLA, they have to declare that credit note in their return. No? If they declare that credit note in their return, what the government will do? They will reduce their output tax liability. They will give back that amount of GST. So for ease in understanding, we will say if you declare initially, you might have paid that 18,000 rupees of GST to the government. Now when you are giving back, when you give the credit note, when you declare that credit note can be when you return that when you declare that credit note in the return, the government will give back your GST. You have already paid 18,000, that government will give it back. But here there is a problem. What is the maximum time limit for declaring the credit note? Declaring the credit note in the return. 30th of November following the end of 30th of November following the end of the financial year, or date of filing of annual return of which year? Of the year in which supply was made, or of the year in which credit note was given? Supply. We did one, I told you one example also, no? In case of credit note, in case of debit note, in whichever year debit note has been given. But in the case of credit note, the maximum time limit for declaring the credit note is 30th of November following the end of the relevant financial year of that supply. Not whenever the credit note is given. Whenever the supply has made, 30th of November following the end of that financial year, or date of filing of annual return. Assume date of annual return was filed on 31st of December only. So 30th of November will be earlier. So till 30th of November they can claim. But which 30th of November? 30th of November. Which 30th of November? Following year of supply, that I know. I have given you the dates also. I need the exact year. 30th of November of what? 30th of, okay, let me give you the example also. 30th of November 24 or 30th of November 2025. 30th of November 2024. Why? Because supply has taken place 23-24. Supply has taken place in the year 23-24. 31st of November following the 30th of November following the end of the financial year of that supply will fall on 30th of November 2024. So for this supply, what is the maximum time limit to declare the credit note? 30th of November 2024. But when the credit note was given? 25th of March 2025. Can they declare it? Yes, they can declare it. But will they get back the GST? Government will not give back the GST. Why? Because they have declared it after the time limit. Now what is the option, sir? Now what is the option? Now what is the option is, what these retailers will do is, when they return the goods, they will not return the good when they return the goods, this CIPLA company, what they will do is, boss, you return the goods but don't give a credit note. What you do is, you treat it as a fresh supply. You treat it as a fresh supply. Imagine as if now you are supplying that goods back to us. Why? Because it is a practical obstacle. No, here there is nothing mistake from their side. Practical difficulty. So minimum 1 year drugs expiry date will be there. After 1 year only they will return. But within that 1 year, the time limit for availing the input tax credit, time limit for declaring the credit note will get over. So in that case, the department has given a clarification. In that case, you do one thing. You don't generate the credit note. Ask the retailer to return back the goods as if treating it as a fresh supply. So now what the retailer will do is, when he is returning back the goods, he will not treat it as returns. He will treat it as supply and he will give a tax invoice. On the basis of the tax invoice, this pharmaceutical company can claim input tax credit. Net effect achieved? No. So this is what the government has given a clarification. So you return the goods treating it as a original supply, and they will give the tax invoice. That tax invoice you declare. Tax invoice, there is no limit. No, whenever you get the tax invoice, that you can claim it till you from that tax invoice. Once again, you will have till 30th of November of the next year. No, so no issue. You get the tax invoice. That tax invoice you declare in your returns. Automatically, you can claim the input tax credit. Able to understand? Now one more step. We have to extend a little bit further here. Now what will happen is, in most of the cases, what this pharmaceutical companies will do is, once they have received the time expired goods, what they will do to the time expired goods? They will destroy it. Majority of the cases, they will destroy it. If they can be reused for some other purposes, they can do it. If they are not able to do anything about it, what they will do? They will destroy. Now they purchased the goods, but that goods were destroyed. They have purchased the goods and that goods were destroyed. If the goods are destroyed, ITC is also not available. This ITC, they should not avail it. They have to reverse it back. This they have to give it back. So when return is happening, they will give tax invoice. But after receiving the goods, if you do some processing, if you do something, in most of the cases, what will happen is, some medicines, no, when the expiry date gets over, no, when they go back to the factory, they will change the expiry date and once again supply it in the market. So if that is the case, you need not reverse anything. But in case if you are getting back that time expired goods, and if you are destroying it, what also you should do? Reverse it. Reverse the ITC. Able to understand? Right. So that's what the entire circular is about. See, concept is very simple, but understanding the nature of the business transaction, the background and all, becomes very difficult to interpret. So once we understand the background and all, so that's what you say. That's what even they say here. So written by a registered person who is a non-composition taxpayer. So if the retailer is a registered person, that to a regular registered person, if he is returning the time expired goods to that manufacturing company, what he will do? He will give a tax invoice. So that's what they say here. The registered person can treat the return of the time expired goods as a fresh supply by issuing an invoice. The value shown in the original invoice may be used as the value of return supply. So whatever value is there in the tax invoice, for the same invoice, he will give a fresh invoice. The recipient, that is wholesaler or manufacturer, can avail ITC on the return supply subject to conditions given in section number 16. If all the conditions in section number 16 are fulfilled, they can claim ITC of that. Sir, if this person is a registered person, if the retailer is a registered person, okay, but he is a composition dealer, if he is returning the goods, what he will do? He will return the goods giving a bill of supply. Will he charge any GST? No. On that basis, can the manufacturer reverse any input tax credit? No, nothing will happen there. So that's what they say. The composition taxable return, taxable taxpayer returns the goods by issuing a bill of supply and pays the tax at a composition rate. Out of his own pocket, he will make the payment. And the recipient, that is manufacturer or wholesaler, cannot avail any ITC on the return supply. Sir, what if the retailer is not at all a registered person? What if the retailer is not at all a registered person? If he is returning back the goods, what he will do? He will return back the goods and give some slip. That only he will call it as invoice. Some commercial invoice he will give. He will not give any tax invoice, neither bill of supply he will give, nor tax invoice he will give. He will give some commercial invoice, or in majority of the cases that also they will not give. So, and they will simply return back the goods. So the unregistered person may return the goods using a commercial document without charging any GST. Goods are destroyed by the manufacturer. If the goods are getting destroyed, then what will happen? If the goods are returned as a fresh supply by the retailer or wholesaler or destroyed by the manufacturer must reverse the ITC availed on the return supply under section 17 subsection 5 clause H. And the reversal applies to ITC availed on the return supply, not on the ITC related to manufacturer. This is one more point. Okay, let me extend. Fine. So they say, for example, Cipla company is there. Okay. So they purchased some raw material. Amounting to, they are doing the manufacturing of that drugs and all, no? So they will do the manufacturing of the drugs and medicines. So they have manufactured the drugs and medicines, and those drugs have been supplied to retailer. Say 1 lakh worth of goods are supplied. On that, 18,000 rupees of GST they have charged. Total 1,18,000 rupees of 18,000 rupees they have collected. But for the purpose of manufacturing of that 1 lakh worth of drugs, they need some goods, they need some raw material, they need some services, they need some capital goods. So say, for example, for manufacturing that 1 lakh worth of goods, they have purchased some raw material. Say 93,000 worth of material they have incurred. On that, if I calculate, okay, roughly I will say 16,000 rupees of GST they have paid. Total 1,16,000 amount of GST is there. This what they have done? This they have manufactured. So in the purpose of creating that drugs, they need raw materials and all, no? On all that they have purchased. So basically 90,000 worth of raw material and all they have consumed. They have a GST of 16,000 on that. With that much ITC they have. So they manufactured 1 lakh worth of goods. On that output tax liability, how much they have? 18,000. And for the purpose of manufacturing, they procured inputs. How much ITC they have? 16,000 worth of ITC they have. Now these goods are given to the retailer. Retailer was not able to sell within the time limit. So once the time gets expired, what he will do? Just now as we have seen, he will treat it as a fresh supply and return the goods. So now he will give a tax invoice for the same amount, 1 lakh rupees, 18,000 rupees of GST. Total he will give a tax invoice for 1 lakh 18,000. Now what Cipla company can do? On the basis of this tax invoice, they can take ITC of 18,000. Okay, but these goods are getting destroyed. Cipla company received the goods back and they have to destroy. See, when they are destroying, how much amount of ITC they have to reverse? 16,000 should they reverse or 18,000 should they reverse? 16,000 is the ITC which they used for manufacture, which they got it for manufacturing. This 18,000 they have got it for return supply. Now when they will reverse, which ITC they will reverse? 18,000 only they have to reverse, but some Cipla company, for some manufacturing companies, some pharmaceutical companies started arguing, no, we will reverse this ITC because that will be lower, no. That figure will be generally lower, no. So they started arguing, we will not reverse this fresh ITC. Why? Because that will be a bigger figure. That will be a retail price, no. So they started saying that, no, we will not reverse this ITC. We will reverse the original ITC, whatever we have incurred in the manufacturing of that raw materials. So what the government told, they gave a clarification, don't do overaction, don't do all the extra things and all. So reverse this on the fresh supply, whatever ITC is there, that you reverse it, not the original ITC which is there for the purpose of manufacturing. Understood? Right. So this is once again in that extra clarification we have. That's it. So like this one example they have given, if ITC of rupees 10 was availed during the manufacture of medicines valued at 100 and ITC of 15 was availed on the return as a fresh supply, the manufacturer must reverse 15 rupees, not 10 rupees. That's all. So with this we have successfully completed all the concept in the input tax credit. Let us see some questions. Any questions are left out, we will see that questions and we will wind up the discussion. And after that we will start change in plan, not e-way bill. We will do accounts and records. Why? Because e-way bill once again it will stretch for more than 2 hours and all. So I have to complete a few exemptions. I have something in my mind. What is the page number here? 90, no? One we are done, 2 we are done, 3 also we are done. 4th is pending. 4th is regarding utilization of input tax credit, that we will do later. 1, 2, 3, 4, 5. What is the tax implication? What is the tax implication on supply of capital goods by a registered person who has taken ITC on such capital goods? If you are a registered person, if you have taken input tax credit on the capital goods, later you are supplying such capital goods, what will be the implication? You are required to pay the amount of GST. Either the GST applicable on transaction value or reduced ITC. How to calculate reduced ITC? 5% per quarter or part thereof. I missed one point. I missed one important point. I will tell you. Will not take much time. Just 1 minute clarification. So they told when I am making supply of that capital goods on which I have availed ITC, what I should do? I should reduce it by 5%, no? Yes or no? But however, in one case, I need not calculate that reduced ITC. In one category of capital assets, in one category of capital goods, I need not calculate that reduced ITC. Just if I pay transaction value GST, that will be enough. So what are that kinds of assets? What are that kind of capital goods where if I am supplying, on that I will pay only GST which is there on transaction value. I need not calculate the reduced ITC. So what are that category of capital goods? Those capital goods are this refractory bricks, molds, dies, jigs and fixtures which are supplied as a scrap. Tax may be paid only on transaction value. So if the capital assets fall under these category, refabricatory bricks, molds, dies, jigs and fixtures, In that case, you need not calculate the reduced ITC. Directly whatever GST that is applicable on transaction value, that much if you pay, that will be enough. So what do you mean by this? Why they have given this provision is, they are talking about these kind of assets. This one. So these are nothing but molds and dies. These are also capital assets. Like for example, the company which is into, which they have to manufacture this water bottle. So what they will do for manufacturing this water bottle, they have this kind of shape and all. This die they have. So inside that they will send the plastic and blow it. This shape will come. So this we call it. These are also capital goods only, no. So on this also company will claim ITC. But these are very sensitive capital goods. For example, inside this die, one scratch has come. Inside the die, if one scratch has come, just a small scratch will be enough. You will not be able to get, you will somewhere get the damage on the output. And even if they want to sell it also, they will not be able to sell it at a higher price. These generally go out as a scrap. You will be able to fetch very small value on this kind of assets. So that's why what the government told us, in this kind of assets, you pay what is that nominal value you will be able to fetch on that whatever rate of GST is there, that you multiply and calculate that much amount of GST you pay, that will be enough. We don't want you to calculate all that reduced ITC and all. We don't want to impose any burden on you in respect of these assets. Clear? That's all. This is one small point I have missed out. This one, a registered person transfers its business to another person. Is such a registered person allowed to transfer the unutilized ITC lying in its electronic credit ledger to such transferred business? In case business is getting transferred, can they transfer the ITC also? Yes, they can transfer it. GST ITC 02 they can submit, but there should be compulsorily a certificate of chartered accountant or cost accountant. AB, a registered person, was paying tax under composition scheme up to 30th of July. However, with effect from 31st of July, AB becomes liable to pay tax under regular scheme. Is AB eligible for any ITC? Can he avail ITC? Yes. Yes, he can claim. No, if he's getting converted from composition to regular, one day before whatever inputs are there and capital goods, reduced ITC, he can claim. Babla Enterprises is exclusively engaged in making exempt supply of goods and is thus not registered under GST. On 1st of October, the exemption available on its goods gets withdrawn. On that day, the turnover of Babla X was 45 lakh rupees. Examine the eligibility of Babla Enterprises for availing ITC. Now they are applying for, he is not at all registered, no. Now he is applying for registration. So one day before that, whatever stock is there, on that he can claim the input tax credit. Next one. Mamata trades in exempt goods and provides taxable services. It is registered under GST. On 1st of October, the exemption available to its goods gets withdrawn. Analyze the scenario and determine the eligibility. Is a same question here, theory question. Time waste. Enough. I think no more questions are there. Done. Success. Completed. Fine. So I am closing this ITC things and all. Perfect. So since we have completed ITC, let us proceed further now and try to understand the next chapter. Which chapter we will take up? Accounts and records will try to take up. So we'll take 5 minutes break. Okay. So we'll 10 you want. Okay. So 10 minutes of break we will take. It's 3:50. Sharply at 4 we will start. 2 hours of session after the break, and then we will wind up. Accounts and records at it will take 1 hour. After that, whatever time is available, that we will use it for exemptions. Let us see how many exemptions we can cover today, and balance we'll try to discuss in the next class.